sessions in a row. But there are several stocks that have taken quite a bit of a beating. Only 58 out of 492 stocks have delivered positive returns since the war began, highlighting selective opportunities rather than a broad-based recovery. But amid this, there are a few stocks which reflect solid return potential. These are perhaps stocks that have been beaten down the most. Sharad is joining in to tell you about that list and to tell you what you need to bear in mind. Sharad?
Well, yes, Alex, we have taken a filter of stocks having a 5,000 crore market cap and at least tracked by 5 analysts. And as you mentioned, the stocks which have fallen the most in this war period, but the analysts are very bullish on. And this, of course, includes Birla Corp. Here, the upside is especially there on the premium cement profitability. That's where we are seeing a good amount of revenue potential in the coming time. Sapphire Foods, this is the second stock which should be in your focus. The upside is the SSG growth. That is where the bullishness is coming in. And if you look at Signature Global and Pine Labs, there are important news flows coming in where there is a good upside potential as well. JK Lakshmi Cement price hikes should aid the realization recovery, while 5-star business, there is a certain improvement coming in slippages, and stocks such as EPL, KPIT Tech and even Mrs. Bector's Food make it to the list where the return potential is more than 50%. And lastly, I'd like to add New Age Software as well, where the analysts are very strongly bullish on.
Okay, thank you for that, Sharad. Now, everything that goes down need not necessarily come up. That's maybe only for dead cats. But so, having said that, this report is just highlighting for you what stocks have dipped the most, and then you have to assess if any of them look attractive or interesting to you. Having said that, markets off its highs, actually back up again, 154 points up now above 23,700. It's looking like a strong morning. I want to just pull up the advanced decline ratio because you're seeing this kind of a ratio after a while where you have enough green on the screen. Look at that. That's fantastic. Almost 1:10 on the advanced to decline. But that's all the time we have.
Yeah, the broader markets is the story today, apart from IT. More than 1% gains for both of those gauges, and I hope that continues through the day. I'm going to steal the close today. That brings us to the end of this edition of India Market Open. Stay tuned. Up next is Ask Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Some moments in life are lifelong. Some memories are lifelong. Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on the quality lifelong.
ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. #1 on YouTube. NDTV Network, streaming India's trust. Leading India's conversations.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock-related queries. My name is Puneet Zaveri. With me today is Soumit Sarkar, and over the next hour or so, we'll try and solve all your stock-related queries. So if you haven't already, do start sending them on the number that's flashing on the top of your screen. You can also call us. The landline number is also flashing up there. Before we do all of that and a lot more, quickly a very quick check of how the markets are doing, because the Nifty 50 today shows you, yet again today, that while the implied open did indicate a start in the green of almost 38 to 50 points, and there you saw that variance across time zones, but largely a good day for the markets. Yet again above the 23,700 levels. The heat map also shows you that perspective of key stocks like Eicher Motors, which are up in trade today. At the start of the trading session itself, the stock was the top gainer for the Nifty 50 after the correction from almost 8,000 rupees to 7,000 now. But apart from that as well, tech and IT has been a key outperformer in that sense today. Yesterday was a down and out day for the sector, but Tech Mahindra, HCL Tech, Infosys and TCS, Wipro also focuses. So 5 out of the top 6 gainers is from the IT pack, and M&M is also there up there as well. So continuing to see all those positive moves. Apart from that, the auto pack is also doing well. So you have Tata Motors, PV, Mahindra I spoke about at this point of time, and Eicher, which are also doing well at the start of the trading session. But Coal India, as well as a couple of banking names, NBFC names like Bajaj Finance, are under pressure today. When you look at the sectoral heat map also very quickly, you will see, given what we've seen in the 50 stocks, that resemble in the heat map as well. So the IT pack, media, Nifty Auto, all of them are doing well at this point of time. The metal, the only one, but it's the space that's done well. So we'll give it some leverage at this point of time. The advanced decline ratio also has been very, very strong today. Yesterday we saw the convergence from almost 2:1 to 1:1 and there the volatility. But today, steady state, almost 7:1 in terms of the favor of the advances, and the mid cap and the small cap. Before I introduce our guest for today as well, has been the other key factor, mirroring what we are seeing on the benchmarks today in terms of gains. So almost both of these index up between 1.2 to 1.5%. And in individual mover stocks that are buzzing on the back of a BSE 500 as well, you are seeing MMTC, JBM Auto, Root Mobile, Asahi India. So you're seeing large gains of over 8 to 13% in terms of individual movers. Metro brands also doing well, while the gainers are restricted to 1 to 3%. So it's a good screen today. Let's also pull up Ather Energy as a key stock, buzzing in trade today over the last half an hour or so. Started off decently, and then since then stock has been climbing up to 765 odd levels on this stock as well. Apart from that, also you're seeing a lot of individual movers. We showed you that on the BSE 500, but continue to monitor all of those key aspects. But at this point of the show, let me welcome in Vaishali Parekh, Vice President Technical Research at PL Capital. Vaishali, very good morning. Thanks so much for joining in. Before we take the stock-related queries, a very quick check on the index. Do you think that these levels of 23,600, 23,700 have some, some support at this point of time, or is it very varied between the 23,500 levels, 23,400 levels at this point of time?
having me on the show. So I would say we had seen a decent corrective move coming in, and 22,800 was actually our support levels, and whereby we saw Nifty doing 22,950. So from there on, we are seeing a bounce. I would still consider this as a bounce back. This upward move can go towards our near-term target resistance was 23,700, and today we are comfortable about that. So I think in all likelihood this can go towards 23,900 to 2400. So we would take a step-by-step view. I won't be very confident, but yes, 24,000 would be the next target that I would look at.
Start with the query. The first one coming in from Mohit from Ludhiana. He's holding 200 shares of Container Corp, bought at a price of 512. What would be your view on this, Vaishali? Container Corp?
So yes, Container Corp, we have seen very good corrective move coming in, but 430, 440 should be the bottoming out levels. And I think he can probably average out the stock at these levels, keeping in mind 430, 440. So any day, better to average it out because since he's bought it at higher levels.
Got the view, Vaishali, but the other counter that we're focusing on is also Finolex Cable. Let's look at today's chart. Let's also pull up the year-to-date performance of this counter. It's one of the cheapest counters in that sense, of course, and we'll get to the query in just a bit. Let's look at the chart first. Because it's been as I was mentioning a very the cheapest counter in the cables and wire space. So this year has seen our up move of almost 15%, but valuation is very, very lucrative at this point of time. At a time where we are seeing volatility in the cables and wire space, we've been putting out, had the management of KEI Industries just a few days ago as well in terms of the story we put out. Then in terms of February, there has been some destocking or limited stocking up compared to the month of January, which was very strong. So you are seeing all of those counters in focus as well. And our viewer Keshav from Chennai actually has a query now. He's holding 25 shares of the counter at almost 850 rupees. So very close to the current market levels. His question, Vaishali, largely that if he should continue to hold on for these and a level that you could recommend in terms of a stop loss and a target that you could watch out for in the next few months, or slightly more longer term query.
So I would say the stock has come out of its consolidation range. In fact, this was also our recommendation at lower levels. So I would say this is a regular retracement, what we have seen after doing a high of 960, 970 levels. But having said that, if you want to look at it minutely, then I think 800 should act as a very good support. And I think that would give a new round of momentum. Once we see the stock moving above 1,000 levels, this can perhaps go to even 1,100 to 1,200. So for now, it's a positive view. View gets negated if we see a close below 780.
Well, our first caller query coming in from Vinod from Mumbai. Vinod, you can go ahead and ask your query.
Yeah, in fact, I'm a long-term investor for 5 to 7 years. I just wanted advice on Mahindra and TVS Motor. Should I invest in 2-3 tranches over next week or so for long term?
Okay.
And if you allow me one more question, similar this thing for 3 hotels, Indian Hotel, ITC Hotel, and Lemon Tree.
Okay. Vaishali, any view on M&M or TVS Motor?
So, well, I would say we have seen very good corrective move. But having said that, I don't say that there could not be a possibility of a further downslide coming in. So I would say the levels are definitely attractive. But from here on, every dip, one should buy it in tranches.
When it comes to the hotel sector, Indian Hotel, ITC, Lemon Tree, what would be your top pick here?
Well, I would definitely go for Indian Hotels to start with, and then also Lemon Tree.
Got the view, Vaishali, and thank you so much for that. But the next question that's coming in is coming from Mr. Chandru. Now he's bought into Inox Wind at almost 89 rupees per share. So let's pull up the chart. And he's holding 500 shares of this counter. Now we had the management today. Very, very optimistic to say the least. And I urge you viewers, if you missed that chart in India Market Open, do try to catch it, because there is a lot more drama also in that sense of what Devan Jain of Inox Wind had to address in terms of what's happening with the industry as a whole. But Vaishali, in terms of this particular counter, Ramalingam from Chennai, as I mentioned, is holding shares at 89. Stock's trading at 79 now. Would you recommend averaging down at this point of time? Any view on the stock?
For me, purely on technical parameters, even if I'm looking at the longer term time frame charts, the trend is definitely down. But I would say that if he's really interested, it's in deep oversold. So I would say that, and also there is exhaustion in indicators. So keep a stop loss of 75. And first we start with an expectation of a bounce back. Unless and until the stock moves above 100, it's very hard to say whether it's even going for a reversal. So for now, purely from technical perspective and a bounce back, I would say buy with a stop loss of 75.
Okay. Sunil from Pune is holding 100 shares of Hindustan Copper bought at a price of 490. He wants to know the short-term target on this counter and any stop loss if there. Vaishali, any target and stop loss for Hindustan Copper?
If we are looking at overall full metal index, it has still sustained and it has held on in spite of all the market volatility that one is witnessing. So that signifies the strength of the sector. Talking about Hindustan Copper, after making a high of nearly 750 levels, we've seen a good corrective move. I think 460, 470 is a good support band. One should start accumulating again at these levels to get into a new round of momentum.
Got that view, Vaishali, and thanks so much for that. But the other counter that we're focusing on today is on Hindustan Zinc. Now, let's pull up the year-to-date chart as well as the one-year chart as well. You'll, of course, see a very big outperformance in the last 1 year. But the year-to-date one is also very interesting because from the highs, we have seen correction on this stock. So it's down 12%, but you can see that from the midpoint, it's given up a lot of those gains over the last few weeks. Now, Siva from Amravati has been holding this counter almost 5,000 shares bought at 535. Now his question is that what he should do for the next 6 months on Hindustan Zinc. Vaishali, what would be your recommendation?
The stock has corrected significantly, but it does not damage the trend. So I would say 510, 500 is a good support level. So 6 months is the horizon, one can perhaps add more to see further on strength. But if we see the stock falling below 480, then the strength is lost. So I would say for now, it's definitely a hold. Add on decline at 510 levels if possible, and keep a stop loss of 480.
Next query is from Priti Shah. She is holding 3,500 shares of REC for the last 16 months and she has bought this at a price of 540. Currently sitting on a huge loss. She wants to know the target for the next 6 months and any stop loss that she should maintain on this, Vaishali, REC.
Stop loss, yes. So currently it's at really a make or break level. Even when I'm looking at the weekly chart, it's at a 200 period level. So keep a stop loss of 320 and hold, because I think this stock can give a bounce and go towards 380 levels. So 320 would be the stop loss to continue holding.
Got that view, Vaishali. The next question that's coming in is from Murthy from Vizag. He's holding shares of HPL Electric and he's bought 100 shares of this particular counter at 425. So since then, has seen a meaningful correction from his buying price. Vaishali, his question largely being if you should continue to hold on to this counter or average down at 290, which is the current market price. What would be your recommendation?
Say to average out, but it's better to wait for a confirmation for a reversal, because once you see the support levels being broken, I see why not it would go further lower. So for now, there is a negative bias. Keep a stop loss of 250 to continue holding. And unless and until, I would say add more at 320. So that it will be the level where we see that, yes, the stock is showing signs of bounce back.
Got that view, Vaishali, but time now to deep dive into the BSE F&O market setup as well. And as always, Sharad is joining us to give us some of those cues. Sharad, give us some perspective, because the second, third consecutive day of uptrend, what are you picking up?
Well, thanks a lot for that. And now, importantly, the trend is coming that the bullish sentiment is coming in. And of course, the IT pack is leading here. And Somit largely pointed out yesterday also that there might be a rally up till the numbers coming out. HCL Tech, Tech Mahindra, Infosys, TCS, all of them in the top gainers and all of them more than 3% up. BL, L&T, RIL also holding up in the green. But what's not working is definitely ICICI Bank and even HDFC Bank. That's a little bit of a drag coming in when it comes to the Bank X. But The technical setup of Sensex is really strong right now. With the last 3 trading session, we saw a little bit of gyrations, but now we are seeing it's a convincing trade, and maybe a short-term level bottoming out has been there in the markets. But yes, the support is not coming in from the private banks, and that might be a concern. Let's look at the stocks. Long build-up, it's definitely going to be, Oracle Financial Services comes into the picture. Angel one, after what we saw in BSE and MCX over the last 2 days. Now this is also picking up. Let's look at the short covering. This, of course, includes the IT names. Tata Tech, KPIT Tech, these were really beaten down over the last 2 to 3 odd weeks. So we are seeing a good amount of short covering, and largely all the IT and product companies are there. Long unwinding in JSPL and JSW Steel, and the metals space we are seeing that's the only drag in the markets, and we can see that drag happening in the short build-up for both Hindustan Zinc and Vedanta as well. So yes, IT and metals, that's where the polarization is happening. But the good news is that there's a good value buying happening in the small and mid-cap space.
Thanks so much for that, Sharad. But taking up the next question now, and it's coming from the chemical space on Rossari Biotech. Now, Vijay Kirti from Chennai is actually holding shares at 775. Let's pull up that counter. And he probably bought it at the highs of June and July of 2025 last year, where it was at those levels above 700. And he's holding 50 shares of this counter, Vaishali. And question largely being if you should book out his losses right now, or he can average. He's sitting on a loss of almost 17,000 rupees. What would be your view?
Well, it's continuing to make new lows every day. I mean, again, on technical parameters, it's deeply corrected and deeply oversold. So my view would be to exit on a bounce, maybe around up to 460, 480 levels. So keep a stop loss of 415 and continue holding, because as I said, it's a very deeply oversold stock. One can expect a bounce. That would be the level to watch and have a relook.
Arvind from Pune is holding 200 shares of IDBI Bank at a price of 89. He wants to know whether should he add more or should he continue to hold the shares he has already. Vaishali, any view on IDBI Bank?
Well, everyone is trapped in this stock. I think with a gap down opening, and I think the support comes at 70 levels. That would be the level to average out.
Got the view, Vaishali. But next question coming in, it's on a stock that's doing well today, the Urban Company. Pull up the counter, and Kishore from Hyderabad, who's holding almost 100 shares, bought at 104, must be a happy man today. Stock's up 13% as we speak, and he's asking if he should buy more at this point of time. So he's seen the gains today, asking if he should buy more at this price, and what would be a key level. Now, Vaishali, I know it's a very recent listing in that sense, so very limited historical data, but anything that you can suggest on Urban Company at this point of time?
Definitely. So actually, today is the first such candle with good volume. In fact, we are seeing good volume since 2 days. We have seen a very bullish candle formation. So I think now the stock is coming with an elevation of its support levels at 110. So by keeping 110 as your support levels, and I think the strength will be seen furthermore once we see the stock moving above 130 levels. So in my view, the way today we have seen a formation, it's a positive view, and 110 should be the near-term support to start buying this stock.
Okay. Sunita from Hyderabad is holding Anup Engineering. Currently, she's sitting on a big loss. She had purchased at a price of 2,522. Any stop loss that you would recommend? Should she continue to even hold this counter, Vaishali?
I think the stock is also showing signs of revival. So keep a stop loss of 1,400. And I think gradually the stock can go towards 2,300 levels also. So hold on, but follow the levels.
Got the view, Vaishali. But the other question that's coming in is from Pramod from Bangalore, and this one's on Power Grid. Now, he is actually wanting to enter this counter, Vaishali, at the current market price. Would you suggest if it's a good time to enter the stock now?
Yes, I mean, it looks quite positive, but on broad base, I would say 290 is the support level, and the stock has held on with its upward trend in spite of all the choppiness that market has witnessed in these last few days. So 290 would act as a support. The near-term target would be around 315, 318, and above that, once it sustains, it would be ready for a takeoff for higher targets.
Right. Sunny wants to know, Vaishali, what would be the best price to buy Ethos and Samman Capital?
So Ethos is currently 2095. That's the one we are looking at, right? So just a minute. Yeah, so Ethos has done pretty much its corrective move. I think 1800 acts as a very good support. So we are pretty much close to the support level, so it can be bought at these levels. And the first target that one can look at is 2200. For after that, 24. The main hurdle lies at 2700.
Got that view, Vaishali. But the next question that's coming in, it's on a metal pack, Vaishali, now. And our viewer actually wants to know a fresh entry point. So we've discussed Hindustan Zinc today, but apart from that also Vedanta, Hindustan Copper, anything that's on your radar which investors can look at now from a fresh point of view, and any timeline that you could give, how long can they hold these counters as well?
I would not say so, because as I said, that market is an absolute downward trend. Nifty Metal Index also, if I were to say, it is showing some bit of exhaustion for now. So I would say it's always better. The long-term trend is intact. So I would say continue holding or accumulate these stocks, because of course the long-term picture still looks very promising. But I cannot vouch for the support levels, because if we see one round of selling pressure coming in, so then 11,200 levels can break and this can go towards 10,500, talking about the metal index. So wisdom would be to accumulate. As I said, Hindustan Copper, we are pretty much close to the support levels. Hindustan Zinc, you can see a dip of another 4 to 5%. That would be a level to start buying.
Got that view, Vaishali. But the next question, that's coming in, it's on GMR Airports. Now, pull up the stock, pull up the long-term one-year chart as well. Has been a very interesting one in terms of at least the fundamental side of things, because you've seen debt as a key concern coming down a bit. The airports both have seen a decent occupancy. Stocks up 21%. But Suresh Nair from Hyderabad actually wants to know about his 400 shares that he's holding at 97, Vaishali. Should he continue to hold this counter? Any momentum on the charts?
So I would say keep a stop loss of 90. Long-term chart also is very much intact with 90 as support levels. If 90 level breaks, then you could see a further selling pressure coming in. Till then, there is nothing wrong with the stock. Continue holding and observe the stock on the levels.
Next query is from Sunil Kumar from Bangalore. He's holding Shriram Finance around 9,468 shares, bought at a price of 679. Should he add more at the current levels? Any target if you could suggest, Vaishali?
I'll just have a look. So Shriram Finance, currently you said the price is 1013, and I would say well, the trend is very good and there is nothing to worry for now, and 980 acts as a good support. So yes, you may add more if you want to, and I think if this is held on and the momentum continues, in all likelihood this can go towards the previous high of 1100 levels too.
Time now for a very quick break. Vaishali, stay with us. A lot more stock related queries on the other side. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
Some moments in life are lifelong. Some memories are lifelong. Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on the quality lifelong.
ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. Number 1 on YouTube. NDTV Network, streaming India's trust. Leading India's conversations.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
First India tour in your city. Ragon with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence.
Mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
Welcome back. You're watching Ask Profit right here on NDTV Profit. And viewers, you can also call us for your stock-related queries. The landline number for that is flashing on the top of your screen right now. But, let me also welcome, and at this point of time, Gaurang Shah, Senior Vice President at Geopolitical Investments on the fundamental side. And we have Vaishali Parekh, of course, who has been solving all your stock-related queries over the last half an hour. But Gaurang, good morning. Welcome to the show. Let me pose the next question to you from our viewer, Piyusha Kanodia on KFinTech. Now, she's holding shares at 1,067 and almost 115 shares. What would you recommend Piyusha to do? Is it a good time to continue to hold this counter average down?
Well, thank you, Puneet, for having me on the show. Good morning to all your viewers, to you and to Vaishali. A small disclosure that all recommendations that I'll be sharing with you this morning on your show are a part of our fundamental research team recommendations from a long-term point of view. Our company, Geojit, or myself, we do not have any kind of investments in the recommendations given by, no financial interest, no conflict of interest, but we share recommendations with our clients on similar lines. They might have their investment interest. So, KFinTech, look, we are positive on the sector, Puneet. Unfortunately, we don't have a specific coverage on KFinTech, so I would rather avoid giving any specific recommendations, buy, sell or hold. But let me say this, that the government policies and the incentives that have been lined up for this particular sector looks very encouraging and promising. And the outlook for earnings improvement is absolutely very, very clear. It is a sector which is also impacted by global news flows. But if you have an elevated risk appetite, then I can surely say that this is one of the companies on the fundamental side, on the balance sheet side, it is quite strong. I won't give any specifics because we don't have a coverage.
Next query is from S. Khan and it's on Coforge. He's holding 25 shares, bought at a price of 1,696 rupees. Vaishali, should he continue to hold or exit this counter?
I would say as the IT index is giving a bounce, I think continue holding. You may see this bounce going towards 1200 levels to start with.
Got that view, Vaishali. But the next question that's coming in, it's on CDSL. Now, our viewers holding shares at 1,937 rupees per share. Let's pull up that counter now. And, stocks trading close to 1,200 now. Asif M from Pune is actually asking if he should continue to hold this counter or sell out. Gaurang, any coverage on this stock? What would you recommend?
Puneet, extremely positive on the entire capital market related theme. Again, positive on the sector, Puneet. Very recently, some time back, and let me say this, that, look, there are different kind of companies which cater to the Indian capital market, right? So you have BSE, which is a platform provider. You have services-oriented company like CDSL, NSDL. One company on which we have a coverage is Computer Age Management Services, CAMS. Then you have intermediaries. And along with that, you have a tailwind positive about possibility, Puneet, of NSE coming out with an IPO in the second part of this calendar year, which will augur well. And our view on the Indian capital market is that after this, geopolitical situation and all that cools off, we could possibly see a decent rate of return on the CAGR as far as the indices is concerned. Sector specific, you'll get better return. What I'm trying to say is that if you have invested in a strong fundamental company which is associated with the stock market, you will get the benefit of all that. And this company happens to be a depository service provider. And of course, we know the footfalls that have been increasing every month, every quarter, every year in terms of retail participation. Strong company, strong balance sheet, and potential of performance over a longer period of time. Won't give specifics.
The next query is coming in from Mahindra and it's on DCX system. He's holding 500 shares. Average price is 265. Should he hold, average, exit? Any view on this, Vaishali?
Well, DCX system, we are seeing a good consolidation. There is no clear trend as such. So it's just moving in a range of 160 to around 230. That would be the resistance level. So only unless and until we see a decisive break above or below, could we decide the next trend. So for now, continue holding. Let's have a relook at 230 levels once it goes towards that.
Got that view, Vaishali. But another caller now from Pune, and Vishal has a stock query for us. Vishal, good morning. Welcome to the show. What's your query?
Good morning, sir. I have Piramal Pharma on the rate of 205.
Okay.
So I just want to know what to do. It's in red now.
And did you buy this, Vishal, from a long-term perspective?
No, not actually.
Okay, all right. Vaishali, Piramal Pharma, he's holding 600 shares at 205. What would you recommend to him at 143? What should he do?
So, unfortunately, this stock has really underperformed in the pharma pack. But technical parameters, I would say, continue holding because it's a very, very deep oversold stock. I think it's time for a bounce in this. So one can average out at these levels. But I think Gaurang would be a better person to give a fundamental view on this.
Okay. Okay. The next query is coming in from Navneet from Patiala and it's on Lupin. He's holding 13 shares at an average buying price of 2,272. He wants to know whether should he add more of Lupin. Gaurang, any view on this?
Well, sure. So this happens to be one of the better performing stocks in the recent times. On the fundamental side, we have a positive coverage. And if you are invested in Lupin from a long-term point of view, my advice is to continue hold on from our research department, research team. A good part, Somit, about Lupin is that the negativity in terms of export market and the overshadow of US market news flows, which used to be a concern in terms of underperformance for Lupin, is now in the rear view mirror. And the company has done well in terms of exports. So we have a positive coverage on Lupin.
Gaurang, but Bharti Airtel is also another counter that we are putting our focus on. Sayan from Kolkata holds shares at 1881, which is very close to the current market price, and he's holding 25 shares, Gaurang. asking if we should add more from the long-term perspective. And Gaurang, would you recommend that? Stocks down almost 15% from the highs that we saw at the start of the year. And of course, led by the correction that we see in the broader markets as well. But if it's a good time to add this counter now?
Puneet, according to me, this is the time that you need to bring out your shopping list. Markets have corrected, correct me if I'm wrong, Puneet, from the highest level that we saw of 26,380 or something like that to 23,000 or sub below that yesterday. Now we have recovered. This is the time wherein you need to be a little bit more investment kind of an approach for the market. Bharti Airtel corrected primarily because of the non-core business investment that they were planning to do, or they have given out the news in some NBFC from 2000 levels to close to about 1800 and now a recovery. As a disclosure on Monday itself, day before yesterday, we have given Bharti Airtel as a long-term investment idea on our YouTube channel, Geopolitical Spotlight. We are positive, second largest service provider, cellular service provider. And Puneet, one more positive thing about a cellular service provider company is that it has no close relation with rising crude oil prices. So it seems to be a good level. In case if you want to average, you can do that. If somebody wants to make a fresh investment, I would definitely advise that. We have a positive coverage on Bharti Airtel from our fundamental research team.
Okay. The next query is coming in from Suman from Kolkata. He wants to know whether is it a right time to buy Vari Energies from long-term view. Gaurang, Vari Energies, is it a good time to enter?
Well, a lot of ups and downs post the international news flows and then a little bit of stability. Positive, we have a positive coverage on Vari Energies. And more importantly, Sumit, the entire new power generation capacity that is going to come up and the focus by the government on clean energy. My sense is that companies like Vari Energy, who are into renewable energy, will tend to benefit from a longer period of time. So for long term, hold on and continue to stay invested.
Stay invested in Vari is what Gaurang is recommending at this point of time. But another caller now from Hyderabad. Rao has a stock query for us. Rao, welcome to the show. What's your query?
Yeah, actually I purchased my IDBI bank at 76 in the morning.
This morning you purchased it?
Yeah.
Okay.
Right now it's a downgrade, right?
Right.
Should I hold it until end of the market, or should I stop loss? I want to do a little bit higher.
Got it. So you ventured in for the short term. Got it. Vaishali, definitely a risky bet. And on IDBI Bank, I know you gave up earlier on, but should Rao hold his 900 shares at 76? What would be your view?
So, well, depending on the time horizon that he's ready to hold, I just mentioned 70x as a very crucial support. So, hold if you can hold for that long, or else keep today's low. I mean, exit at 674 if 74 levels break.
Got that view, Vaishali. But viewers, time now for the first round of the rapid fire. A little bit delayed today on Ask Profit, but Gaurang as well as Vaishali, keep your answers on buy, sell and hold so that we can take as many in the next 3 minutes. First question coming in on Telecom India. Gaurang, a view on the stock, and if not on the auto ang space?
Well, auto ang looks quite attractive. And one thing is there that if auto does well, these will do well. Positive on sector, like I mentioned, Uno, Minda, CIE Automotive, and Motherson Sumi are the preferred investment.
Right. Got it.
The next query is on GAIL. He hasn't mentioned his name. So he wants to know whether it's the right time to enter GAIL for the next 1 year, Gaurang.
Exploration companies are benefiting, Sumit, because of the higher crude oil prices, given the inventory benefit, etc.
Right.
We are positive on GAIL from a long-term point of view.
Yes Bank bought at 15.36 Vaishali by a viewer Lalita. She's holding 2,300 shares. What would you recommend?
Hold.
Chaitanya wants to know whether should he buy TCS, Gaurang.
1.5, 2 year plus, definitely yes. I think all the negativity of Anthropic AI is in the past. Right. Buy for long term.
Okay.
Wheels India bought at 722 by Neha. Vaishali, I know we don't discuss this stock too much, but a 2 to 3 month view, what should she do?
You said Wheels?
Wheels India, yes.
Well, I don't track this.
Okay.
Okay, the next query is on Britannia and Hero Moto. The viewer wants to know whether is it a good time to buy for the next 5 years. Gaurang?
Do an SIP. I would advise that because it's a 5-year view. Why deprive yourself of adding it to it? So yes, both we have positive coverage, and make a lump sum investment right now and do a SIP if preferable.
Is it a good time to add Bata is what Rajesh is asking. Would you recommend that, Gaurang?
So this is a bit of a tricky kind of sector, footwear, because of the dumping, etc. that was happening.
Right.
But again, from a long-term point of view, we do have positive coverage on Bata.
Sunil Kumar from Bangalore wants to know whether should he continue holding BEL. He's already holding 32,618 shares bought at a price of 262. Vaishali, any view here?
Definitely hold with a long-term perspective.
REC bought at 380, Vaishali, and Richa wants to know a short-term view on the stock.
Short-term quite corrected, so 330 is the support level. Continue to hold.
Okay, the next query is from Gauri Gupta. She wants to know whether should she buy Vishal Megamart for the next 12 months, Gaurang?
While the IPO was there, we had a coverage. Currently, we don't have coverage, but we are positive on the sector. That is, retail footfall is increasing. Don't give specifics since we don't have coverage.
Loris Labs or Sai Life Sciences, anything that's on your radar, Gaurang, from the long term?
No, none of them are under our coverage, sorry.
Got it. Well, that's the end of the first round of the Rapid Fire in this edition of Fast Profit. But viewers, a very short break. Gaurang as well as Vishali stay on. A lot more stock-related queries on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Some moments in life are lifelong. Some memories are lifelong. Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on the quality lifelong.
हाथ, ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं. ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं. ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं. कैप्री लोन्स फर्ज निभाते हैं.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. Number 1 on YouTube. NDTV Network, streaming India's trust. Leading India's conversations.
First India tour in your city. Ragon with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Welcome back. You're watching Ask Profit right here on NDTV Profit. If you haven't already, do send in your queries on the WhatsApp number on the top of your screen. You can also call us, speak to us on your stock-related queries as well. The landline number is up there as well. The next question coming in is from Mohit. He is looking to enter GAIL from a long-term perspective. Gaurang, largely a little bit better insulated coming because of almost just 16% of his volumes from a Strait of Hormuz, but is it a good time to venture into GAIL at this point of time?
Put it honestly, if you're going to still time the market and wait for the right price and the right time, I think you're going to lose out on the opportunity. I think this correction, what we've seen, gives you tremendous amount of opportunity to accumulate quality stocks. On GAIL, we have a positive coverage. Go ahead and buy it. Don't put all your money at one time. Staggered investment is always a better disciplined manner of investing into stock market.
Right. The next query is from Giridhar. He's bought IX at a price of 260. Currently, it's trading at 122. Obviously, this is because of the negative news that has come in on a market coupling. But Gaurang, what would be your view here? Should he continue to hold this counter or exit completely?
Sumit, first of all, I think I'll advise all your investors and viewers that try to limit your losses, because if you let your capital erode 30, 40, 50, 60% or more, then the big question comes into effect whether you will be able to recover your capital. Forget about making profit on that. Excuse me. And this stock has been a terrible underperformer, Sumit. Even short to medium term traders or investors have burned their fingers. Long-term investors have suffered very badly. We don't cover such stocks, so I won't give any specific. But again, I'll say the same thing. Try to protect your capital and take appropriate steps at remedial time.
That view, and thanks so much for that, Gaurang. But another caller from Andhra Pradesh now, Bharat, has a stock query for us. Bharat, good morning. Welcome to the show. What's your query?
Good morning, sir. I am holding 500 shares of Happiest Minds at the price of 445. So can I hold or average?
And is this a long-term pick, Bharat?
No, sir. 3 to 4 months.
3 to 4 month pick.
I will go to Vaishali, madam.
Got it. Vaishali, on Happiest Minds, of course, there was fundamental news flow of guidance being raised in terms of revenue growth, and hence that big uptick. But do you think it's that move is continuing in the next 3 to 4 months?
I would say technically it is showing signs of revival. Totally on technical parameters, I think continue holding or average out with a support of 360. And I think the stock can go towards 440 to 450 in times to come. And from there on, we can have a reload. So for now, one can average out.
Dira Banu from Vijayawada is holding 10,020 shares of Suzlon, bought at a price of 72.19 rupees. Should hold or sell? Any view on this, Gaurang?
Well, I couldn't get this. Is that 10,000 shares?
10,000 shares bought at a price of 72 rupees. Suzlon.
Well, honestly, Sumit, I hope this was not a short-term trade turned into a long-term trade because of loss. Never expose yourself with such a huge amount of investment or number of shares, because you are exposing yourself to high risk. We have a positive coverage. I would rather dare to say that if she's got investable amount or the investor has got an investable amount, can average over here, because you got in at 71 and the current price at about 40, 41, 42. So you can average small quantity and bring down your cost of acquisition, but we have a positive coverage.
Got it. The next question, that's coming in, it's on Canara Bank, and Arvind from Mumbai is actually asking this question. He holds 2,000 shares, bought at 160 rupees per share. So he's almost in a loss of almost 45,000 right now. He's asking how long could it take for a bounce back to those levels from a 1 year perspective at least. What would be your view, Gaurang? Is there a way that there could be some reprieve from this price for Canara Bank?
I hope it is, because the acquisition price is our target price. Puneet, that's the sad part of this particular investment. But yeah, available at some downward correction. If you can average current over here, then I think it will bring down your acquisition price. Stay invested for long term. We have a hold recommendation on Canara Bank.
Okay, Namita from Siliguri is holding 250 shares of Quest Corp at a price of 285. Vaishali, should she continue to hold this counter?
Quest Corp.
Yeah.
Well, the current price is 185 and it is on a downward trajectory, but it's just today's candle which is showing some bounce back. So now that held on for so long, keep stop loss of 170 and maybe you can be lucky to get the price of 210 again.
That view, Vaishali. So he had gotten all the three counters post the demerger as well. So currently he's sitting on a loss, but that's Vaishali's view. But we have another query on WhatsApp. Kannan from Mumbai actually is asking a question on SpiceJet. Now, Gaurang, he's holding 900 shares, but he's bought them at 73 rupees per share. Stocks, of course, trading at 13 now. So he's sitting on a loss of almost 53,000. What should he do with this now? What would you recommend?
Firstly, we don't have coverage. Secondly, there are a lot of reasons available in the public domain, Puneet, as to why you should stay away from this stock. You know, the biggest mistake that retail investors do is look at the stock price and buy the stock, which should not be the case. However, we remain positive on the aviation sector. The largest low-cost carrier in form of Interglobe Aviation is something that we've been posting for many, many years. And this one is going from down from bad to worse, Puneet. Again, the same situation. Your capital is eroded almost about 60-70%. No specific comments since we don't have a coverage. Request Vaishali to help out over here.
Vaishali, a quick view if you have. I know it's a very volatile counter, but any?
Well, this has been continuously making new lows, so I would say avoid. If one has to, then Interglobe is the favored pick. Exit from stock.
Got the view. But let's go across, take our next caller from Qatar, and Matthew has a stock query for us. Matthew, good morning. Welcome to the show. What's your query?
Yeah, good morning. I hold around the 223 shares of Oil India, the price of 381. So I want to know, should I hold on and what would be the long-term price target, if you can say? Thank you.
Got it. Well, hopefully, Matthew, everything is good at your end as well. But Gaurang, he's in a profit for Oil India, bought at 381. Should he continue to hold his 223 shares now?
So let me give a word of caution regarding the optimism about the oil exploration companies, Puneet. This bounce that you are seeing in, rightly mentioned, and I also mentioned, is all because of the bump in the crude oil prices. If there is de-escalation, the situation has to come back to normal and free passage of sea vessels in the Strait of Hormuz. Crude oil prices can even crash 5, 10%, 15% the way they have gone up. Having said that, we used to cover Oil India a long time back. Our targets were in place. So we have removed the coverage. Currently, we don't have coverage, but on the exploration side, we remain positive. ONGC and GAIL are the coverages that we have currently on the fundamental side.
Got the view, Gaurang. But time now for the second round of the rapid fire in this edition of Ask Profit. Gaurang as well as Vaishali know the drill. The first question coming in from Nalini. She holds shares of Motherson Wiring at 46. Gaurang, should she continue to hold her 100 shares?
I'll give it a pass. We don't have coverage on Motherson Wiring.
The next query is coming in from Chandran. 400 shares of Venus Pipe, bought at an average price of 1,290. Gaurang, should he hold?
I'm sorry, we don't cover this one as well.
Vaishali, any quick view on Venus Pipes?
Continue holding. We can see the stock going towards 1150.
Vedanta, bought by a viewer, Sai at 725. Gaurang, should he continue to hold with the demerger, the split?
Definitely hold on. We have a positive coverage and I think there will be value locking as far as the demerger is concerned.
The next query is from Gyaneshwar and it's on HDFC Bank. He has bought 200 shares at a price of 933. Should he hold, sell or average, Gaurang?
Hold and average would be the recommendation. Attractive valuation, downside is protected.
Vani wants to know if it's a good time to add L&T from the long term. Gaurang, what would be your view?
Don't even think twice. Please go ahead and do. And this is also one of the stocks wherein I'll say, please invest and do in a SIP if possible, because whatever is getting destroyed and damaged in the Middle East, West Asia needs to be rebuilt, and that's when L&T will come into focus.
Raghu from Tirupati is holding 1,050 shares of Nalco. The next view for the next 3 months here, Vaishali.
Well, currently it's doing very well, so continue holding and look for higher targets of 420 and higher.
Is Dr. Reddy's and Sun Pharma preferred pick in the pharma space for the long term, Gaurang, is what Ramesh is asking.
Dr. Reddy and
Sun Pharma.
Dr. Reddy and Sun Pharma. So we have positive coverage on both Dr. Reddy and Sun Pharma. Yes, they are investment ideas.
Right. The next query is from Raj from Gujarat, and it's on PFC. He's holding 1,000 shares, bought at a price of 375. Should he see a value of 450 here, Vaishali?
Well, it is doing quite well, so continue holding, and all likelihood you will see those targets.
A power name that you like right now, Gaurang, is what our viewer has a question on.
Couple of them: Tata Power, NTPC, JSW Energy, and Torrent Power.
The next query is from Jake from Kochi. It's on TTK Prestige, 140 shares, bought at a price of 584. Should he continue to hold this for the next 2 years, Gaurang?
So I think a lot of traction in terms of induction plates, hot plates. Sumit, and virtually sold out from a lot of state retail outlets. We have a positive coverage on TTK Prestige. We have an accumulated stand also on TTK Prestige.
Is it the right time to add Eternal, is what Maheshwari is asking. What would you recommend, Vaishali?
Yes, accumulates because it's already started moving. 190 is the support, so every dip is buying opportunity.
Well, that's the end of the second round of the rapid fire as well as this edition of Ask Profit. But Vaishali, thanks so much for helping us down over the last hour of solving these queries. Gaurang, thanks so much for joining in, helping us on the fundamentals on such short notice. But viewers, that's all the time we have on this edition of the show. Stay tuned to NDTV Profit. KYC comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Some moments in life are lifelong. Some memories are lifelong. Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. Ye on the quality lifelong.
बिटिया की शादी है हमारी.
बधाइयों बधाइयों.
कुछ पैसे मिल जाते समय पे लौटा दूंगा. जिंदगी में जरूरत के वक्त हम अक्सर अकेले पड़ जाते हैं.
इसीलिए तो केपरी लोन्स आपको गोल्ड लोन देके अपना फर्ज निभाते हैं. केपरी लोन्स फर्ज निभाते हैं.
In a month that moved markets, shifted diplomacy,
The entire world.
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. #1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit
for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit, a very interesting company today we have got for you. And remember, there's a lot of buzz happening, especially in the energy sector. But before that, let me give you some hints. Company karti kya hai? Some hints on that. The first one is, it's from Hindi hinterland. The company is Raipur-based company. I'm sure you must be getting it now. It's related to minerals and metals maybe. Yes, you're right. The second guess is it produces both steel, ferroalloys and power. Especially power is something which the company is focusing at. And the third important situation is that stock is up 12 times in the last 5 years, and that is a very big multi-bagger for a lot of investors. But ye company kya hai? What's the company all about? Let's get that detail in. And one more hint is there, that the company's name is also a part of a jumbling of my name as well. The company's name is Sarda Energy. To be precise, Sarda Energy and Minerals. This is the company which we are talking about. But why are we getting this company right now? That's the question to be asked. The first reason about this company is definitely going to be on the energy business growth potential from all the sectors. The company is majorly focusing on that. Of course, there is a minerals business also, but the company wants to focus on this in the next 2 to 3 odd years. What's the outlook on the Kalyani coal mines, the expansion which is happening? How much integration is there? What are the important timelines? That's what we'll be asking the management. The third important situation is the Godavari Power. They have taken almost a 0.22% stake in it. Is there any acquisition rationale behind it? It might be a minor one, but nevertheless it has raised eyebrows. The progress on the expansion of the Garma Palma coal mine, that is what we'll be talking about. Management has spoken earlier in the interviews with NDTV Profit, but we need to get some incremental information on that. The outlook on the raw material pricing amidst the geopolitical tensions. Is there a rise in pricing environment happening in which they are operating their businesses? Also the volume growth outlook, for the minerals and metals businesses. They are legacy businesses, some of them, but nevertheless we'll understand what's the growth outlook for these companies. Also the bidding pipeline for the other power generation companies, because they recently had a successful generation order company acquisition. Now they might be looking at other places as well. To decode this, we'll have Nilay Joshi, is the executive director at Sarda Energy, to give us the entire picture of where the company stands and what are the important industry growth levers. But let's come in and let me explain you what are the key details about the company which you should be tracking. And of course, there's a lot to it. This is companies are already engaged in these 3 important parameters which we spoke about earlier. We are repeating that, and also going ahead, let's see which point is important. They are transforming from metal company into an energy-led integrated company. That means the valuations which the company is enjoying is not just of a metal company. There is an energy element to it, and now energy has become the core growth driver. So whenever this situation changes, the valuations, the perception of a company in the stock markets also change. Mining is supporting the cost control. That's where the transformation is happening. We have seen that in the long-term basis also on the charts, how much it has become a multi-bagger of sorts. The metals still remain stable, nothing much happening. It's a legacy business. They know the ins and out of it. The energy contributes over 2/3 of EBITDA, and this is where the alpha lies. EV/EBITDA ratio low, या P ratio लीजिए, then you'll understand what's the difference which is happening. SKS Power is operating at 81% of plant load factor. This is also very much important, and the entire focus right now is on the energy segment. There's a strong integration happening with the captive coal mines also.
and the way the global situation or even the domestic situation is coming in, power and energy is the sector to be in right now. Hydro portfolio, that's around 167 million total wattage, you could say, actually, of which are operational right now. So that's what we'll be talking about. And also 50 megawatts of solar power project is also underway as well. So you can see it's a renewable, non-renewable play, both clubbed in together. And the future total energy capacity target is 1000 plus megawatts. So that is a very big target for the company size of almost 18,000 crore market cap. The energy defining company's growth trajectory, and that's what the company has been harping across their exchange filings. A slight revenue decline was there in the third quarter on planned turbine maintenance, which we had already seen. The impact was already seen earlier, but the question is what's happening in the fourth quarter. In the third quarter, one more important thing is that energy continued to dominate the earnings mix, and that's all. We have seen that in the EBITDA numbers also, and the core earnings momentum still remains intact. So going into the future, it's going to be energy, energy and energy. The capacity expansion for thermal is the IPP producers, they have acquired 600 megawatts of power, and if you look at the thermal segment, this potential could add double. That means it could become 1200 megawatt as well going ahead in the future. There's expansion plan in the hydro segment as well. The commissioning is of almost 24.1 megawatt of power. Remember, hydro business is still lumpy in a country like India, and this is the overall development which is happening in the hydro segment. So the focus should definitely be on the thermal part and the solar part. And 50 megawatt of captive numbers have come in. The mining is also their important business. They are in Chhattisgarh, they are located, where India has a lot of metals and mining business as well. This is largely, we see an integration at play. It's already a mature business, and when a business becomes mature, the growth numbers don't become so much because the base is only so high. They have tripled their capacity in the last 3 years. And remember, mining is important for resources also, be it the EV or the new age economy, which really needs a lot of sources. Coal and iron ore assets are expanding. That's the second growth lever coming in for the minerals, and they are ensuring the captive fuel security. This is very much important in today's time because of the disruptions which we have seen from the Middle East, which is impacting the energy security of India as well. And also they try to reduce the input cost volatility. This is coming in for the mineral business as well, and also stability which comes with that. But apart from this mineral segment, the important situation is the minerals would be the next growth lever. Energy, we spoke about it at length, but then in the second order of priority comes minerals. That's also very much important, and integration is something which they are looking at for both steel and ferroalloys, which will help the overall operation. This is a stable legacy business I'm talking about. सबसे पहले energy था, फिर आया minerals, अब आया metals. It's stable already, and that is where we are seeing the volume resilience definitely coming in. And at the end of the day, everybody wants to preserve energy, and when you do that in an integration setup, your margins improve and your bottom line numbers also improve. So this is the important total setup for the stable legacy business which I'm talking about for Sarda Energy and Minerals. So this is the entire picture. 3 sectors, order of priority I've explained you, but interesting thing I want to explain you is how the stock will be judged in KYC. There are 8 rating parameters, and of course the usual holy grail of financials is very much important. This includes income statement, balance sheet, cash flow. These are the 3 numbers which is definitely going to be important to judge the company, and the return ratios, kya returns aaye, that will be very much important. But I'm talking about ROC, return on capital employed. Apart from that, shareholding, we'll see how much FIs, DIs, there has been a movement or not. Street cred, I've already mentioned you the stock is a multi-bagger, but in the short term, has the company made money or not? That's the question. Valuations, we'll try to compare that with its own history as well, because the company is having 3-4 businesses. The sum of part valuations become a bit difficult to judge it with a peer. So making it an apple-to-apple comparison, that's what we'll be looking out for, and the outlook as well for the industry and for the company as well. So totally 8 rating parameters would be coming in, but the first one let's focus on, and that's the income statement. And largely income statement, the performance has been decent, but is it really very strong? The EBITDA numbers fluctuate in this kind of business model, and that's what we have seen. PAT numbers, not major growth coming in. So it's the 3-year CAGR comes in negative, but did Q3 numbers show a turnaround? No, it didn't. So largely the numbers were, you could say, slightly muted if you compare that on a year-on-year basis. The margins also saw a dip from 28% to around 24%. The long-term average is around roughly in that phase. So there was nothing really bad or really good in the numbers going ahead, and that is how the functions work in a business. And remember, this is still a commodity-led business which is trying to move towards the energy segment, and the major contribution is coming, almost 75% of it, from the energy segment as well. Net profit also largely flattish, so it's a neutral rating when it comes to the income statement. Let's see what's there in the balance sheet. Balance sheet also, the company is expanding, they are acquiring, so the borrowing levels, that has gone up. It's around 1 crores for FY25. A little bit of concern or lumpiness comes in, but the debt to equity ratios are still, you could say, decent. It's not, it's very high or something when you compare that with this equity and the borrowings. But looking at the cash bank balances, that is also decent. You just have a look, it's around 608 odd crore rupees, but it's a very working capital heavy business and expansion is happening, so we need to wait and watch. So net, it's a neutral rating when it comes to the balance sheet as well. We spoke about income statement, we spoke about balance sheet. Let's see how cash flow works. And remember, out here also cash flows might not be, all the way up or all the way down. There is a little bit of lumpiness because the business model is as such, but the company has surprised. That's why I'm going to give this a strong thumbs up. Why? I'll tell you. The cash flows from operations have been really going up. It's around 886 crore rupees, and you see that from FY23, it has been increasing, and that's a stable, cash flow from operation coming in, and this we are seeing the good conversion also coming in. Of course, the net cash flows inflow, there is an investing and operating income. Apart from that, financing activities is there. So it's better to check these three criteria to understand where the company is lying, and the cash flow management for a company operating in this industry is good. And that's why I've given a strong thumbs up when it comes to the cash flow segment. But return ratios, what it matters, of course, FY22 was a year of aberration. Higher side the numbers came in, but after that it has normalized, and if I saw the last 10 years, the average is around 15 to 17% of ROC returns, and that is decent for a company like that. So largely it has normalized when it comes to the return ratios. I'm talking about the ROC. So the normalization, it's fine, but it's not great as such because this business model is only as such. So it is a neutral rating when it comes to the return ratios. Let's talk about the shareholding, and there's nothing actually to talk about the shareholding because you guess there is no change happening. Promoters' stake at 73% is still stable. It hasn't changed yet. The FIs and DIs, they have also, I would say, largely under-owned for a company like this. It's just 18,000 odd crore market cap. So maybe in the future, as the company's market cap increases and some inflection points change, especially with the company claims to become energy focused, that is where we might see these numbers going up. But as of now, all of them are flat. So it's a neutral rating when it comes to the shareholding as well. But let's give you some more perspective on the stock. Stock kitna kamaya hai, kiske liye kamaya, kyun kamaya? That's the big question. But I'll just explain you the pricing movement. For last 1 month, the stock has been flat, kuch hua nahi. Also, let's pick up the other key, durations, whether the stock has made money or not. For last 6 months, no, the money hasn't been made. If you have invested, the stock is down 13%. This year itself, the stock is flat. Remember, there was a massive sell-off in the mid-cap and the small-cap space as well. So, company has actually maintained itself, if not gone up. So, that is a brownie point which the company has earned. But if you're a long-term investor, congratulations, you have made a killing in this stock. Let's just see this in the last 5 years, 1145% of returns, almost 12 times your capital has increased if you have stayed with the company for the last 5 years. So it has been a multi-bagger as well. For long-term investors, it's been a great bet. For medium-term, short-term, the company has shown, you could say, a technical prowessness, but nevertheless, the returns haven't been made. So net, it's a neutral rating when it comes to the street cred. Let's also talk about the entire pictures of the valuations, how things are matching right now. And currently, the valuations are at 15 times. The 5-year average, you look at it, that's 14 times the forward PE ratio I'm talking about. At the peak level, when there was a lot of euphoria in the mineral and metal segment, that is where we saw the valuations going up to almost 21 times. So there is a correction happening, but the long-term averages, we see that we are at even Stevens right now. So it's a neutral rating when it comes to the valuations. So we spoke about 7 rating parameters, but the 8th one is very much important, and to be honest, the most important, since it's forward-looking. It's about the outlook. Where's the direction the company going for? The company is focusing on the energy segment as well as its core offering to the investors and the stakeholders. Almost 75 wattage of energy capacity is expected to be coming up. This is a gigawatt. And also the mineral business vertical, that has a second major lever of growth as well. So the first priority is energy, the second is mineral, and the SKS power potential, the newly acquired acquisition, there is a plan to double the capacity as well. This approval process for the capacity expansion is also underway. So this is an important trigger for the company as well. And also, overall, this is the entire setup coming in. But the overall rating, after giving a thumbs up to the outlook, let's just give it the revisions. Largely neutral for income statement and balance sheet. Cash flow, the maintenance has been really done well. That's what the last 3 years data suggests. Return ratios are decent, in line with their average historical trends. Shareholding, street cred, and valuations, all of them are doing some kind of a justice to the analysis. Valuations also closer to their 5-year average as well. Outlook is something which I really like, with the growth prospects coming in. The company becomes an integrated energy player as well. So overall, let me give you the total KYC rating, and it's largely at the in line with what numbers we generally give. It's 5 out of 8 for Sarda Energy. And to give us more perspective, we'll be joined by Nilay Joshi. He's the Executive Director at Sarda Energy and Minerals. Good afternoon, Nilay. It's always a pleasure to have you. The stock largely, exactly.
Good afternoon to you too.
Yes. And Nilay, the first question is definitely going to be on you. Your company being projected as an energy player right now, the way the focus is moving on, we saw the EBITDA contribution also. So now, as an energy play, what the company is doing, what are the growth levers in the energy segment as your priority business segment?
So see, right now we have about 1 gigawatt of operating energy assets. That is between thermal power, hydropower, and little bit of solar, which will start from the coming financial year. In the medium term, say over the next 3 to 4 years, we would target to double all these capacities. So maybe move from 1 gigawatt operating to about 2 gigawatt operating. How the path to that is also quite clear. So we plan to double the capacity of the SKS power plant, which is actually a brownfield expansion. Similarly, we plan to double the hydropower operational capacity, and where already we are working on 75 megawatt worth of projects, and we are looking at a few more. So we hope that in the next 4 years or so, we should be doubling hydropower capacity also. And then we have a minor 50 megawatt solar coming up. So all in all, I think over the next 4 years, we should be doubling our operational power assets.
Right. So you'll be doubling up the operational power assets across segments. That's something to watch out for. But Nilay, I just want to understand what are the current debt levels of the company and any kind of debt reduction plans in the future?
So if you look at us, we were earlier a mid-sized long steel manufacturer, and that business is a cyclical business, and that is why we diversified away from that business to energy and minerals. That business, because it was cyclical, we always kept the balance sheet, managed it in a very conservative fashion, keeping the debt levels low. And that remains our priority going forward. So even if you look at, we expect that by the end of this financial year, hopefully we should be net debt free. On a standalone level, we are already net debt free. On a console level, hopefully by the end of the financial year, we should be net debt free. That is including the debt that we took for SKS expansion. So the balance sheet is very strong in terms of liquidity,
Exactly, and that liquidity impact is of course getting to be seen in the cash flow segment also. It's really managed quite nicely. But apart from the energy segment, also the mineral business vertical, that's the second lever of growth you're talking about. What are the important expansion plans? And if you could just give us a little bit of timelines of your key projects for this.
Yes. So we have one operating thermal coal mine, which is the Gare Palma 4/7, where over the last 3 years, we have continuously done capacity expansion and taken the capacity up from 1.2 million tons to now 1.8 million tons. And for further expansion, we have already moved applications, etc. Further, we have 4 more coal mines, which are all high-grade coal mines. And we expect that all of them will start operating over the next few years. First one being the Shahpur coal mine, Shahpur West, which will come on stream in the coming financial year. So because all of these are high-grade coal mines, we expect the contributions to be much higher compared to thermal coal, because this coal is used in steel making.
All right, but Nile, another question is there regarding the raw material pricings. The geopolitical tensions have increased the pricing, and this is applicable for all of your business segments, just not once. And there is a second order effect at play. Any kind of jump in your raw material price, and if yes, any pass-through mechanism, or will you take that hit in this quarter?
No, so there are two things. One of the larger inputs for us is thermal coal, of course. So those prices, I think that mineral is in abundant supply in the country due to the continuous efforts of the government and the PSUs. That supplies have gone up over the last few years. So thermal coal, there is no impact. On the other raw materials like say iron ore or high-grade coal, yes, prices have moved up. But then at the same time, end product prices have also gone up. So if you look from the last quarter, end product prices for most products are up in the range of say 10% or so. So I don't think there will be any major impact as of now. But then, situation is volatile because of the ongoing war scenario. So we need to keep tracking this.
Right, Nilesh. That means there might be an impact at least in this quarter as well. But nevertheless, apart from the raw material pricing, if you could just give us the progress timelines for the expansion of the Garma Palma coal mine. That's what everybody's talking about. And there was recently a positive news flow also coming in from your company. But we just want to know the important timelines for it.
No, so Gare Palma, like I said, we already, last quarter, we received the approval. In Jan, we received the approval, for 1.8 million tons. That will be achieved in March, by March of this financial year. And for further expansions, that process is underway, and I think over the next few years that will be achieved. But beyond that, like I said, already high-grade coal mines are coming up, becoming operational over the next few years. The latest will be Shahpur West in the coming financial year.
And Nile, any other bidding pipeline is there for any other power generation company? SKS, though we have discussed a lot, but any other companies, which are there on the pipeline where you are bidding?
No, we continue because, we have continuously keep assessing the entire landscape and keep participating in different bids. So as and when the opportunities arise, we always evaluate and participate, and let's see how things go.
Okay, so of course the evaluation is something which you do it on a continuous basis. But just a minor query coming in from a lot of stakeholders of Sarda Energy, and they have asked about the rationale. Why have you acquired almost a very minor 0.22% stake in Godavari Power Ispat? I mean, you have given it as a market transaction, but nevertheless, just wanted to get some clarity on that. Is there, why was this acquisition there?
Yeah, so it is just as a part of our regular treasury operations. Like I said, we are sitting on almost 2,000 crores of liquidity. So it's a very small thing, not even hardly 1% of my liquidity. So it's just a part of the regular treasury operation, nothing else.
All right, so regular treasury operation is something which you have mentioned regarding the minor acquisition of stake in Godavari Power Ispat as well. Well, apart from this entire setup, any new age energy sector, like suppose in the hydro segment, you are talking about expansion in solar also. are we looking at any other new age energy related, growth outlook going ahead?
No, so we keep evaluating, all sort of upcoming energy space, be it battery, be it nuclear, whatever, but they are all evaluations like any other company. As of now, there is nothing new that we are doing. We are focusing on our existing core businesses that we understand well and which we have run over a period of time. And as and when opportunities arise, we'll see.
Right. So the focus is on the core business and of course the energy, minerals and the metals pack. Thank you very much, Anilay, for giving your time and clearing a little bit of queries coming in from our viewers at KYC. It's always a pleasure.
Thank you so much. Thank you for the time.
Yeah.
Thanks.
So that's the management of Sarda Energy. The stock has been a multi-bagger, and interestingly, the stock is focusing especially on the energy segment. That's where the management wants to focus on. And the debt levels where the questions were asked, they have stated that the working capital numbers are on the higher side and a little bit of treasury operation actions is definitely happening on the stake of Godavari Power Ispat. So that's all, folks, for Sarda Energy. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Some moments in life are lifelong. Some memories are lifelong. Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. Ye on the quality lifelong.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7, #1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations.
First India tour in your city. Ragon with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches.
momentum, Nifty managed to hold on to 23,800 while Sensex jumped more than 700 points today. Advance decline ratio tilted sharply in favor of advancing stocks. Most sectors are in the green, barring only metal sector that lost some shine. IT is the biggest gainer. Auto and realty lead the gains. IDBI Bank in the spotlight. Sources tell NDTV Profit that the Cabinet Secretary will hold meeting with Deepam and other key ministries next week. This as the centre remains committed to divesting its stake in IDBI Bank in FY27. Major relief coming in for the flyers in India. Government has stepped in to curb extra charges on the seats, mandate 60% seats to be allocated free of cost for seat selection. Passengers on the same PNR will get seats together. Hello and welcome. You've joined us on Markets at 12. I'm Nisha Podar. Let's take a look at the market. And yes, it's year-to-year smile for most of the market today with a huge amount of gain. And remember, this is the third trading session in which the market is continuing with the gaining momentum. And this one, today's trade has been the strongest. So Nifty 50 reconquering the 23,800 mark after several trading sessions. And remember, if you really take a look at the 1 week chart of Nifty 50, it had really gone down, created a turf, and then has picked back or is picking back. So that's a good momentum that is really showing. Let's take a look at the overall market. Well, Bank Nifty, which is a quasi-investment into the economy, which had gone under a lot of pressure because of the rupee depreciation, crude prices rising, and balance of payment worries coming in. Well, Bank Nifty is the one which is also gaining in trade, but remember, it is underperforming the key indices at the particular moment. But what's really outperforming is the broader markets. Both mid-cap as well as small-cap index are gaining over 1.5% and much more than the key indices, because those are the smaller stocks which lost the most and now are becoming much more palatable to the market at mouth-watering valuations probably, and therefore buying seen there. But when we talk about the sectoral performance, IT sector, which went through its own bit of volatility, is coming out very strong, 4% gain on IT sector index, and that's really adding a lot of momentum to the market. In fact, all the sectors are in the green, barring only the metal sector, which, remember, because of the global metal prices really going up because of the supply chain constraints, were looking overvalued, and therefore some profit booking seen only in the metal sector. In terms of the performance coming in, it's the big boy from IT sector, Infi, which is gaining the most and contributing the most, along with Bharti Airtel, L&T, TCS, some of the names to mention. And on the downside is the big banking name HDFC Bank, which is taking the brunt of any bit of really nervousness about the economic reasons. So that's one counter which is a drag. Sonam Srivastav, who's the founder and fund manager at Right Research PMS, joins in now with her expert take on the market. Sonam, always a pleasure to welcome you on NDTV Profit. Today looks like a good day of trade, but the volatility in the market has been quite accentuated. After 3 days of gaining momentum, Sonam, does it look like that the market is getting a little more comfortable with normalization of the present situation in crude prices? Do you think the worst is behind us?
See, it looks like it. I think the market reaction definitely hints at that happening. You can see 3 straight days where, we've seen strong recovery. I think the crude prices have also cooled off. They've gone from 100 to 92. And I think, on the global markets right now, I think the escalation in Iran hasn't cooled down, but I think things are coming back to normal. There are ships that have passed through the Strait of Hormuz also. And I think, the markets had corrected a fair bit and we were expecting a recovery. So, we are taking it constructively, and, the recovery was bound to happen now or later. And, it seems like the recovery is happening right now.
Right. And Sonam, you have a view on the IT sector. It has seen a fair bit of volatility. There are days when it's completely beaten down, and today it's surging 4% in trade. What's your in-house view on the tech sector and the pivot to AI, and is that disruption already priced in most of the counters?
So I think the pivot to AI and the disruption definitely is priced is more than enough in most of these stocks. Right? If you look at stocks in the IT sector, the IT index itself in the matter of a few months has corrected more than 50%, right? Almost 30 to 50%, right? If you're looking at from 2025 highs, right? And I think the evaluation of the IT stocks right now is cheapest across the board, right? These are large organizations which have enterprise contacts, and you're seeing the pivot happen even within the Indian IT towards more IT adoption. So I think in terms of valuation, these stocks are right now dirt cheap, and it might be a good time to accumulate. But yes, I think projection wise, we'll see some disruptions happen with AI, but the prices right now are at a very attractive level.
Right. Sonam, you were talking about the IT sector, and yes, IT sector has seen it being repriced as per the new momentum. But in this particular market, while most of the experts were already saying a cautious deployment of cash at lower levels and in safer bets like bigger companies, how has that particular strategy now changed with the market showing some bit of stability?
See, I think like you were commenting earlier that the broader market is having a bigger recovery today, right? Yes. And that's bound to happen given that, the extent of correction was also larger in the smaller stocks, right? And, I would sort of be of the view that it might be a good time to accumulate small and mid caps also. We won't be just biased towards large cap quality in these levels, especially, at this level of correction, you've seen the market correct almost 12% from the, from the February levels. And, the recovery seems to be happening. And I think, your attractive growth stocks, mid and small caps will participate in the recovery, right? So I don't think it would be a bad idea to actually at these levels, at the current levels, it might actually be a very good idea to buy small and mid caps.
All right, so small and mid caps, the broader markets, which had been beaten down a lot, now at comfortable valuations. But Sonam, looking at the overall market, two areas did not lose much momentum. One was the consumption FMCG space, which is more domestic led. And the second is the green energy space again. So these two spaces were less impacted also because of the in-house demand that comes in from the country. Which are the pockets at the particular moment in either broader markets or even the in-tech stocks, which you think that the areas are much better in terms of a medium-term investment?
Right. So like you said, consumer stocks right now have started to look attractive, and we are also looking at a few internet-based consumer stocks that might be attractive. I think, with the crisis in the Middle East, the crisis might calm down, or the Strait of Hormuz might normalize in a matter of couple of months. But the biggest concern would be from the oil prices and how does that impact inflation in India, right? So with that view in place, I think what we would avoid is sectors that have crude exposure, for example, paints and chemicals, etc., until unless you see a solution to the crisis. And yeah, I think like you said, consumer looks attractive. We are seeing a lot of interest in autos, auto ancillaries, even industrial manufacturing segment, right? So I think those are the type of stocks where we are seeing a lot of interest right now. And you mentioned green energy, the data center theme, right? I think all of those are quite attractive.
Right, Sonam. So those are some very interesting topics that you mentioned, and the areas where there is momentum building in terms of investments. Thank you, Sonam. It's always a pleasure to really take your expert take on the markets. Thanks so much for joining us on NDTV Profit.
Thanks a lot. Yeah.
Thank you so much. Now, the Middle East war cannot be ended without ensuring normalcy and safety of the Strait of Hormuz, which, remember, has become the main bone of contention. That's the word also really coming in from James Dorsey of S. Rajaratnam School of International Studies. In fact, listen in to his commentary on the war situation and its impact.
Donald Trump is in a bind. He's created a situation in which he, at this point, cannot credibly exit the war. To credibly exit the war, he essentially has to expand it, not something that he necessarily wants to do. The Iranians have gained a major stronghold by controlling access to the strategic Strait of Hormuz. There's no way that you can end this conflict without guarantees for free passage of shipping through the Strait of Hormuz. To achieve that at this point, either the Iranians, you have to find a deal with the Iranians that meets that requirement, or you have to impose it.
Right, so that's the important word really coming in. Let's take it straight to an important discussion. In fact, Atul Mehra, the MD and CEO of Axis Capital, is joining in now live to chat about the overall IPO and equity capital market in a very volatile and also the sell-off that the market has seen. Atul, always a pleasure to welcome you on NDTV Profit. My first question, of course, 3 days straight, the market has been building momentum. There is some comfort. Is this comfort for real? And how is the volatility in the market and the recent sell-off and the global situation really impacting the market in your view?
Too many questions. Permit me to answer them as in an order. So we have to understand India is a very vibrant capital market. And I say so for a couple of reasons. Number one, it is a very resilient economy. Number two, it has many great companies which are managed and run very well by entrepreneurs and professionals. Three, what we are seeing out over here is because of the unique characteristics of Indian economy and the demographic profile, we are seeing a huge amount of resilience which is being offered through financialization of saving, which is coming at the forefront and providing a great buffer or a resilient for the economy. What is very interesting out over here is look, the markets have cracked by almost 7% in the last 1 month, I would say. But we, as you rightly said, we have seen a pullback of around 2 to 3% in the last 3 days. And this is a great recovery. To my mind, what we say this is a dislocation. This is not a fracture. This does not require any major surgery. We need to just sit back, relax, be patient, be calm, rethink about the risk, recalibrate our strategy, reset our expectation, and I think most of us will be home and dry.
Right. Of course, Atul, you have seen many cycles in the past 3 decades of your career, and you know how the cycle really performs, and you just need to patient and ride through that particular cycle. And I'm sure that this is the same advice you're giving to all your clients. I want to understand one important aspect, which is the IPO market, which has been a huge momentum builder when it comes to private equity or VC investors exiting, or even the founders finding their space in public market, creating new segments, and on the other hand, the shareholders coming and getting their returns from them. This whole ecosystem has done very well in the last year. And of course, a huge pipeline has been built for this year as well. How is the situation and the mood? Are the decisions being pushed to when there is lesser volatility, or will we still see IPOs trickling in the market?
So Nisha, a little bit of correction. We have seen a resilient capital market for not last 1 year. We've seen it for the last 4 to 5 years. And this is the longest, I would say, a sustained capital market bull run that we have seen for a long time. The good thing about this is what is the thread, what is the fabric behind this bull run. The quality of companies that went to the capital market was far, far better. We've seen participation from all categories of investors, be it foreign institutional investors, be it sovereign funds, be it the domestic mutual funds, be it the pension funds, be it the private equity, be it the wealth investors or the man on the street. So we've seen a huge participation from every category of investor. Fast forward to 25, 26, again, the pipeline is looking very robust. We have some very high quality companies, some very large companies which are planning to tap the capital markets. I see no reasons, I see no concerns that they will be successfully able to raise money in the capital markets. Yes, because of what we have seen of a steep correction of 7 to 8% in the last 1 month, I think it was a pause, and the pause was much needed. I think with the 2 to 3% correction improvement that we have seen in the last 2 to 3 days, it's a matter of, I would say, a month, and you will see actions back in flow.
That's right, actions back in flow. But Atul, I want to understand, with this change in the scenario, I'm sure that there will be many opportunistic deals as well in the market. In fact, the economic, parameters for many of the countries, companies and sectors may have changed because of the pressure coming in because of global tension. How do you spot the M&A transaction and opportunities in a market like this? And what are those trends that are really probably just developing at this point?
So, Anisha, again, I say this out of my experience. M&As don't happen because of market situations, and particularly in this kind of a dislocated market. M&A happens for fundamental reasons, and the fundamental reasons could be many, many. Interestingly, if you look at it, M&A is no longer a taboo. People do M&A for variety of reasons, and those reasons are very logical reasons to do M&A. When you do an M&A, the buyers were in good old days only strategic investors. Which means one corporate buying another corporate, or one MNC stepping into India to buy the Indian entity. Today, we have very vibrant, large private equities who are very much interested in being the front leader in taking over such companies and what they call as a strategic control acquisition. So today, there is a very dynamic market, and trust me, M&As don't increase because of the market condition. M&As happen throughout the market conditions, regardless of the sentiments in the market. Yes, to the extent financing of M&A becomes relatively easier or difficult depending on the market condition. That's the only lever that is there.
Right.
But M&As have to be looked in as a separate strategic action.
Right. So, Atul, to your point, and absolutely, the valuation mismatch right now would have put a lot of deals in the back burner, you think?
On the capital market side?
Both. Capital market, fundraising is becoming also difficult in this market?
No, you have to again understand. There is a valuation expectation that everybody has in mind. And when I say everybody, I mean the investors or the promoters have in mind. As long as the expectations are by and large met, there is no challenge at all. And Nisha, what you should understand is that markets are very vibrant. Yes, public markets window may be shut temporarily for 2-3 months, but you have private equity, which is very, very vibrant at this point of time. All my friends in the private equities are rolling up their sleeves, sharpening their pencils to look at such opportunities. It is a great opportunity for them to do investing rather than harvesting.
Right. And finally, Atul, at this particular point, I want to understand also what are the key trends on the deal street that you're spotting at the moment, which will pan out in the next few months?
So, look, as I said, markets are very vibrant across the products. What you're going to see as a trend is 6 or 7 industries which are traditionally old industries, still being at the forefront. We will see increased activity in the banking, financial services side. Consumer is a great industry. Industrials gaining a lot of traction, and I would put power and energy in the industrial segments. You have e-com, which is again a part of consumption story, playing very, very well out. You have real estate, which is steadily performing. And you have some of the emerging economies which are doing very well, such as EMS and data center. And as things move forward, couple of more opportunities and more sectors, which I can't name right now, will throw open. We see a huge opportunity in India.
All right, your confidence and positivity on the deal street, Atul, is very infectious, and that's exactly what the market needs right now. Thank you so much for all your insights and, of course, many trends that you shared with us. Thank you so much.
Thank you.
Thanks. All right, moving on. After a few consecutive green sessions, the market is flashing early signs of a bottoming out phase, looks like. However, the rebound has been narrow. Only 58 out of the 492 stocks delivered the positive results or returns since the war really began, highlighting selective opportunities rather than also broad-based recovery for the market. But amid this, there are a few stocks which reflect solid return potential. Can they really deliver? It's a very important question, and my colleague Sharad is getting us all the answers and explaining this matter. Tell us, Sharad.
Well, you see, importantly, this is a war period. There was a massive correction coming in important stocks. And remember, I have put a filter of a 5,000 crore market cap, and at least the stock is tracked by 5 analysts. But what's more important is the signs of, a pullback. That rally has already started, and we could see that the market has been in the uptrend in the last 2, and of course today's session included 3 sessions, and this is very much important. Also, out of this analysis, 58 companies out of the 492 have given positive returns since the Iran war started. But nevertheless, we have taken the stocks which have fallen the most in this criteria and the return potential as well, and these are the stocks which should be on your radar. Birla Corp, the war impact was more than almost, you could say, 22%. But look at the return potentials which are happening. Most of these stocks are more than 50% return potentials which are there. This also includes Sapphire Foods, Signature Global, Spine Labs, and JK Lakshmi Cement. Another group of 5 stocks I would like to point out where the return potential is on the higher side, more than 50%. The war impact, this includes 5-star business, KPIT, EPL, Mrs. Bector's Cremica, and from the IT space, there is Newgen Software as well. But let's understand each stock's story. What are the upside and the downside looking like? For Birla Corp, of course, the premium cement is supporting the profitability, while on the other hand, Sapphire Foods, there is a little bit of downside when it comes to the margins remaining under pressure. Also, let's look at the other group of stocks apart from this. Signature Global, new developments and JV is something which the street is bullish on. But on the other hand, Pine Labs, if you look at it, the brokerages have turned bullish, especially on the monetization front. Also, the next group of stocks includes JK Lakshmi Cement. The realizations impact is on the weaker side, while on the other hand, 5-star business, the street is bullish, especially on the improvement in the slippages which is coming in. Also, EPL, we see here largely beauty and cosmetic segments is doing the trick for this counter, while for KPIT, the demand trends are suggesting the European business is going strong. We saw that in the 3rd quarter as well. And lastly, Mrs. Bector's Cremica, the growth outlook is improving in FY27. And Newgen Software, large deals have seen a slowdown, but nevertheless, today also the IT stocks have been buzzing in trade, and largely 2 stocks from the IT have also made it to the list. So we can see a good pullback from these counters as well, as analysts are most bullish on, and they have corrected also significantly during the war period which ended, or we could say that the markets tried to bottom out from Monday onwards. So these are the important stocks which can give a good pullback.
All right, Sharad, quite an exhaustive research. Thank you so much for all those details. Let's also focus our attention on one particular counter which has shown a huge amount of event-based impact. And we're talking about IDBI Bank, the disinvestment of which has been on the anvil for quite some time. The stock is finding comfort at around 75 rupees per share. But if you really take a look at the 1-week stock chart, remember over the last 1 year, from 50 rupees rupees, the stock had elevated to over 100 rupees per share in anticipation of the deal that the government was trying to strike. And with this particular deal now pushed, the stock has been re-rated. Now, the fate of IDBI's disinvestment process may be really decided next week, as sources tell NDTV Profit that the Cabinet Secretary is set to hold meetings with DIPAM and other key ministries soon for this particular matter. In fact, all these exclusive details with my colleague Shrimi, who's joining in with all the details on this. Shrimi, tell us.
Yeah, that's right. Government is reassessing its next move on the IDBI disinvestment after receiving the lower bid from two potential bidders, lower than the minimum reserve price. And what we have been given to understand that the Cabinet Secretary TV Somnathan is expected to hold a very crucial meeting with all key ministry, including DIPAM, who is handling the disinvestment, to chart the way ahead and how they will go about the IDBI bank stake sale. And in fact, two options are on table at this point of time. One, to start rebid of the IDBI stake sale, and for that they had to start from the scratch. Considering being a sensitive sector, they had to go to the due diligence all over again. And the second option is to pause the disinvestment process as the market volatility stabilizes, and then possibly start again maybe middle of the next year. So with these two options, what we are also learning from the sources that they are looking at the minimum reserve price mechanism as all after this episode to perhaps make some changes to avoid market manipulation is also something they are considering. So for now, next week is very, very crucial, where the government is going to take a call, the final call rather, on the IDBI bank disinvestment, whether they will go ahead with the rebid or they will pause for the time being.
All right, Shrimi, thanks so much for all those exclusive details. Nifty 50 losing that 23,800 level. So keep a watch on that. It's out of time on markets at 12, but keep it with NDTV Profit. Thanks so much.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Some moments in life are lifelong. Some memories are lifelong. Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. Ye on the quality lifelong.
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. #1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you.
Hello and welcome back to NDTV Profit. You're watching Trending Stocks. My name is Puneet Zaveri. With me is Sharad Dubey, and over the next half an hour or so, we'll try and put the focus on the key stocks that are trending in trade today. Also get you a key important conversation with the management as well. But to start with, Sharad, it's been a strong day yet again today, right? Above the 23,700 mark. What are some of the key aspects of the market setup that you're tracking?
Thanks a lot for that, Puneet. A very strong set of opening we saw in the markets, and there also we are near the day's high level. Little bit of correction, but we are comfortably above that 23,700 mark right now, and we are almost 200 points up in the day's trade. Nifty Bank story remains the same, but a little bit of a downtick coming in as compared to Nifty, and we'll explain you the reason why, because ICICI Bank and HDFC Bank are not participating in, but nevertheless a good basket buying is happening across the counters. Likely that FI short covering is at play as well. But let's just see the key factors to watch out for in the day's trade, and we can confirm and say that this is the third straight day of gains coming for the indices. Of course, volatility was there on Monday and Tuesday, but it seems like now the volatility is coming down and we are going towards much more bullish moves. The options data is suggesting a relief rally is likely to sustain at key levels, even if there is a small downtick, a technical bounce back might be there. That's what the data is suggesting. Nifty setup is still stronger than Nifty Bank because of the drags which I mentioned earlier. But if you look at the other key trigger to look at, that would be definitely, apart from this, the FI heavy IT stocks. They have seen the biggest short covering, and Puneet, this is not only the large caps, this is the mid cap IT and even product based companies where the short covering is happening, so we can expect some good numbers in the evening as well. The value buying is seen in SMIDs. This is very much important because across the parameter we are seeing a good buying happening in the quality names as well, and that augurs well for the breadth of the market. India VIX and rupee is stable as of now, not a big concern, and actually the VIX is keeping on falling as well. Apart from this, the global cues, how it's moving, is definitely the market, the war fatigue which is there in the markets. That is actually, market is moving on. It's looking at new triggers, be it the AI or even the FMC meet from US. That's expected to be status quo today as well. So these are the important reasons why the market is being placed on a green basis right now for the third straight day. And yes, definitely a little bit of stability is coming in the numbers. Over to you, Puneet.
Well, thanks so much for that, Sharad, getting us some key updates, and definitely FOMC is something that we'll track. It's also pertinent that the banking index, and that's the first stock or the first space that we're looking at in our watch list today, largely under pressure today are the large cap banks. Now, while we have been talking about or the expectation that there won't be any rate cuts today, at least from the FOMC announcements, a lot more on the commentary will be something to watch for the banking names tomorrow, today as well. MMTC is the other stock that we're in focus today. A crucial selection meeting by PESB will be something to watch. JBM Auto back in focus as a key volume buzzer today. IT stocks getting some favor there from CLSA. They maintain their view, and the only brokerage essentially that has not cut target prices as such at this point of time. They see almost 100% run up or the upside on Coforge, and stocks up almost 5.5% today. The capital market stocks are extending the rally at this point of time, while Mankind Pharma is also something that we're tracking. The company has announced the acquisition of Rivotril at this point of time, and that particular brand from Roche, and hence the stock is in focus. PVR2 is definitely one of the key stocks that we're continuing to track today. The Dhurandhar 2 frenzy is something that I'm sure everybody, every viewer, and even I know the Sharad is tracking very closely. So you are looking at that release tomorrow, from today onwards for the paid ones, and from tomorrow onwards. So hopefully you get to catch it, but will be a stock in focus as well. Eternal, seeing buying from the lower levels, and you are seeing divergence across brokerages, but a key stock that we continue to focus on today. Varun Beverages is also the other stock that's on our focus and our radar. The company has done an acquisition of almost 131 crore in South Africa of a non-carbonated drink, so of a dairy brand essentially, and their focus continues to be on reducing the percentage of the carbonated drinks space in their portfolio in their basket. Asahi India, another key volume buzzer. Sterlite Tech stocks up 22% in the last 1 month, and so is Chennai Petro at this point of time, given one of the keys in the oil and marketing space is one of the key ones that we're tracking because of the Israel-Iran war. OneSource Solutions is the other one. Management change, stocks down 23% in the last 6 months. And ITI is the other one that we're tracking on another volume buzzer. But arguably, one of the key stocks for today has been Urban Company. SBI MF has bought stake of almost 632 crores in the company, and stocks flying up in trade almost 15% at one point of time. And D Development is the other one on the downside that we're watching out for. A Middle East war impact has also come in on this stock as well. But it's time now to put some of these stocks in the rapid fire round. And Sharad, what are some of those that you picked up today?
Well, thanks for that. Joining us is Gaurav. Good afternoon, Gaurav. Always a pleasure to have you. We'll start our rapid fire buy, sell, hold, especially with the large cap bank. There's a little bit of selling pressure coming in, and they're not participating in the rally. Remember, they're FI heavies. Important levels for both ICICI and HDFC Bank.
Yes, HDFC Bank has not participated yet. Rather, it is having a toll on the overall markets. Good afternoon, Sharad. With this, as far as the levels are concerned, 820 remains an important support, while 850 will act as a resistance point. Breakout expected above 850 levels.
And Gaurav, your views on MMTC is largely a cash counter, and news flows come in very few. But when it comes, the volumes do pick up. Any kind of strategy for that?
I think it is very difficult to catch up MMTC. Whenever it rises, it just rises and flies like this. It goes up the same day or 1 or 2 more days and it went off. So I think one should consider start profit booking around 64 odd levels. That is the best I can say.
And Gaurav, your views on Sterlite Tech, what are the important levels to watch out for?
Sterlite Tech has been a stellar performer as such, from 82 to clearly doubled on 92 plus levels, and it still looks optimistic. 2002, 2005 odd levels are pretty much possible. I'll advise traders to take a stop at 185.
And Gaurav, your views on OneSource Solutions, what are the key levels to watch out for?
So OneSource, it is a kind of a flagpole pattern pretty much visible on the daily chart. Breakout expected over 15-20 levels. So I'll advise traders to wait for that level. Once that breakout happens, it will fly towards 1650. Until then, it is a hold.
Gaurav, Urban Company has been on a tear. Of course, SBI name coming in the block as well. And today also stock is doing really well. Good time to do a little bit of profit booking on this counter. Or do you suggest that a medium-term basis, there'll be more follow-on buying?
I think a follow-up buying towards 135 and 140 is pretty much likely. So one can hold on to a position, take a trailing stop at 126, keep rising the stop loss with every rise in price.
Right. And D Development stock has taken a tanking on adverse impact on the Middle East operations. Any important stop losses for D Development?
You can take a stop at 275 on closing basis.
All right. Apart from these, 2 other stocks would be in focus: JBM Auto and Chennai Petro. These are the 2 stocks. Either of these stocks, anything looking attractive on them?
AVM is looking good. 13% rise in price today, backed by stellar volumes. I think more upside is pretty much possible. A move towards 580, 600 is quite likely. Traders can hold on to this position. One can add more at dip around 535 odd levels. And as far as Chennai Petro is concerned, it has been a good performer. Any dip towards 975 should be utilized as a fresh buying opportunity.
And Gaurav, Asahi India Glass and ITI, which of them look better?
From the glass segment, Asahi India has been a leader, whether it is industrial glass or automotive glass. I think this stock is good to hold from a long-term perspective rather than taking a short-term bet here. So at current levels, one can consider buying it here. From a medium-term standpoint, 800 should be a stop loss.
All right. Important levels. Thanks a lot for this rapid-fire segment, Gaurav. And over to you, Puneet.
Well, thanks so much for that. So definitely a lot of stocks are buzzing in trade today, but let's also put the focus on which stocks are, trending stocks on Google currently. Let's pull that up list for you as well. Definitely a few that are buzzing in terms of volumes as well, but Adani Power, PFC is up almost 2.5%. Urban Company, we did speak to Gaurav about it, up almost 18% and counting at this point of time. IDBI Bank is another one that's trending as well, and so is Moil at this point of time, seeing a lot of search as well, not reflected yet in terms of the movement in price as well. But Gaurav, a very quick question on PFC. In terms of volume search, it is buzzing in trade today, but also on PFC as well as REC, because the merger is impending. Both those stocks continue to be in focus. Any view on either of them for investors at this point of time?
Both stocks are equally good, no doubt about it. As of now, PFC catches my eyes too much. Good amount of a price volume breakout is pretty much visible. It was a consolidation range from which the stock broke out. In today's session, almost 5% of fresh OI built up is also seen, which clearly indicates that even the derivative action is supported by this up move. So it is quite likely that this up move would continue, and a level close to 450 is pretty much possible. So from a short-term trading standpoint, it is a hold. One can even consider buying this stock for a medium to long-term perspective.
Well, Gaurav, we leave it at that. Thanks so much for joining in, giving us perspective across a whole bunch of stocks and spaces for today. But it's also important to focus on a key new D Street debutant, and has reported stellar set of Q3 numbers. I'm talking about Omnitech Engineering. Now let's pull up the stock and you'll see that buying happening just in the last hour of the trading session. So up almost 8% as we speak. Companies reported solid set of earnings, revenues up 81% in this particular quarter. But to talk more about the company as well as their first results post-listing, I'm now being joined by Mr. Uday Kumar Arun Kumar Parekh. He is the chairman and managing director of the company. Mr. Uday Kumar, thanks so much for joining in. Firstly, many congratulations on the listing as well as your first results. We spoke just before your IPO and there was a lot to talk about. So just give us some perspective of what led to this stellar growth in Q3 performance. We've seen revenues almost up 80%, profits are up over 100%. Is that sustainable yet again in Q4 for you?
Yes, definitely it is sustainable, because historically, if you see our last 2-3 years and beyond that, so we have grown with a very good CAGR growth of around 30% of the growth trajectory. And we are having a strong order book. Like today's as on today, it is a 2,900 crores, which is significantly showing a customer trust on Omnitech. So that makes us to more grow on that trajectory. So apart from that, if you see, we have also grown by EBITDA by 110% and strong revenue accelerations by around 80%. And similar, we are also projecting in the coming quarters, we are trying to perform on that aspects.
Right. Mr. Parekh, good afternoon. Sharad here. What's your current order book status and the growth outlook coming in for 2026? And if any sectors where the order book might be getting skewed towards?
Yeah, coming to the future growth trajectory, we are having a strong order book of 2,900 crores. Of course, in the energy segment is significantly high on that, but the customers who are having the long associated, and now we are going into the more value chain into the process, and that is making us a more offering a high value added product to them. So in the coming years, we are also expecting we will be performing good.
Kumar, just one question on your order book. Since you've been speaking about it, it's almost a 10x jump that we've seen in the order book size now at 2,900 odd crores versus almost 289 crores that it was at the end of FY25. Is this largely because of one big order, or have you seen multiple big orders over the last 9 months, which is leading to this huge jump?
So if you see overall in the retail, there are a multiple order, and these pipeline we have tried to build in last 3-4 years of a rigorous development of the different product, different assemblies, different capabilities and everything, which have resulted in these times. So which is as on today, that's what's showing is growth in our order book. But this we have invested so much time in last 3-4 years.
What has led to the jump in just these in these last 3 quarters? Because the 10x jump is quite stark, Mr. Uday Kumar. So is that because of one particular customer?
No, it is having multiple customers.
Okay.
There are 2-3 large orders, but apart from that, there are a significant customers are there. And apart from these, we have also, if you see our previous records, we have also repeated customers, which is primarily around more than 80% of our business. So that is also keeping a customer very much trust on us, Omnitech. So that is allowing us to deliver the growth trajectory. I like to add in this we have a capacity to be built, and with the IPO prospect, we are able to deliver our capacity and revenue to the customer. That is also making us eligible. If we customer can trust on the deliver the large revenue numbers.
So, Uday Kumar, your net working capital has actually, inched up to almost 256 days at the end of H1 of FY26. Now, for FY25 levels, they were roughly at 283 days. So, it has been high for some time. Where do you expect it to go? Maybe post at the end of Q4 or Q1, if you can give us some perspective, where can we expect a reasonable number of days where you can fix this?
Yeah, see, historically we were around the 200 and around the range. But when we are expanding and when we are ramping up any of the customer and any of the segments, initially our working capital goes on the higher level, and that has shown some improvement into 280 days to 256 and like that days. And we are also observing and we are working religiously into the disciplined way into the organization excellence to improve that working capital. So we are very hopeful it will come down again.
To come down to Mr. Uday Kumar, what could be any quantification to this number for net working capital?
So, see, it again depends on the new, some of the verticals, what are the orders we are executing, but it will be improved. So exact benchmarking is pretty difficult, but if we see our historical numbers, we should be land near to that, but over the times.
Mr. Uday Kumar, we leave it at that. Thanks so much for joining and giving us perspective on your Q3 results, as well as what could be some expectations going over the next couple of quarters as well. But let me welcome in Mahesh Ojha. He's the VP Research Business Development at KC Securities, who's also joining in now. Mr. Ojha, thanks so much for joining in. I'm not sure if you have looked at Omnitech during the listing or post Q3 result, but a quick view on the stock.
Definitely, we are tracking the IPOs and Omnitech. It's definitely we have tracked. Omnitech, if you're looking from an Omnitech perspective, there is a large scale opportunity in the stocks for upcoming time. I think any investor who are having more than 9-12 month horizon, they can hold easily. But if you're looking from a IPO perspective, stock has done really one from 190 to 236. So any cool down between the 220 to 225 range, then again we can see some more buying opportunity. But if you are having a 9 to 12 month horizon, then you can see any upside trend. I hope that company can do very well in upcoming time.
View, Mr. Oja, but the IT pack, and we spoke about buzzing on the back of the recent update being a CLSA note. Now, what CLSA has specifically mentioned, and there you go, see almost a 1100 point uptake on the index that we are seeing today. There was a recovery of almost 600 points from the lows yesterday of 28,200. So you're seeing almost an 1800 point jump just in the last 2 days. And what CLSA has actually mentioned is that at this point of time, they find no evidence of increased deflation in the renewal contracts with its customers. So IT companies which are going to their customers, they are not seeing any deflation or reduction in price. They feel that the demand commentary for BFSI continues to be strong, but for the other sectors in the auto pack, in the healthcare pack, currently is remaining soft at this point of time, including retail. They've also said that few companies have flagged off slight delays in decision making by clients because they are on the sidelines looking at what new models Anthropic as well as OpenAI have been introducing. But the direct revenue flow from the Middle East currently is quite constrained in just low single digits. So you won't see an impact of the war, at least on the IT pack. Deal pipeline also remains strong. They maintained a high outperform rating essentially on Persistent as well as Coforge among a couple of stocks, and said that valuations are quite reasonable. In terms of the outperform ratings, the stocks on your visible on your screen right now are some of them: Infosys, Telecom, TCS, as well as LTM entry, while they feel a hold call on Wipro as well as HCL Tech is justified at this point of time. But Mahesh, anything in the IT pack that you like post the correction? Stocks like Coforge have slipped quite meaningfully in terms of PE derating. But would you agree with CLSA at this point of time? Is it a good time to buy some of those counters, and what would those be?
Definitely, if you're looking from an IT perspective, I think IT has done overdone. From my perspective, there is a lot of opportunity, and many fund houses started giving low P to IT stocks. But if you're looking from a TCS perspective, there is a high dividend yield TCS will providing. So from my perspective, if anyone looking from a IT perspective, then TCS will be preferred. Apart from TCS, Tech Mahindra, Coforge, and that are the preferred pick from our side. Our stand is accumulation from IT perspective. Yes, definitely it can take some more time, because after some clarification, after some dust settle, we can see some more upside in IT. But yes, definitely from these level, we are accumulation. We are advising our client for accumulation in IT stocks.
Okay, so accumulation in IT stocks is something which Mahesh is advising his clients. But moving on, Mankind Pharma stock is buzzing positively in trade. An important acquisition announcement has come in. To give in more details, joined in by Varsha here. Varsha, what are the key details for this?
Well, Mankind has acquired Rivotril, a brand from Roche for India. Now, what they will do that they've gained exclusive rights to manufacture, market, and distribute this product. And of course, the Rivotril, if you see, is a reference brand and is used in the CNS disorders. Now, talking about why this matters, this adds a strong portfolio or a brand with high specialist recall, strengthen Mankind's focus on a chronic and CNS therapy, and of course supports expansion of its neuro portfolio. And this fit into Mankind's push into a chronic segment through launches, and hence an important launch for Mankind, and hence you're seeing the stock is up almost 2%.
Thanks a lot, Varsha, for that. Just wanted to get in, Mahesh, your views on Mankind Pharma, especially on this important acquisition. It's also a GLP-1 play, and its domestic facing business is largely there. Your fundamental views on that?
This is a good counter for accumulation as well. But if you're looking from a medium-term perspective, I think some downside can't be denied from these levels. But if you're holding from a 9 to 12 month, I think a 2,500 level can easily come on these levels. And yes, stocks giving the fact that it's positive for stocks.
The other counter that we're also tracking is Varun Beverages. They're expanding beyond the carbonated drink market. Acquisition of Crickly dairy company of almost 131 crores is what they've announced. This one is an acquisition in South Africa and key for the company's diversification at this point of time. They've also diversified into valued added dairy as well as juice based drinks as well. So these are the new categories, and through its arm this acquisition has taken place. Now what's important is for calendar year 25, you can pull up the carbonated drink share. Now on a consolidated basis, it's at 59%, but for India, it's still at low 46%. So you're seeing the other geographies like South Africa, Morocco, as well as Zimbabwe having almost 90 to 100% share of a non-carbonated drink portfolio. And hence, you continue to monitor these acquisitions in the non-CSD space as it is known as well. In terms of its growth strategy, the company has mentioned and launched new products as well in the 10 rupee price bucket in India. So looking to increase that share from 46, as well as since it is also a low GST products now, the non-CSD share is at 5% versus 40% for the carbonated drink portfolio as well. So interesting acquisition at this point of time, Mahesh. But on Varun Beverages, post the correction, do you feel it's a good time to buy into this counter now?
This is a good buying opportunity is giving BBL from 510 level. This is corrected from up to 400 level. So I think stock has a really good upside in it. I think 500 level plus easily can come, but if you're holding from a 12 plus month horizon, then 600, 640 level can also come in these stocks.
Well, Mahesh, we leave it at that for today. Thanks so much for joining in, giving us your views across a whole bunch of stocks. But viewers, with that, that's all the time we have on this edition of Trending Stocks. That's from myself, Sharad, everyone who put the show together. Thanks so much for watching. Keep tuned in to NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
To understand the Tamil Nadu twist, join me in the midst of people, language and politics. Vanakkam Tamil Nadu, here we come.
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7, #1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company.
Three-day winning streak boosts the Lal Street sentiment as Nifty remains near 23,800. Broader markets outperform benchmarks. Most sectors, meanwhile, trade in the green, barring metals that lost some shine. IT, media and realty lead gains. IDBI Bank in the spotlight. Sources tell NDTV Profit that the Cabinet Secretary will hold meeting with Deepam and other key ministries next week. This as the centre remains committed to divesting its stake in IDBI by financial year 27. And major relief for flyers. Government has stepped in to curb extra charges on seats, mandates 60% seats to be allocated free of cost for seat selection. Passengers on the same PNR will also get seats together. Good afternoon. You're tuned into Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, a very quick look at the markets right now, and it's a testament to patience. Investors who are holding on should be smiling ear to ear, just like the market is right now. So when you talk about Nifty as well, it's hovering close to those 23,800 levels. About a 200-point uptick coming in for the Nifty. When you talk about Sensex as well, about a 700-point uptick also coming in there itself. When you talk about the list of sectoral losers as well as gainers, it's actually IT that is back in the spotlight as well. So is metals as well. When you take a look at the list of sectoral losers or sectoral gainers, in fact, barring one. So metals is the only sector that is holding on right now to a tinge of red at this point among the major sectors. IT, like I said, back in the spotlight, 3.5% uptick coming in there. Realty, auto, consumption, rural and bank, those are the sectors that are gaining exactly in that order. When you talk about the list of gainers as well, from within the Nifty 50 pack, it's no surprises there because it's Infosys, Tech Mahindra, HCL Tech, some of your IT counters that make it to that list as well. About a 3.5% uptick coming in for a couple of those, and about a 4% uptick coming in for Infosys and Tech Mahindra. When you talk about TCS and Wipro also making it to this list, Eternal, yet again 3.2% uptick coming in for Eternal as well, and something like a Bharti Airtel also holding up quite well. On the flip side, what's not doing well right now is Coal India with that 2.5% cut coming in, NTPC, Cipla, HUL, and even heavyweight HDFC Bank yet again down about 0.5%, not doing any heavy lifting for the markets. Same can be said about something like an SBI. And when you look at the broader universe as well, you're looking at something like a Solar Industries, Vedanta, Hindustan Zinc, and NTPC as well, that's on the back foot. So largely that's the kind of setup that you have right now when you talk about stocks as well. But let's also talk to you about the world of commodities. And if you have been perplexed of late in terms of the kind of bull run that you're seeing in some of these commodities, and if you're wondering why industrial metals are back in the spotlight, really snapping that sort of consolidation that we've seen for the last few decades, Let's get you a decisive voice on this. Let's get you some more insights to try and understand why you have been seeing this kind of bull run when it comes to the entire commodities complex as well. In fact, Naresh Kataria, who's a private investor, is joining us on the show. Mr. Kataria, a very good afternoon to you, and thank you so much for taking time out and joining us. First things first, it is actually a little perplexing for investors when they're looking at the entire commodities universe. After a decade of underperformance, you do have some clear evidence at this point in time that commodities might just be entering a sustained bull cycle. Is that something that you're looking at right now as opposed to a tactical rally?
Yes. So, hi Shreyansi, pleasure to be here. So, of course, there's a tactical tailwind from the war for commodities. Crude is up, aluminum is up because Middle East is a major supplier of aluminum and that's facing disruption. But I do feel that we may be in a structural commodities bull market. I think the last bull market peaked in 2011. 2001 to 2011 was the last major commodities bull market. And it's been in a sustained downtrend for the last 15 years on a relative basis. Of course, some commodities have done well. But if you look at either the commodities allocation to investors via ETFs, it's at multi-decade lows. What used to be 12%, all commodity ETFs combined, I mean, commodities ETF as a share of total ETFs was 12% at the peak in 2011, is now 3%. And unlike the last bull market in commodities, which was driven by the core industry, this time I think even the data center and energy transition themes are actually driving as a tailwind for commodities, I feel.
No, absolutely, and I'll come to that in just a bit. I also wanted to try and understand your thesis a little better when it comes to the entire bull run. If this is truly a new commodities regime that you're possibly looking at, is there anything that stands out to you in terms of a worry right now? What's the biggest risk that you see that could derail it right now?
Obviously, if the world goes into a major slowdown, which happened in 2008, it was amidst the commodities bull market, and then the world entered a major recession. And the entire commodity pack fell. Even gold fell 30% in 2008, for example. So I think the biggest risk could be the major derailment of world growth, which can, if the global geopolitical situation doesn't sort out, and let's say if crude goes much higher and it slows down world growth, that would be negative for commodities demand in general.
No, absolutely. And coming to something else that you alluded to as well, when you talk about aluminium, you're looking at supply risks rising, and you do have the substitution bit also kicking in. Is aluminium the most underappreciated trade in this cycle that you're looking at, and why does it make it to your list then?
So I think both copper and aluminium are having major tailwinds from the two major themes which are playing now. One is data centers, and other is the energy transition to solar. And everything to do with data centers is now or mostly driven by power. Whether you need power to drive the data centers, or whether the underinvestment in the grid which has happened worldwide, or the energy transition theme where you need a lot of aluminium and copper for transmission generation. I think all of it is driven by copper and aluminium. Why I talk more on aluminium and less copper is India is more endowed for aluminium. We have complete backward availability of bauxite and power, while copper we are not so well endowed. And the beauty is both copper and aluminium go together. If you see the long-term chart, both go pretty much in tandem. Of course, the rate of growth can be different, and that's one theme which I think what I have practiced it is whenever copper aluminium ratio goes above 4, currently it's about 3.75. Whenever it goes above 3.75 or 4, the substitution kicks in from copper to aluminium because some part of the demand is fungible. So I think everything related to data centers, energy transitions, and power has copper and aluminium tailwinds, and I would rather play aluminium because India is very well endowed for aluminium companies.
No, absolutely. That is the entire bit on aluminium as well. Just getting back to what you said about the data center boom as well as copper, how are you seeing that tailwind really emerge? And do you think right now as things stand, do you think that investors might just be underestimating that part right now?
The total announced capex, data center capex by the US hyperscalers, which was running at about $200 billion per annum 2 years back, is expected to be $700-800 billion next year. Bulk of it will go in chips, and then the second biggest demand will be on power, whether it is backup power or whether it is everything related to or to just run the data centers is going to consume a lot of power. So I believe, unlike the dot-com boom, when there was an ongoing boom for metals and commodities in general, this time the data center boom itself is a major driver for commodities and in general non-ferrous metals.
No, absolutely. And are there any other trends emerging when you talk about industrial metals? Because they seem to be coming out of a little bit of a multi-decade consolidation, if you will. How are you looking at that entire bit play out?
So if you look at CapEx, I think that's one of the best drivers to long-term cycle. So PwC comes with a mining report, which has been coming out for 20 years. So they give the annual CapEx, and the beauty is CapEx lags commodities, because as commodities go up, more CapEx comes out. And last time the CapEx peaked at about, this is for the top 40 companies. So PwC has a report to track commodities CapEx for the top 40 companies. And that peaked at $130 billion in 2014, after the commodities bull market peaked in 2011. We are not even there. We are still below that $130 billion amount, which is the last report was 2024 CapEx, 88 billion. And I think the bull market, as even just looking at the CapEx, looks like having long legs, because we are underinvested in commodities in general. And added tailwind is that for everything related to data centers, energy and energy transition, you need more non-ferrous metals.
No, absolutely. And if you're just tuning into the program, viewers, you should be listening to that advice and really trying to turn that investment also up, take a closer look at some of the data trends also that we've pointed out for you right now. But I also wanted to get the monetary policy bit also into the conversation. What do you think about the current monetary policy action across the globe, and how that also really acts as a tailwind or not right now when it comes to this commodities bull cycle?
I like to look at macros which have a lead value. Most macros have concurrent value, but I think we get lost in those macros. So if you track the monetary policy stance of all major central banks, they have been in a rate cutting spree for the last 1.5 years. They were on a rate cutting spree post-COVID, tightened, but last 15-18 months, they've been in a rate cutting spree. And those rate cuts lead the commodity cycle by 15 months. So even that positioning, I believe, is favorable for commodities. And obviously, we have now the demand tailwinds from AI, data center, energy transition, and the underinvestment in CapEx. I think it's overall adding to a good mix. Of course, different commodities will do differently. But in general, I think the commodities basket is telling us good stories. Several commodities are at all-time highs. Commodity indices are at all-time highs. The refining ETF in US is an all-time high. So I think commodities are giving a signal that probably there's a change of regime ongoing right now.
Absolutely. And do you think that it's still early stages when it comes to this bull cycle as well? Because you do, like you pointed out, have about 35 banks thereabout also cutting interest rates. You do have a bunch of triggers that are yet to play out. When you talk about gold particularly, and we'll come to the detailed part of the conversation when it comes to gold a little later, but when you just talk about gold as well, lower interest rates, in fact, increase the opportunity cost for something like gold and the sister metal silver then. So how are you then looking at the point where we're placed in this particular bull cycle?
As of now, actually, there are temporary tailwinds, further tailwinds which have emerged, and I don't know whether they're sustainable because war has led to an increase in crude oil, aluminium, and petchem prices. So I think that's a temporary tailwind, and it may go if war were to subside. So I would just be careful. For example, aluminium is up 15% since the war started. Copper is flat. Because copper doesn't have any Middle East supply, aluminium is supplied, about 8% of global supplies from Middle East. So I think there are some tailwinds which have come, or some temporary bump ups have come. I would just be careful to discount that if war were to end. But yeah, I think the larger bull market is on. And coming to gold, it's been in a bull market since this leg of the bull market started in 2022, when Ukraine war started and US froze $300 billion of Russian reserves. I think that was the key trigger which lit the gold bull market, because people are, or at least the central banks are wanting to diversify away from gold. I believe that is on because the global geopolitical setup for reserve currency is very volatile, very untrustworthy from a central bank perspective, various countries. So if I were a central bank, I would look to de-dollarize. I would look to hedge my central reserves via having exposure to gold. But if you see how gold behaved just at the start of the Ukraine war, gold actually consolidated for some months before taking off, because when a war starts, there is a frenzy for liquidity, which has happened now. Most risk assets had come down and dollar went up. Gold also has corrected a bit or has consolidated. But looking at the longer cycle for de-dollarization and diversification away from USD, I believe that gold's bull market is on and may just consolidate for some time.
No, absolutely. And I believe that a lot of investors in the gold market also agree with that bit of de-dollarization as well, echo the same sentiment, because that has been quite the driver when it comes to the year 2025 as well. But right now, when you zoom in on gold as well, Mr. Kataria, it's not been behaving like a classic safe haven asset, if you will. So do you think something has structurally changed here in terms of how gold really trades?
So, yeah, I'll keep my ears and eyes open because gold is a large asset. It's a $30 trillion market cap, all gold combined, because all gold mined is mostly still there. It doesn't get consumed. It's a very large asset class, but it is still, I think, under-owned in financial portfolios. The total holdings in gold across all US portfolios is probably 1% or lower. India, of course, owns a lot of gold. Indians own a lot of gold. So, but yeah, I would wait for, if there was even within the larger bull market in 2001 to 11, gold corrected 30% in 2008 because there was economic dislocation. So I would just, I think, be prepared for consolidations, corrections in a larger bull market. But I believe gold's bull market is very much on.
Absolutely. And very quickly, before we let you go, quickly just wanted to get a sense of what you think about everything that is playing out in terms of oil as well with geopolitics. How much do you think, is a genuine demand supply imbalance, or how are you looking at oil right now?
Yeah, it's anybody's guess because it depends on how I think this Middle East crisis plays out. And that's a point of vulnerability for India. So what we have modeled on a quant basis is that if crude is already 100 and it's up 50%, whenever this has happened in the last 20 years, it has not worked out very favorably for Indian small caps in the coming 3-6 months. Of course, crude's importance to Indian economy has been slowly coming down, as Mr. Ridham Desai has been saying often from Morgan Stanley, that crude's impact on India's fisc, India's current account has been gradually reducing. However, crude still is a very important part of a lot of things which happens into India. So on where crude can go, is there just too many levers at play on how the war ends and how China and Russia look at it in terms of what they want, what is in their interest. Obviously, in Russia's interest to let the war linger so that it keeps bad for them.
Right, no, absolutely. And that is something that we're yet to see completely play out as well. But thank you so much for taking time out and joining us. So there you go. That's the entire outlook as far as aluminium is concerned, the data center capex story is concerned, and commodities being at the start of a bull cycle is also concerned. But with that, completely timed out on this segment. See you on the other side with more news and updates.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
To understand the Tamil Nadu twist, join me in the midst of people, language and politics. Vanakkam Tamil Nadu, here we come.
Delhi, the greens are ready. The contest, the intensity, the energy. Where the finest pros of golf, Meet the pros of business. NDTV DP World PGTI Golf Pro Am, the course of champions, the conversation of leaders. 21st March, Kotab Golf Course, Delhi. In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. #1 on YouTube. NDTV Network, streaming India's trust. Leading India's conversations.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice. The latest trends. It's a lot simpler. We'll help people.
Welcome back. Thank you so much for staying tuned in. Well, if you've been tracking the updates as far as the LPG supply crisis is concerned, there's some good news for you. Another Indian flagged oil tanker named Jug Ladki carrying around 80,800 metric tons of crude oil reached Mundra port in Gujarat after completing its journey from the UAE. In fact, Paras Tama is bringing us the latest when it comes to this one.
It's between America and Iran where the war is continuously on, and the main route, sea route, which is affected is the Strait of Hormuz, where every day lakhs of vessels travel and carries LPG, crude oil and many things for many countries. In that, India is also a very important part, where India also use Strait of Hormuz sea route for their LPG and crude oil. With the help of the diplomatic channels, in few days there are few vessels which has passed the Strait of Hormuz and came to India. The first ship carrying crude oil came to Mumbai. After that, Jamnagar port and Kandla port in Gujarat, and the third vessel in Gujarat has come today at 3:15 a.m. near Mundra port, probably 10 to 15 nautical mile away from here where we are standing right now. This is on my right, it's Mundra port, you can see that, and from Mundra port there are 10 to 15 nautical miles away. This whole vessel has come. It's Jug Ladki vessel which is carrying 40,000 metric tons of crude oil, which is very, very crucial for India in a situation like that. Right now, there is no problem right now of LPG and the crude oil as per the government, but as a precautionary measures, every diplomatic channel has been opened by the government, and we can see the results. The vessels are coming continuously, and it will be very important to see now what will happen next, how government will go on this particular particular issue and how this diplomacy will work further for India, as this many vessels has been coming in the different part of the country, and now the one vessel which came 3:15 a.m. in the morning, Ladki, has been docked inside the deep sea, 13, 14, 15 nautical miles away from the Mundra port, and now the process of discharging the crude oil will be started soon. It has been docked over there. 2 ships will be sent to the vessel and doing all the processes over there. Both the ships which will be gone from the Mundra port will reach the vessel. Discharge process will be started, and after the discharge will be done, these 2 ships and the crude oil will be sent to the different part of the country. So it's a sigh of relief for India, and more vessels is expected as per the sources.
A sigh of relief indeed. Paris, thank you so much for getting us that bit. So there you go. Ladki is in the Indian ports as well after the diplomatic channel was opened. But moving on then, at a time when drones are increasingly associated with conflict, you do have Bengaluru that is using the same technology to transform healthcare delivery. You are talking about a startup right now, Airbound, that is in partnership with Narayana Health, successfully piloting drone transport when it comes to blood samples across the city, has completed over 700 flights with 0 failures across nearly 2 months. In fact, Dr. Devi Shetty, founder and chairman of Narayana Health, has been closely involved in the initiative. My colleague Deepak caught up with him about this project that could take healthcare logistics to the skies. Let's go across and listen in.
Usually I would see you, in the hospital and have a conversation with you about some cardiac surgery that you've done or something to do with healthcare, but there are drones behind you. And the reason is that you've decided to now use drones instead of across the world. We're looking at a very destructive purpose why drones are being used. But today we're talking about drones being used to save lives. Tell us how you're partnering with drones to really ensure that healthcare reaches everybody, becomes accessible and cheaper.
We are in the process of building 4 or 5 new hospitals in Bangalore. And these hospitals are smart hospitals where only the people who are going to touch the patient are going to be there in scrubs. All the others will be working remotely. All these hospitals are smart and paperless. And these hospitals, one unique thing is they won't have a lab to do the blood tests, or they won't have a blood bank to store the blood. So all these services are supported by Airbound, which is the drone company, which takes the entire logistics by sky from the small hospitals to our big hospitals in Electronic City. And by doing it, we believe that the cost of healthcare will go down dramatically. The time taken for the blood testing and the results coming will go down dramatically, and patients will have the results in no time.
All right, and that's all that we could pack for you on this edition of Lunchtime Trades. Thank you so much for tuning in. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Delhi, the greens are ready. The contest, the intensity, the energy. Where the finest pros of golf meet the pros of business. NDTV DP World PGTI Golf Pro App, the course of champions, the conversation of leaders. 21st March, Kotab Golf Course, Delhi.
To understand the Tamil Nadu twist, join me in the midst of people, language and politics. Vanakkam Tamil Nadu, here we come.
In a month that moved markets, shifted diplomacy,
the entire world.
and stirred political battlegrounds. India chose its news carefully. NDTV India and NDTV 24/7. #1 on YouTube. NDTV Network, streaming India's trust. Leading India's conversations.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it mattered.
Welcome to NDTV Profit. My name is Varsha. Well, Powera, which provides or offers a comprehensive range of generator sets, is set for an IPO. The IPO date starts from 24th March and ends on 27th March. The total issue size of this IPO is around 1100 crore, out of which fresh issue comprises of rupees 700 crore. But to speak more about the IPO and what are the utilization of funds and what are the growth targets ahead, I'm here joined by Mr. Bharat Oberoi, who's Chairman and Managing Director at Powera, and Pradeep Gupta, who's whole-time Director at company. Welcome, gentlemen, at NDTV Profit. Pleasure to have you. Let's start with you, Mr. Oberoi. Just wanted to understand in simple language and in a quick way the business model of Powera.
Varsha, good morning to you and to the viewers. As you said, you want to make it very simple. So Powera has two main streams of lines of business. The first being the diesel generating part, where we have our associations with Cummins and Hyundai, up to the range that Cummins does in Hyundai, and above that, whatever Hyundai we get from Korea. The other one is the wind space. We've been in the wind space for about 12 to 14 years. We do both IPP and EPC work for the grid, mostly the government grid in Gujarat.
Understood. And on the utilization of fresh issue, I think that fresh issue comprises of 700 crore. What are the capacity expansions that company will do? What are the utilization of these funds, if you could, highlight us?
Yeah, so fresh issue we will be first utilizing for the repayment of the term loan, and thereafter we will be expanding our wind business as per the pipeline what we have developed in our company.
Understood. And also, Mr. Gupta, wanted to know the current order book and the execution timelines of the same.
So currently we have our installed capacity of 330 megawatt and 50 megawatt is under construction, which is likely to be completed by June 26. And thereafter we recently won 100 megawatt wind power project of GUVNL. And we have a total pipeline of 250 megawatt, out of which 100 megawatt we will be executing under the bid which we won from the GUVNL.
Understood. And Mr. Oberoi, considering the increasing electrification and of course the battery storage, do you see DG sets becoming obsolete? Any risk over there?
Absolutely not. These discussions have been up with on many seminars. So we have the battery storage coming up, but will it impact DG sales? We don't see that, at least. From my point of view, not at least for the next 15-20 years. A backup of DG power will always remain.
Also in the renewable sector, as per the CRISIL report, by 2030, I think the battery is going to take almost 5% of the total renewable energy storage. So if suppose Government of India has set the target of 500 gigawatt of the renewable target, 500 gigawatt of renewable target, in which around 25 to 30 gigawatt will be the battery support for the energy storage. So it's going to be only 5% of the battery support in the total RE basket of 500 gigawatt. So wind, solar is going to be the dominant player by 2030, and battery will also support for different type of projects like RTC power and wind solar hybrid along with the battery. But batteries support will develop, but it is going to be the slow process in the total RE basket, about 5 to 6%.
Well, you're watching the Small Cap Show. Now, what's on the show today? Firstly, we'll be speaking with the management of Regal Resources. Now, they have announced that they will be doubling their capacity by the end of this financial year. What could be the uptick that we could see post this doubling of capacity is something that we'll get to know from the management today on the show. Valiant Organics, that stock, if you see, the stock is up nearly 10% in the last 5 trading sessions, and if you look at the volumes, they are nearly 11 times the 20-day moving average. Thirumalai Chemical, that stock has also been buzzing in the trade. That snapped its 4-day losing streak. The company is building a new capacity, so something that we need to watch out for. And lastly, when it comes to Root Mobile, that stock has also snapped its 4-day losing streak. If you look at the volumes, they are nearly 11 times the 20-day average. So that's what we are going to discuss on the show. Now, if you look at the market, the Nifty is up nearly 240 points in trade. It is trading comfortably above the 24,800 level, around 24,827. If you look at the sectoral indices, this is the Nifty IT, which has been leading the gains today, and followed by Nifty Real Estate. While on the losing side, none of the sectoral indices are in red, but Nifty Metal has gained the list, just up 0.1%, followed by Nifty FMCG, which is also up just 0.2% in trade. But Varsha, when it comes to the small cap space, what's been buzzing here?
Well, Soumit, a lot of stocks are buzzing, but this is on the back of volumes, higher volumes. So you have, Confidence Petro, which is buzzing. The volumes are at 2 times of its 30-day average. You have Valiant and Thirumalai buzzing at volumes of around 10 to 11 times. You have Sindhu Trade also, the stock is up. Again, strong volumes is being seen when it comes to Sindhu Trade. Then NPST and Universal Cable is also up. For Universal Cable, if you see, the volumes are at 4 times of its 30-day average. There you go. NPST is up 13%. Universal Cable is up almost 10%. On the loser side, though, you have Bajel, you have Sadbhav Infra and Oil Country, which are on the losing trend. So a lot of stocks are actually buzzing, but all on the back of volumes. But moving on, Regal Resources is one stock which is in focus now. If you see, it's a recent IPO. The IPO had come in August 2025, and companies doubling their capacity. But to speak more about the numbers and what lies ahead, I'm here joined by Mr. Anil Kishore Puria, who is chairperson and Managing Director at Regal Resources. Mr. Kishore Puria, welcome at NDTV Profit, and always pleasure to have you. Let me start with the capacity. You're doubling the capacity. Just wanted to understand what is the peak revenue expected and what are the timelines, if you could highlight us.
And for 25-26, we will be talking a turnover of about 850 to 900 crores. From here, we are doubling the capacity, so you can calculate, of course, if this was a turnover, now we are 1650, so what would be turnover? And along with the doubling of capacity, we're getting into a lot of derivatives. So that will add on to our turnover, further turnover, and of course to the bottom line. value-added products, basically.
Also, sir, if I were to talk about the value-added products, that's the key trigger, that you are concentrating on. But the value-added margin decline in Q3 due to higher maize trading contribution. When do you see it coming back? And what is the value-added products target contribution that you're expecting, maybe in FY27? And what's the current contribution as well?
Then what we are planning to do is, whatever additional capacity we'll be doing in producing starch, we want to ultimately convert into the value-added products. So that will give a big boost to the bottom line. Liquid glucose, maltodextrin powder, dextrose monohydrate, and dextrose anhydrous, and a basket of modified starches. And now the prices of maize have really come down, has softened. So going ahead, I am thinking, and that's what our expectation is, that the margins will improve than what the margins was for 25-26 because of lower cost of revenue.
Okay. Now, as I can see, in the last 12 months, you have done a revenue of close to 1,150 crore. In FY25, you did a revenue of 915 crore. Now, you're talking about doubling your capacity. So, where does this revenue number stand for the next full financial year, that is FY27, and what kind of margins can we see with increasing operation scales?
So, margins will, of course, be like last year we had about a production EBITDA was about 13.5%, and of course, with doubling the capacity and doubling the sales and revenue, so we will of course be much better off because the fixed cost doesn't double what it is at the moment. So the EBITDA margin will of course increase, and with the value-added products, it will give a boost to the bottom line. So it will be, I think, so it should be quite a bit. I really cannot tell you the exact numbers, for 26-27, but it will be in a much more better situation than last year or the current.
Right. Can you just tell me what is the utilization level right now, and do you actually have that much orders in hand that even after doubling the capacity, your utilization will remain at that level?
We practically are using 100% utilization. Practically, it's 98 or 99%, and of course, doubling the capacity. So we are getting new products. We are not making starch from the double capacity. We are adding on to a lot of new products based out of starch. So some part of starch will increase and a major part of value-added products will increase.
So are you confident that your revenue will also double, not at least in FY27, but at least by FY28?
No, I think so. By FY27, we'll be able to achieve that, what you just said. And of course, that's have been our main USP, our main strength point, that we have always, since inception, since 2018-19, we have always used practically about 95 to 100% capacity that we use every year.
One thing I wanted to check, during the IPO, I believe you raised 159 crore for debt repayment. But yes. I might be wrong, but can you just clarify, your debt amount has still not reduced. So is it that you will be paying this amount at a later stage? How does that work?
Our debt amount has not reduced because the doubling of capacity is about outlay of about 450 crore rupees project costs which we are incurring. So for that, debts have been raised. Because of that, new debts which have been raised, you can see that the debts have not reduced, rather it has gone up a bit.
Also, lastly, the export contribution, sir, has declined to 4% from 7%. Any reason? And of course, the long-term target that you have when it comes to the export contribution, what do you want to take that number to?
And as a strategy of the company, a strategy of the management, we were never an export-oriented unit. We never had a thrust over export. I always believed in having a domestic market more than the export market, because the export market is again because of the other factors of China, Thailand, of these. It was guarded by those factors, which I thought that domestic will give us a better return, and that is the whole thing. Domestic has always been good for us, and that is why we have been having a better profit bottom lines for this. But now with new products coming in, maybe our export increases. Maybe we give another thrust for exports.
Right, and also you continue to procure maize even, beyond immediate needs to build that farmer relationship. Where do you see, or how do you manage your inventory and price risk? If you could, update us on that.
Ma'am, we are procuring, we are one of the plants which are procuring materials straight from the farmers in our area, because Bihar being one of the, maize being one of the major crops of Bihar, especially where the plant is located. So we try to procure the entire material and we store it in our godowns, in our silos, in the factory and outside the factory, which of course gives us a gain if later when the prices, off-season prices increase in Bihar, because Bihar is in Rabi, and for Kharif crop, Bihar doesn't get maize from the farmers. It gets maize, either the stored maize or the maize from outside the state, from the states which are growing maize in the Kharif season. That is from September, October on.
Well, thank you so much, Mr. Kishore Puria, for answering all the questions, and all the best for your business. Thank you so much. Well, that was Regal Resources, expecting a strong growth. But let us invite Lancelot Dicuna, who's the CIO at ValueX Wealth Connect. Well, Lancelot, you heard the management of Regal Resources. They're expecting doubling of revenue by FY27. Do you track this counter, and what are your views? What should investors do?
So, when you look at this counter, they are operating at 90%, 93%, 94% capacity. And the net margins are around 13%. So if one has to increase the capacity, I think it will take a while before, while there may be an increment at the EBITDA level, I think the profit after tax level will also take into account some amount of interest cost, some amount of depreciation on the new plant. And also sometimes it may take a little bit of time for this plant to generate capacity at the same level, and stabilize same level. So one cannot, extrapolate it that, okay, this year, because the capacity is doubled, next year it would be automatically doubled. Even if the, turnover jumps significantly, there would be expenditure as well as depreciation, additional depreciation on the plant that would have to be debited before you arrive at profit after tax. And given that, earnings growth may not be double, but definitely looks exciting. You can expect maybe 20-25% earnings growth or 30% earnings growth in the next year or two. And that would mean some amount of re-rating, because the stock is trading at a relatively lower valuation. And once this certainty of the profit growth is seen in the market, then the price would move up accordingly.
Right. Shifting focus to Thirumalai Chemical. Now that is an interesting counter. At one point of time, the stock was up as much as 20% in trade. Its biggest intraday move that we have seen since June 2022. And this is largely on the back of strong volumes. Volumes are now nearly 20 times its 20-day average. Let's get in part to understand what could be the potential reason behind this up move in the share prices.
Yeah, thanks. So Thirumalai Chemicals is in focus today, and there's a very interesting thing about the company. What they're doing is they're building a new 40 KTPA chemical facility in USA, and the good thing about it is that the raw materials required for this facility are located within just 70 miles from the plant. So this is expected to save some transportation costs for the company. This USA facility is expected to reach 40% of their North American market, which is located within that 1,000-mile radius. This project's payback is expected to be reached within 7 years of operations, and the operations will be stabilized by the mid of this year. If we have a look at the stock performance, then yes, the stock has rallied more than 15% today, but in the recent past, the stock has witnessed some downside pressure. The shares are down more than 10% in the last 1 month. The prices have fallen sharply by 40% in the last 6 months, and year to date, the stock has already fallen 20%. If we have a look at the key takeaways from the last quarter, then they have said that the global chemical demand is on the weaker side, with utilization levels running at 70 to 75%. The housing market slowdown in China has also impacted the demand of some of the chemicals that the company produces and exports. However, the transition of their Dahej plant into a gas-based energy has yielded some benefits for them, and better operations in their Malaysian business has also helped them offset some of the cash losses.
Okay. Thank you for that, Parth. Lancelot, Tirumalai Chemical, have you looked at this counter? It has been under pressure. In fact, all the chemical stocks were under pressure. But at the current valuations, do you think it's a right buy?
So, the company has been making losses in the past 2 years and has taken some steps to mitigate or reduce the amount of losses. But still, it still need to be seen, because whatever facility they are setting up in the US, you have to start getting profits from that, and that will have to offset some of the losses that are being incurred in the domestic business. So I think it's very premature to decide that whether this stock is really going to do well or not, because the company is still not making profits, and the road to profitability is lined with a bit of uncertainty. So it's better to wait to see, let the company come into profitability, then one can accumulate the stock as an investment. Otherwise, till that time, it is more of a hope that we are expecting that it will come into profit, but it may not be backed by fundamentals.
Well, moving on, Root Mobile is one stock which is in focus. Let's pull up that stock. The stock is up almost 10% and snaps 4-day losing streak. But what are the growth triggers ahead and the growth prospects ahead? For that, let's bring up Puneet. Puneet, what are your views when it comes to Root Mobile? What are the growth triggers?
Well, thank you for that. Volumes up 11 times the 30-day average for this particular counter. Stocks also up 10%. And very interesting, because stock's been down 36% since the start of the year before today's move. So has been one of the key ones, breaking its 4-day losing streak as well. What's important is the three key aspects about this one. Now, Q3 was largely weak on volumes of the international long distance platform for the company as well as segment. In Q3, they had specifically mentioned that while the revenues were largely stable, this segment has been continued to weaken over the last few quarters, and Q3 was no different. There's been a consistent moderation in the ILD volumes, and Root Mobile alone contributes almost 50% market share in the ILD volume space, a market that's been declining. So hence, there has been pressure on earnings as well as on the stock at this point of time. What's also interesting is that while Q3, realization was the other aspect that dipped as well, because of the billable transactions, which were flat quarter on quarter, and hence roughly not translating into revenue growth. But the margin story is also something that could be one of the triggers in terms of today's move as well, because management has mentioned that the gross margins were up almost 243 basis points in Q3, just on a quarter-on-quarter basis. YOY also the performance improved. Retention of the high margin traffic from the existing clients was one of the reasons touted by the management for this, but they specifically mentioned that telco and enterprises business will be something that will be a big margin trigger going forward. They've specifically also, brokerage from Nuvama has a hold with a target price of 630, which is a substantial upside from these levels as well. They continue to mention that ILD volumes will be a downtick, but they feel that the new business segments within the OTT could be some competition, but something to watch out for as well. So that's largely the bit on Root Mobile. A lot more triggers and things to watch out for in Q4 as well.
Well, thank you so much, Puneet, for all the details. Lancelot, after today's move, what are your views when it comes to Root Mobile? Because Nuvama is still bullish considering today's move. So what should investors do?
I think one should wait a while, because if you look at the business of the company, the segments that it is in, which is the long distance calling, these segments are declining. Yes, there may be growth on the OTT side, or there may be growth on the streaming services side. But if you look at its core business, which is the long distance telephony, that has been declining. And if you consider that, look at even the last 2-3 years, sales have been relatively on the flatter side. So right from 23 to 24, it's been approximately 3,500 crores to 4,500 crores. And profitability is also marginally down compared to the previous 2-3 years. So I think one needs to wait and see how this whole thing is playing out, what kind of earnings growth we can see and what kind of visibility we can see in the earnings growth before making a decision as to whether this can really generate that kind of returns over the next 2 to 3 years.
I got that point. Well, thank you so much, Lancelot, for joining this conversation. Always pleasure to have you with us. Thank you so much. But moving on, Valiant Organics is one stock which is in focus. Let's pull up that stock. The stock is up 20%. Well, just a little bit more about this company. This company focuses on high specialty chemicals, which were previously import dependent. They have diversified customers, which reduces dependency on in any one industry. Onto the operational highlights, the gross margin, the Q3 operational highlights, the gross margins were up 500 basis points. Improved pricing discipline and cost efficiencies have led to operationally a better performance for the company. Turnaround from the last year losses. Q3 was though impacted by pricing pressure plus softer demand. Onto the continuing for the Q3. How was Q3? There was a fall in revenue which was led by lower prices, but EBITDA improved due to better control efficiencies, and PAT was lower because of weak demand, and there was a one-time insurance income which helped profit. Lastly, if I were to talk about the key strengths for this company, well, they have very diverse product basket, reducing risk. They have strong domain knowledge, wherein 50 years plus combined, and they have integrated plans, faster scale up and flexible production, which will help for further growth. And the plants are located near ports, which means lower logistics cost for the company, and long-standing global plus domestic customer relationships. So these are some of the key triggers, when it comes to Valiant Organics, which is up almost 20%, but the stock is, buzzing on the back of volumes, I would say. But yeah, Q4 and FY27 may be on a good terms when it comes to Valiant Organics. So this is all when it comes to a chemical maker. But viewers, this is all the time that we have on this edition of Small Cap Buzzers. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
Delhi, the Greens are ready. The contest, the intensity, the energy. Where the finest pros of golf meet the pros of business. NDTV DP World PGTI Golf Pro App, the course of champions, the conversation of leaders. 21st March, Kotab Golf Course, Delhi. In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. Number 1 on YouTube. NDTV Network, streaming India's trust. Leading India's conversations.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mystery
anymore. This is all about connected ecosystems, EVs, and AI that you can use.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, the afternoon edition. My name is Puneet Zaveri, and over the next half an hour or so, we'll try and solve all your stock-related queries. So if you haven't already, do start sending in your queries on the number that's flashing on the top of your screen. That's for WhatsApp. You can also call us on the landline number and speak to us directly, as well as to our guest for your stock-related queries as well. Before we do all of that, very quick check of how the markets are doing, because it's been a strong day. For the markets, we are above the 23,800 levels at this point of time and building on to those gains. So the last hour and a half for the trading session becomes crucial at this point of time. When you look at the heat map for the Nifty 50, IT as a pack has been a big revival in that sense today, because you've seen stocks like Infosys, TCS, largely continuing that momentum. You're also seeing Geo Financial today actually up almost 4.9%. So it's the biggest gainer today for the Nifty 50. But there you go, the top 5 to 6 names in the IT pack. Eternal continuing that buying momentum yet again from the last couple of days, and so is Mahindra and Mahindra. So only a handful, 8 to 9 stocks in the Nifty 50 that are down today, but largely a positive day nonetheless. When you look at the advanced decline ratio, that has been the other key factors. In the morning, almost 7:1 favoring the advances, and that momentum has continued and increased as we've gone throughout the day. So that's another key positive at this point of time. And in terms of the mid cap and the small cap, we've been seeing mirroring of the performance from both those indexes. What's interesting is today, the mid cap and the small cap both up almost 2%. So growing at 2x the benchmarks in terms of stock price performance. And the BSE 500 shows you these individual names where we've seen these individual momentum not being made as of now over the last 2 to 3 days. But JVM Auto up 17% almost at this point of time. So is MMTC, a very volatile counter, I might add. But Teamlease, Trident, CSB Group, as well as Root Mobile, I spoke about Root Mobile in the 130 show as well, are some of the other gainers. But let me welcome in Mr. G. Chokalingam, founder and MD of Economics Research on the fundamental side at this point of the show. Akshay Bhagwat, as always, Senior VP, JM Financial on the technicals as well. Gentlemen, to both of you, thanks so much for joining in. Let me go across and straight take the first query. It's a recent listing, Bharat Coking Coal. And our viewer, Prakash from Hyderabad, is actually holding shares at 36 rupees. Mr. Chokalingam, I know it's a recent listing, but Do you have a view on the stock? He's almost holding 5,000 shares at this point of time. What should he do?
Oh, it is fairly priced. If you look at FY25 net profit and even for last 9 months net profit, EV to EBITDA also, it's a fairly priced at current price. But tactically, it can move to 40 rupees because of this ongoing war, which is favorable to oil, apart from oil, also to coal and thermal coal as well as coking coal. So quite possible to get around 40 rupee target.
40 rupees as a target could be something to watch. We also have another IPO from the Coal India staple opening up on March 20th. So continue to monitor that as well. The other key counter that we are focusing on, and the next question coming in on, this one's on Coforge. Now, our viewer M Kapoor holds shares at 1493. He's holding a limited quantity of 10 shares, but asking what he should do with this counter now. Akshay, welcome to the show. Is the momentum seen today having some more legs at this point of time? Could the move continue on Coforge? What should Mr. Kapoor do?
Yeah, good afternoon. Well, it's a very strong rebound which we are noting in the IT sector, and this rebound comes after a pretty long or a sharp fall which has pulled on for pretty long. So for Coforge especially, I think technically the chart is still weak because we had a breakdown of the levels of 1250 few trading sessions back. So this rebound anywhere around 1200 to 1230 should be used as an exit opportunity in case you are stuck at higher levels.
So take this move and exit is what our technical expert Akshay is recommending at this point of time. Flying through in trade is Coforge. The next question coming in is on HBL Engineering. Now, Padma Reddy from Hyderabad is asking us this question. Holding shares of at almost 942 rupees per share, so currently sitting on a meaningful loss and holding 238 shares. Mr. Chokalingam, do you track this counter? Is it a advisable time to average down at this point of time?
I would give a hold recommendation. Stock has already corrected a lot and trading at a reasonable valuation of 23 PE on a trailing basis. Management also I keep tracking for nearly two decades, a very decent management and a decent balance sheet. And therefore, one can definitely hold it. In case it declines even 5%, then one can start accumulating.
Another 5% decline to start accumulating is what Mr. Chokalingam recommends. But the next question coming in right now, it's on CDSL. Our viewer, Arvind from Mumbai, actually wants to have a quick view of for the next 1 year. Mr. Chokalingam, given the correction from the highs of almost 1900, is it a good time to buy?
Certainly, yes. It's a fabulous stock. The risk in this stock is only the time, so the investors may be punished for, in terms of waiting for a longer period. But fundamentally, there is no doubt at all because there are only two players in the industry. And this is a perennially growth story, depository business, because the capital market will keep, growing. And every week, even now, 6 to 7 lakh new investors are coming and registering on the BSE platform, which is positive for CDS. It's stock to buy, in my view, for medium to long term.
Got that view, Mr. Chokalingam. But let's go across, take our first caller from today from Delhi. Anish has a stock query for us. Anish, very good afternoon. Welcome to the show. What's your query?
Yeah. Sir, I wanted to ask, is it the right time to invest in Geofinancial or grow Billion Brains for the short and medium term?
For the short and medium term. So would that be the next 6 to 9 months, Anish?
Yeah.
Okay, got it.
5 to 9 months.
5 to 9 months. Okay, got that view, Anish. But Akshay, would you recommend buying into Geofinancial at this point of time for the next 5 to 9 months is what Anish is asking.
The only positive for Geofinancial, I think, is the much expected IPO, and technically there is some room for the downside till 210, which is a massive support. So if you're planning to buy from 6 to 9 months, I think you should go in two tranches where you buy the current levels, the first tranche, and leave some for the second tranche in case it dips around 220. Roughly, I'm looking forward for targets around 290 to 300 within that time horizon.
290 to 300 is what Akshay recommends as some of the key targets on Geofinancial. The next one's question is coming in from Abhijit from Kolkata. It's an interesting one. Mr. Chokalingam, he's asking if it's what would be a good time to enter HUL as well as Asian Paints over the next 2 years, and what could be sort of the growth CAGR essentially is what he is asking. Is this the time, Mr. Chokalingam?
If somebody is holding, one can hold. But personally, I would not recommend buy on both of the stocks because Asian Paint, there are two problems now. Right now, in the short term, all of us know the oil price has jumped nearly 50%. So it is going to hit the margin for paint companies. Secondly, the medium to long term problem is that the entry of two new large industrial houses in the paint industry. The proposed capacity is half of the existing capacities. Therefore, I would not buy. I would give best hold. Similarly, HUL, I think the FMCG entire space is struggling for a double-digit growth. The volume growth is likely to be only in single digit. So therefore, I would give hold for both. If at all one wants to, have a very high conviction within, the Nifty Sensex stocks, one can even consider, the growing sectors like banking and therefore stock like SBI. And even Coal India, which is going to be beneficiary of this ongoing war in the short term. Long term also, the renewable energy will help Coal India to improve its earnings substantially. So these are the two stocks I personally believe that can give a very good return in the medium to long term.
And thanks so much for that, Mr. Chokalingam. But the next question coming in is from Naga Subaya, and he is asking a view on Idea Forge Akshay. It's been a volatile counter yet again, and way off from those highs seen in June and July. Would it be a right time to invest, Akshay?
Yeah, for Idea Forge, I think it's been in a range for a pretty long time. But one positive, if I were to see in this, is that the level of 400 is pretty strong. It's been holding off for a pretty long time, and that's a massive support. So continue to hold. Your stop losses as risk management should be around 375. And in case it recovers, then you can look forward for positional targets till 550.
Got the view, Akshay. But another caller now from Assam, and Rahul has a stock query for us. Rahul, good afternoon. Welcome to Ask Profit. What's your question?
Yeah, good afternoon. I have a query about ITC stocks.
Okay.
I have some 300 stocks of ITC at around 401 or 402.
Okay.
Right now it's trending at 30456.
Right.
My view is a long-term view, like up to 2030.
Okay.
So should I add more at this price or what? Should I sell?
Got it. And Rahul, how big is this already of your portfolio? Currently, you mentioned about the number of shares bought at 400, but how big is it of a portfolio? Is it already more than 10%?
No, it's around 20%.
20%. Okay, 1/5 of your portfolio. Got it. Mr. Chokalingam, Rahul holds shares of ITC at 400 and is looking to hold for the next 3 to 4 years. Should he add more? Should he average down? It's already 20% of his portfolio.
Certainly, yes. It's a medium to long term prospects are too good. I believe in the short to medium itself, it deserves at least around 377, 380. For definitely 3-4 years, it will come back to a very decent return and also with a good dividend yield. Because the FMCG business is continuously growing other than the cigarettes. And cigarette also, in the longer term, the cigarette, in my belief, the consumers of cigarette, it's very difficult, to reduce the volume just because of price rise. And obviously, it will come back to some, poor single-digit growth. And then the agri segment has a very fabulous future, in my view. Going digital very aggressively. Even the paper and packaging, which is struggling for last 2-3 years, has to turn around ultimately because there is a strong entry barrier and no new paper company is going to come in, whereas the packaging paper demand is consistently growing. So therefore, ITC has, in my view, a very good outlook for medium to long term at the current price level.
Thanks for that, Mr. Chokalingam. But another caller now from Vizag, Pradeep, has a stock query for us. Pradeep, good afternoon. Welcome to the show. Your query?
Yeah, good afternoon. Thanks for taking the query. It is regarding PNB Housing. I have 100 shares as 823.
Okay.
Yeah, can I average it more?
Okay, you want to average now. And will this be a long-term bet or a short-term bet, Pradeep?
Yeah, it is for 3 to 6 months.
3 to 6 months. Okay. Akshay, coming to you then on PNB Housing. What would you recommend Pradeep to do?
So PNB Housing has recovered very strongly from its weekly support zone of 750. There are multiple instances on the charts in the last 1.5 years of 750 holding on, and whenever 750 has held, the recovery has been hard all the way till 1000. So from a 3-month perspective, your target zone should be somewhere around 850, and in case it works in for 850, I think you can extend the trade furthermore for 6 months, where you can look forward for targets till 925.
Got it. Akshay, sticking with you for Ultratech Cement as well, Jay Krishnan actually wants to enter this counter now for the next 6 to 9 months. We've seen correction bounce back again from that 10,500 level this week itself. Is this a good time to enter?
See, from a short-term trading perspective in Ultrasunco, there is a strong resistance around 11,300 to 400 zone. In all likelihood, correction might again get back around those resistance zones. So short-term, it's going to be a bit choppy. I think makes sense to wait for a dip around 10,800 to rebuild your long bets in Ultrasim. If you're holding from a 6-month plus perspective, then you can continue to hold.
Got that view, and thanks so much for that, Akshay. The next question that's on GE Power India right now. Now, our viewer, Parveen, actually holds shares at roughly around 521. So, stocks just a tad below that right now. And Mr. Chokalingam, he holds almost 700 shares of this counter. Should he continue to hold? Could he average down? What would you recommend?
Which you come with GV Power?
Yeah, GE Power India, yes.
No, sorry, I have not tracked GE Power.
Okay, any view, Akshay, very quick one if you can, on GE Power India. Is there any chance of his buying price coming back?
Yeah, you can continue to hold. So the volumes are a bit less, but what you can do is maintain a strict stop loss of 415. The chart is strong, and you can expect targets till 530 to 540 within 1.5 to 3 months time horizon.
Got that view, Akshay, and thanks so much for that. The next question, that's coming in right now. It's on Shelby Hospitals, bought at 185 by Manohar, who is a regular viewer. Mr. Chokalingam, he's bought, stocks trading a little down from those levels, but should he average down, continue to hold? What would be your view?
Well, personally, I also hold the stock we have recommended, but the management is not able to improve the utilization of the bids in the last 2 quarters. It is slipping down. So at best, I will give only hold recommendation. I would not suggest for buying. I would wait for 1 more quarter to see whether the management is able to improve the utilization of bids and also the margin in the business before revising my target, before revising my recommendation.
Got it, Mr. Chokalingam. The next question, it's a very interesting one, and hence we've picked it up. This one's from Mr. B.B. Gupta, who is also a regular viewer of the show. Now, he has roughly 1,200 shares of Swaraj Engines bought at 10 rupees per share. So he's sitting on a profit of almost 7 lakh rupees at this point of time. So, and he also has Tata Motors, I do remember, because he had asked us a question about that. Stocks trading at 3,695, gone through a change in terms of management. Now, Mahindra, of course, the key owner. Mr. Chokalingam, it's been a very strong ride for Mr. Gupta. Since he's holding at such lucrative levels, do you think the story is done? Should he book some profits? What would you recommend?
I think the story is not yet done because the tractor business is growing consistently. Even in February month, it has shown a very good growth. And since it makes engines for tractors, Swaraj Engine has got a very good prospects. And also stock has corrected a lot. And now it trades only around 23p on trailing basis. I would even give a buy recommendation, on Swaraj Engine for medium to long term.
Got it. Well, time now for the rapid fire round in this edition of Fast Profit. Mr. Chokalingam and Akshay, you know the drill as always. We'll try and take as many in the next 3 minutes. The first one is on Enviro Infra, bought at 198, Mr. Chokalingam, almost 500 shares. Is it a good time to add more at this price?
Sorry, I haven't studied this company.
Akshay, a quick view if you can on Enviro.
Not to add.
Not to add at this point. Got it. Ircon, Akshay, for the next few months is what Abdul is asking. What would be your view?
Trading pullback, 120 stop loss and 155, 160 target.
Sudha actually holds Irida and she's currently at a loss of almost 47%, Akshay. Should she just exit this counter? What would it be?
Hold, stop loss 100.
A good time to add Akshay IDFC First Bank right now?
Avoid.
Avoid, got it. The next question that's coming in is on Canara Bank. Mr. Chokalingam, is it a good time to add this counter now?
Yes, buy.
BHEL bought at 59 rupees by Lalita from Bengaluru. She's holding 125 shares, Mr. Chokalingam. Should she exit? She's gains of almost 5x. What should she do?
I would give sell call on further rise on in the stock price.
The next one that's coming in is on ITC Hotels by Nitish. What should we do with this, Mr. Chokalingam?
Hold.
Hold, got it. Sastri ji from Visakhapatnam actually holds a very small counter, Sakar Health. I don't know, Akshay, if you track this one. He's holding shares at 525 and has been asking us what he should do with this counter. Any view by any chance?
Hold with stop loss of 495. Positive view continues.
MCX bought at 2674 by Parth. What should we do with this, Mr. Chokalingam?
Hold.
Ravi from Mumbai is holding Cohan's Life at 670. Mr. Chokalingam, gone through its challenges. Should he still hold on to this counter?
Oh yeah, I mean fundamentally this price is fair price, but one can hold for long term, hoping for some recovery path.
Zagel bought at 287 by Ganesh. What should we do with this counter, Mr. Chokalingam?
I haven't studied recently.
Anything on the charts, Akshay? Seen some buying yet again after hitting that low, or the 1 year low. Any view?
Short term bottom, but it's an exit for me.
United Spirits bought at 1326 by Lavanya, Mr. Chokalingam. Any view on the stock?
Hold.
Hold, got it. The next one that's coming in is from Shankar from Bangalore. He wants to buy into Tata Capital right now. Would you recommend that, Mr. Chokalingam?
For long term, certainly yes.
55 share of Wokhart bought at 1547. Akshay, would you recommend averaging at this price right now?
Yes, you can average for short term.
The next one is on Karnataka Bank, bought 100 shares at 100 rupees. This one's from Satya Kumar, Mr. Chokalingam. Should he continue to hold? He's almost doubled his money.
I am not able to give because of compliance guidelines.
Got it. Akshay, a quick one if you can.
Positive view, 260 is the target.
260, got it. Well, that is the end of the rapid fire in this edition, as well as this edition of Ask Profit. Mr. Chokalingam, as well as Akshay, thanks as always for helping us solve all these stock related queries. But viewers, that's all the time we have on this edition of the show. Stay tuned. India Market Close comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Delhi, the greens are ready. The contest, the intensity, the energy. Where the finest pros of golf meet the pros of business. NDTV DP World PGTI Golf Pro App, the course of champions, the conversation of leaders. 21st March, Kotab Golf Course, Delhi. In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. Number 1 on YouTube. NDTV Network, streaming India's trust. Leading India's conversations.
To understand the Tamil Nadu twist, join me in the midst of people, language and politics Vanakkam Tamil Nadu. Here we come.
First India tour in your city. Ragon with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Present.
Welcome. You're watching India Market Close, and if there was a doubt about what's happening in the markets, at least the last 3 sessions have shown that there is a change in mood. I don't know how long it'll last, but mighty pleased to see 23,800 on the screen, Alex.
No, absolutely. And good afternoon, Tamanna. Good afternoon, everybody joining in. For once, this smile is not forced. The cheer is not forced. It is indeed a good day in the market.
It is at other times, Alex.
No, at other times you have to put a brave smile on your face and say, market is falling 300 points. You still say, hi, thanks so much for joining in.
Yeah.
But today it's not that day.
Yeah, it's a good day. So here's what's happening. Nifty has gained for the 3rd consecutive session. It's the longest streak in a month. It's recouped nearly 2/5 of its losses seen on a MTD, that's a month-to-date basis. The Nifty IT has been, in that sense, a star of the show, right? It snapped its 6-day losing streak to gain over 3.5% in trade. All major sectoral indices are in the green. Metal and FMCG are gaining the least, though. And resistance levels 23,900 now, supports at 23,700. So be very clear about those levels coming in. I want to go to the Nifty heat map before we get our first voices in, and just give you a sense of what's moving and powering the market move today, because you have a good bump up coming from Geopolitical. Now, a lot of reports saying that they're getting ready for that IPO as well, so maybe some move there. NBFCs overall have been looking good. The financial space has been looking good. But IT, it's all about IT. Telecom, 4% up. Infosys, 3.5% up. HCL Tech, also helped by that promoter buy, which is continuing doing well. Adani Ports, M&M, Eternal. So a whole host of companies that are doing fairly well today. Coal India, NTPC are just a few of the laggards, and that's not too bad. Coal India about 2% down. But remember, Coal India was a big war play all of this time. So clearly you're seeing that fear receding. India VIX also 5% down. And that's just showing you that the fear gauge is cooling off.
Is losing
right
a little bit
now.
of that red hot energy. Pull up the sectoral heat map, because there's more talking points here, and you will see the IT index right up here. That really is the story of the day. It's cooled off from over 4%, but it's still heady at 3.5% gains. But the realty index is making a bit of a comeback. Auto index is continuing to move higher. The mid cap index and the small cap index up and about 2% gains for the small cap index, about 2.3% for the mid cap index. Consumer durables making a little bit of a comeback. So is consumption doing okay. This is interesting. The Nifty Bank with gains of about 1% or so. At one point in the trade session today, it actually went below that flat line. Pull up the intraday chart for the Nifty Bank. You'll see what I'm talking about, because you now have a few very close. There you go. So it actually slipped into the red for a little bit, and now it's trading at the high point of the day. Pull up the constituents in the Nifty Bank and you will see that State Bank of India is doing okay, Axis Bank is doing okay, IndusInd Bank is up and about, but Axis Bank is doing okay, State Bank of India up about 0.8%, and HDFC Bank has moved from negative territory to just about paddling the water on the top. It's about 0.1% in the green.
It's possible that you will see a rotational play in the buys as well, because if you have that kind of value investors coming in now, and yesterday you could have put it down to expiry, but now if you have value investors coming in, maybe you will see rotational plays. Today, if it's IT, so I would say watch out for banking and some of the other blue chips as well. Just the gainers and losers on the broader market, and let's get a sense of those kind of tactical themes that you're seeing, because it's overall a very good day, but you're also seeing a smattering of companies. JBM Auto doing well, Trident, Team Lease on the losing side. A lot of your metals and Vedanta Nalco there is showing that pain, and your energy space looking a little shaky right now. Even Hindustan Zinc cooling off a bit, but all in all, I would think it's an extremely positive move.
Take a look at just before we go to our first guest of the day, look at the advanced decline ratio and pull up that chart, because it's a pretty picture. You've seen that, but it's actually at the widest point of the day, and a significant gap between the advances and the declines. We've got Nilesh Jain, AVP Technicals and Derivatives Research at Central Broking, joining us this afternoon. Nilesh, it's a pretty picture. The question is, do we blitz past that 23,900 mark and head towards 24, or do we see a cool off and a return of that sell on rise movement?
Very good afternoon, Alex. Good afternoon, everyone. Looking at the recovery and cool off in the India Week's volatility index, which has cooled off close to 20% this week. So overall, it looks like it is likely to give more comfort to the bulls, and we are likely to see Nifty moving beyond 24,000. And what we are expecting is this retracement to continue towards 38.2%, that is placed at 24,250. So that's the level that we are keeping an eye on, and this pullback rally is likely to extend further. For a couple of reasons, we have already seen that Nifty RSI gone into extremely oversold territory at 25, and that is the reason that we are witnessing a technical bounce that currently, that we are witnessing right now. And apart from that, this is a broad-based buying, and where we are witnessing broader markets outperforming the benchmark indices. So that is also giving a sense of confidence. And given the kind of participation, specifically from the private sector bank that we are witnessing, looks like Nifty is likely to surpass 24,000 on immediate basis and move towards 24,200. However, it is important to see whether Nifty takes out 24,250 levels on the upside. That will give first level of confirmation of a short-term bottom. But yes, as of now, we are witnessing a pullback rally to continue towards 24,000 to 24,200.
I'm going to get your picks very quickly, but I just want to go to this breaking story on your screen. Sources are telling NDTV Profit that the cabinet is likely to approve the Bhavya industrial scheme and it's a push amidst the Iran conflict-led global disruption. Shrimi Chaudhary joining in with more details. Shrimi, what is the scheme about?
Yeah, so that's what we are learning at this point of time, that government is set to take a big call on India's industrial strategy, and the timing is not coincidental, Tamanna. Source indicating that the cabinet is likely to consider Bhavya Industrial Push, a proposal aiming at strengthening domestic manufacturing, as we know that how Iran conflict begins to ripple through global supply chain. And to address that, DPIIT under Commerce Ministry has moved a proposal in the cabinet. The cabinet meeting is still on, and the policy makers are, weighing in to whether push this particular policy or not. So what the idea behind is, of course, to push towards the domestic capacity building, stronger supply chain, and policies that encourage local manufacturing more. And it's also aligned with the government Atmanirbhar Bharat playbook. So most importantly, it's not just about, the local manufacturing, but to address all those issues which usually domestic industry facing in events like Iran conflict, which we are seeing. Back to you.
Absolutely, Shrimi. Good takeaway is there, and certainly something to watch. That Atmanirbhar push is something that we'll have to look at very closely. We were talking to Nilesh Jain, and he was speaking about the possibility that the benchmark will make a push towards 24,000. Just cooled off a tad bit in the last 5 minutes, though, where trading at 23,800 or thereabouts, and I wonder where we will end up today. But Nilesh, individual stocks that you're seeing opportunities in at this moment?
Right, Alex, so I have a couple of buy recommendations. First of all, Adani Port has taken a very strong support at 1360 mark, and we expect this pullback to continue in Adani Port towards 1420 to 1440 on the upside. So it's a buy at current level, keep a stop loss at 1375. Immediate target would be 1420 followed by 1440. And apart from that, a space that's Nifty Auto Index, that is doing well. Within that space, Mahindra and Mahindra is our preferred bet given the kind of a setup we are witnessing right now. A good price and volume breakout can be seen, and on OI front, if you see, good long buildup is happening. Close to 3.5% OI has been added today as well. So it looks good to buy at current level for upside target of 3,300 and 3,350. One can keep a stop loss below 3,150, and Mahindra is also one can go long.
Third day in a row, Nilesh. M&M gaining close to 3% or over 3%. Let's see if it ends up with gaining 3% in a row, if the hat trick is possible. Let's go across, though, to the stock of the day, which is not Mahindra & Mahindra. It is, in fact, Urban Company. The latest update, and we told you about this before the start of trade today, is that State Bank of India, SBI Mutual Fund, has actually bought in close to 4% stake in trade yesterday in a large trade. And this is at just about a 6% premium to the issue price. The stock is also down quite considerably from the listing day as well as the peak, as much as 45% odd from the peak yesterday, but it's up quite considerably in trade today. Let's talk about what is standing out for this particular counter, and Puneet has got some details there. Puneet?
Well, thank you for that. This one's also revving through in trade as well, just like Mahindra & Mahindra, but largely a big move of 15%. Now, a 632 crore buying by SBI MF, as you rightly mentioned, has been a key trigger. They bought roughly 5.74 crore shares at 109 rupees per share. So a lot of those moves just in one day itself. We've seen the selling shareholders as well at this point of time. ABG Capital, DF International, as well as Wellington Hadley have all sold these shares to SBI MF. But I just want to go through something that you mentioned, Alex, in terms of the journey over the last 6 months since listing in September 2025. Now, the IPO price of almost 103 rupees per share, listed at 162, went all the way up to 200 rupees per share, and since then has fallen because of valuation concerns to 100 rupees. What's also interesting is this 100 rupees was just, in terms of 2nd March of 2026, so not so far away, just a couple of weeks before. And since then, given what we've seen with the SBIMF buying, a lot of momentum, just so up 20% since March 2nd has been the returns for this counter. When you also look at the key aspects, of course, the company multi-category home service platform, which is very well known, presence across countries as well, Saudi Arabia, Singapore, India, UAE. So there will be something to watch in terms of there's been a disruption in operations at this point of time. JM Financial actually sees that the company already has a 60% market share in the multi-category scale player, and we've seen the private players also come in, but very interesting already because the total addressable market is growing. At this point of time, 60% market share already for this company. Native as well as InstaHealth, which is a bigger growth category at this point of time, could drive a huge optionality for this company in terms of earnings. And finally, JM, they have mentioned that they should develop the right brand at this point of time, but they have a target of 125. So you're already way past that as well when they initiated coverage in late February of 2026. And the other aspect, what do you have to watch? Because the company has given some targets, very interestingly. Consolidated adjusted EBITDA break-even will be only in Q3 of FY28. So you will still have 8 more quarters to go to that mark. And the other aspect, that 1,000 crore adjusted EBITDA target by FY31. So it's still away in terms of profitability. Valuation is also not cheap, but given Urban Company is a leading player in the listed space and the only one, you also should look at what's happening with Snapit as well. I think, we had them on disruptors. So those two players will essentially be the Zomato versus Swiggy of this segment, but continue to monitor this counter going forward as well.
Yeah, absolutely. Puneet, thanks so much
I
for...
want to ask, Puneet, have you used the service, Puneet?
Well, I have used the service and it's quite affordable in that sense, but Snapit also has been, with the promotional offers, being very lucrative at this point of time.
Yeah, right now there's a price war going, and he's right. This brings you back to the early days of customer acquisition, price wars which are coming. Both companies are setting up camp in housing societies right now.
You spoke to Snapit. What do you glean from what they were saying? Did you get that same energy of the early days of Swiggy, Zomato?
Oh yes. And so the Urban Company is a larger tent, right? It does a lot of things. With Snapit, they do just this. So that becomes the whole question. The specialist versus I give you everything. I give you a plumber, a hairdresser, and also, help when you need it. So Urban Company obviously has more burning power right now, much more. So we'll have to wait and see how it goes. But market view, Pratik Parekh, equity strategist at Nuvama Group, joining in now on the conversation. Pratik, very good afternoon to you. Great to have you. I was looking at your report and you've titled it aptly with a $1 billion question. AI, tariff, war, what next? What do you think is next?
Yeah, thanks, Tamanna, for having me on the show. It's always a pleasure being on the show. Clearly, that is the $1 million question of sorts. I mean, last year has been unprecedented. Typically, one gets a big Six Sigma shock once in a lifetime. Last year, we had 3 once-in-a-century shocks. First was on tariffs. Second was the technology evolution of AI. And then now we have got, the war, which is again the largest after 1979 Iran revolution per se. Now, where this will end us landing, I think the biggest casualty of all this, if this current situation sustains, is going to be on growth. Our worry is that the next big shock could come actually on growth or demand per se. And here, our worry is that US market or US economy in general is quite vulnerable to shock as well. I mean, people have been expecting about a US recession for quite some time now, and it has so far defied the same. But I think if current things prevail, then, a meaningful downturn in US growth can't be ruled out because US labor market is anyways weak. US consumers are facing already the impact of high mortgage rates, high tariffs, and now we are having a fresh oil shock. On top of that, where things are getting even worse, I feel is on the US private debt market. I mean, just to give viewers a perspective, this is a $2 trillion private credit market in US. And more importantly, this has been one of the key lenders post-COVID. So if that market faces liquidity issues, it could have meaningful growth spillovers as well. So that is another big risk that is there. And given the bond market situation, liquidity there is not very good. And finally, given that valuations globally, including in US, are very expensive, we worry that AI capex exuberance that is there right now, even that could roll over. I mean, that is a key learning from the .com era.
Yeah.
So in a nutshell, I think we need to be more watchful of demand disruption next, per se, Tamanna and Alex.
Yeah. It's a fair point that you're making. I also see in the report that you're rating Indian equities still expensive despite the time correction and despite the slide that we've seen. And of course, we've bounced off the absolute low point in the recent past and the third day in a row of gains. But you're saying that we're still expensive. The argument has been made that in certain pockets, Prateek, the multiples have meaningfully come off. So it's not a broad brush approach here, right?
Yeah. Yeah, that's again a good question, Alex. And yes, I mean, it is not a broad brush approach for sure. There are certainly pockets, and especially in the financial space, like private banks and insurance, where valuations have come off. Even the Indian IT space, I think if one looks at metrics like dividend yield, it is starting to look attractive. But when I look at the market as a whole, it still doesn't provide you the valuation comfort. Now, as we argue in our report, looking at historical multiples with a broad brush may not be very helpful, because in a large number of industries, the microstructure has changed, where competitive intensity has increased, scope to expand margins has reduced, and growth challenges are there. For example, in telecom, pharma, FMCG, a lot of these sectors. So to that extent, using historical multiples and saying that they have now become cheap may not be the right way to assess them, because you have to account for the change in industry structure. And on the other hand, you still have a lot of pockets where things are still quite expensive and prone to the varied macro uncertainties. So yes, there are pockets where things have become better, like private banks and insurance. But the overall market level, we still believe that things are on the expensive side and do not have room to accommodate the risk that we are highlighting, and especially if they play through per se, Alex.
Okay, so there's potential for further cuts in certain pockets. I guess to a certain extent, Prateek, this overarching question of how long this geopolitical uncertainty, the shock to crude oil extends, because that will then have to be factored into earnings projections as well. But with the knowledge that you currently have and ahead of the of this quarter earnings, fourth quarter as it ends and then coming through, what are your top calls right now, and how are you advising that people construct portfolios right now, Prateek?
Yeah. See, I think that's a very challenging thing to do right now, because today there are large number of uncertainties ranging from geopolitics, on growth, on technology, and so on and so forth. So our broad approach, to portfolio construction is don't bet too much on growth momentum sustaining, because growth risks are omnipresent and you never know where it'll hit you. So valuation comfort, I think, is very important in the current situation, because balance sheets risk is low, but earnings risk is still very meaningful. So we definitely don't want to pay up for something, assuming that the current trends will continue in the future. So valuation is a very important part of our portfolio framework. Second is, in a scenario where earnings risk are high, dividend yield becomes very important. And third is, we look to buy into companies or sectors where capex cycle is behind and there are either micro triggers for improvement, or stocks have corrected, which are probably pricing in some of the pain points that can come through per se, Alex. So that's a broad approach, that look for valuation comfort, sustenance of free cash flows, and sectors where capex cycle is behind per se.
Prateek, thank you so much for that, and great to join in. I wish the completion of your title is AI tariff wars, and then finally we all live happily ever after. So one can always hope, at least in peace. I don't know about happy, but at least in peace without more black swan events. So thank you for joining in. Devin Choksi with us this afternoon. Devin, by very good afternoon to you. Just want to get your perspective. If you look at fundamental factors, rupee has just hit a new all-time low, above 92.50 for the first time. I think 92.55 is what I saw. Brent is back above 100. It's at 103. What are markets cheering?
Yes, Taman, I think what are markets talking about? I think the first part of the story is yes, whatever the sell-off had to happen has happened to a greater extent. And some part of the short covering is not ruled out, I think. So that's what is the first answer to that question. Second most important aspect is that currently, as we observe, the Nifty on a 1 year forward basis at 15% kind of a growth rate in the earnings is today traded at around 16 times to 17 times. Historically, whenever the Nifty has traded in this region, I think most of the times, I think Nifty has a following bounce, and that bounce, I think, has been quite sharp. In fact, I think many of the past events suggest that whenever the market has done a crash landing, from where the recovery of index is, I think, between 30 to 70%. And that is validated across, I think, for last at least I think, now 20, 25 years in this cycle. So in my viewpoint, I think the market is fully aware about it. Most of the valuations possibly, I think, became attractive enough for some of the large companies to basically meaningfully come back. And that's where I believe that I think this particular pullback rally or a recovery rally that you may want to call it as has happened for the last 3 days.
Devin Bhai, good afternoon. Alex here. And you make a very good point. Quite a bit of that correction has taken place. I'm just wondering about what you think of the rupee though, because there are several factors that will come into play, right? On the one hand, this entire tariff uncertainty was plaguing the rupee, and so it fell quite dramatically. Now this war situation has come on the back of that. Just when you thought that the rupee would make a bit of a comeback, you have this war situation that breaks out. Brent is at above 100, so there's a question about current account, and the balances look a little weak. So therefore, from that perspective, both for investors coming from the outside in, it becomes that much less attractive. But on the other hand, for the export sector that was looking for a little bit of a benefit, this might just be a tailwind in some pockets. So are you taking it as glass half full or glass half empty?
Yeah, Alex, I think a very pertinent point. And frankly speaking, I think I could answer, I think, most of this point, but I think would like to add one statement here. Today is not the time for, I think, correcting the rupee by some small percentage, but I think some of the structural change one will have to bring in the area of rupee. Because every now and then, I think one or the other situation is bothering us, starting from COVID till this war. I think every time, I think the currency has been bothered by the small issues or the larger issues having impact on our currency. I think China model has to be seen in a very different context now. China in 2014, between mainland China and Hong Kong, I think where they brought in the Stock Connect program, the Hong Kong would basically, I think, pump in the currency into mainland China. And that's where probably, I think they have systematically brought in the inflow of currency without, I think, allowing the currency to play a spoil sport, which currently India has to take up that kind of a cue. Imagine, I think, the part capital account convertibility is established through this kind of a Stock Connect program that China introduced in 2014 with Hong Kong. I think similar such kind of situation happens with the GIFT City out here. India could possibly, I think, attract significantly large amount of dollar. And this entire rupee depreciation business, I think, would probably find arrest at that point of time. But just by doing small repairing here and there, I think is not going to save the rupee from going down. I think this structural change in the rupee movement, I think, has to be brought in. And through this convertibility issue, I think one can address this part in a systematic manner, in my viewpoint.
I mean, the spike in the rupees, as we're speaking, is also astonishing. Maybe in tandem with what's happening with Brent. Brent at 103, back up. Rupee 92.61 is what it's hit. Dheeraj Nim, economist and forex strategist at ANZ Research, joining us now for a quick take. Dheeraj, very good afternoon to you. What is going on? Why this sharp pull in the rupee, in your view?
Hi, thanks for inviting me. Look, I think it's well within the realm of expectations. Of course, the Reserve Bank of India was preventing quite staunchly a weakening of the rupee, perhaps contending with the speculative interests. But now with oil staying above $100 a barrel, the risks are, of course, bigger. And we all know that if oil stays at current levels for much longer, it means a hit to India's macro in terms of lower growth, higher inflation, but more problematically, a much wider current account deficit. And we already have a capital flow problem at hand, and even a small widening of the current account deficit would be problematic from a funding perspective. So all of this perhaps reflects, a gradual adjustment, as would be preferred by the Reserve Bank of India in responding to the change in the fundamental view of the economy for as long as the oil prices remain where they are.
Dheeraj, hi. A quick question to follow that up. We were just talking about the earlier trigger for the rupee to head lower, and that was tariffs. And seemingly that worry has dissipated, but then this war has come close on the heels of that. And certain interventions and positions that the Reserve Bank of India had taken were still in the process of unwinding, which is why some had suggested that the rupee was not gaining ground as much as it might have otherwise. Is that something that is still in play? And do you anticipate that we could stay lower for longer this time?
Look, I think that the problem of the rupee, even before the oil price shock, was not really just an India-specific problem on account of tariffs. I mean, if you looked at the global push factors of the global ecosystem, it was quite problematic as well. One, there has been a significant increase in real global yields at both ends of the world. Look at the US, the Japan. Then, of course, the growth theme, which had been very AI-specific, had been cornering most of the flows, of which India was not a part. And then third, of course, you had a lot of geopolitical risk premium, not just recently, but for quite some time. And in such cases, capital importing economies like India do not tend to get favored a lot as far as, equity investors or FII flows are concerned. Now, what oil prices have done on top is they have begun to cast, an aspersion or a risk lens on India's very strong pull factors, which we had been celebrating for quite some time in terms of high growth and low inflation and very manageable current account deficit. So I think that oil prices, in my opinion, are the single most important push factor that can, hurt India's economic appeal to foreign investors and therefore cause BOP problems or funding of the current account deficit problems, which is what is manifesting now. It's unfortunate that the two events have sequenced in a way that the rupee has continued to weaken through these two episodes, but I would be very cautious in expecting, the rupee gaining ground significantly in the near term, even if the tensions were to begin de-escalating.
Where the reverse could happen. Thank you for that, Dheeraj. Dheeraj Nim there from ANZ. In fact, Goldman Sachs says the rupee may slump to 95 against the dollar over the next year because the current account deficit is widening. Inflation remains under control at the moment. RBI to tighten if higher oil and weaker cues filter through, a weaker rupee filters through to consumer prices as per Bloomberg. All right, so that's the story with the rupee, causing pain but has not dented the mood on the street. In fact, let me go across to Somit Sarkar, who joins us with all the chatter from dealing rooms. Somit, there seems to be a collective decision to let's move on from war fears.
Let's move on is the consensus call that we are hearing when it comes to the dealing room checks, because they believe that first quarter of 2026 was a quite eventful quarter. All the negatives that are there is largely being done, and now people are moving on from the war situation as well, because they believe that the commodities issue that we are facing right now will ease down. Obviously, it might take some time, but it will eventually ease down, and people are looking forward now, and hence we are seeing this kind of an up move in the market. And technically also, we were quite oversold and valuations were quite relatively on a cheaper side. Stock-specific action, firstly, when it comes to Nazara Tech, there are strong buy flows on the large HNI desk. The buzz on the street is that the company is in works for an acquisition that might be announced. So keep an eye out for Nazara Tech here. Shriram Finance, there are buy flows on institutional desk. The buzz is there that there could be a potential open offer that could be announced at a higher rate for this counter. So keep an eye out for Shriram Finance as well. For ABB India, there are sell flows on institutional desks. Channel checks indicate that ordering has been quite weak, and dealers believe that all the positives are now largely priced in when it comes to ABB. For RBL Bank, there are buy flows on institutional desk. Dealers are indicating that the fourth quarter numbers could be on the stronger side, and also the charts for RBL Bank are looking quite strong as per technical analysts. For Samvardhana Motherson, there are buy flows on FII desk. Delivery volumes are expected to be on the higher side. And lastly, when it comes to Polycab, there are some buy flows on the large HNI desk. Dealer checks indicate that current geopolitical issues and higher copper prices have led to a lot of, that has affected a lot of unorganized players and smaller players. So that could benefit Polycab going forward. So keep an eye out for Polycab as well.
Got it. Somit, thanks. Interesting names that you've highlighted for us. Let me go across to Nilesh just to get a sense from him whether these are borne out in the technical indicators, and then we'll come to Deven Bhai on some of the stocks that we've got buzzing in trade today. But Nilesh, Polycab, for example, Somit believes, or rather the checks suggest that there are buy flows on the HNI desks, Samvardhana as well, buy flows on FII desks, and RBL Bank, the third stock, buy flows on institutional desks. Is that borne out in the charts though?
Well, Alex, we have seen a very good rebound in Polycab, specifically this particular counter. Reason being, today it has reclaimed its long-term 200-day moving average. So looks like a short-term base formation is in place, and we can expect a pullback move to continue towards 7,500 to 7,600 on immediate basis. So structure appears on a positive side, could be a very short-term, ultra short-term trade from a trading perspective. And apart from that, this particular space is looking very attractive. If you pull up a KEI chart as well, a similar kind of rebound we are witnessing in KEI. So that is another stock that is looking positive. But I'm not comfortable with RBL Bank. Reason being, it's extremely volatile, and we are not getting that comfort in this particular counter. But yes, Polycab could be a good bet from a short-term perspective.
Okay, Deven Bhai, I specifically want to ask you about IT. The index today is up 3% or thereabouts, and I was just looking at it. 6 days on the trot, it had gotten beaten down. And of course, it's off the high point today. But do you buy into the arguments that abhi bas ho gaya? There is enough damage that has taken place, valuations have come off. There's not so much gloom and doom that you got to ignore to this point the kind of valuation derating that has happened. Do you buy into that?
So Alex, I believe that I think couple of good announcements coming from some of the IT biggies, I think would possibly change the kind of opinion the street is currently carrying on IT companies. I believe that I think there are probably many companies I think with whom we are interacting, though they are not confirmed in orders, but they are saying that they are likely to be bigger beneficiaries of this entire AI saga. And many of their customers are now putting in the larger amount of business. Of course, I think the revenue model is basically changing from the time and estimate basis to going into time and effort basis and going into the outcome-based model, in which I think the companies are likely to change, I think, the contract values accordingly for the AI-related jobs. I am of the view that I think IT companies are going to be the enablers of AI for most of the corporates eventually. Because once you have to take the AI into the production environment, and from production environment to maintenance environment, you certainly require the requirement of IT companies who will be benefited because of the AI. Because on one side, I think they'll get the help of the consulting part of the activity to be carried out by AI. At the same time, coding also could be carried out by the AI. So their job would be thereafter, I think, to manage the production environment and I think the maintenance environment. So I feel that I think some of these companies are expected to come up with larger orders, and that's where probably the verdict will change as far as the market is concerned. Downside possibly looks limited in most of the cases. Maybe I think we'll have to figure it out. How soon, how fast, I think things could possibly start recovering as far as the stock price is concerned.
Maybe just about a month from now, when the earnings start kicking in, some of that bad news or that feeling of pessimism will ease out. Deven Bhai, on that note, and Nilesh, thanks so much for joining us today. Absolute pleasure speaking with you as always.
Thank you so much, Alex.
All right, let's talk about IT in some more detail. You've had a few voices over the course of the last couple of weeks, in particular, weigh in. And we've got an interesting note that CLSA has put out on IT, but we'll talk about that after this very quick break. Of course, the IT index holding on to gains just about of 3%. Let's take that forward just after a quick break. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Delhi, the greens are ready. The contest, the intensity, the energy. Where the finest pros of golf meet the pros of business. NDTV DP World PGTI Golf Pro App, the course of champions, the conversation of leaders. 21st March, Kotab Golf Course, Delhi.
To understand the Tamil Nadu twist, join me in the midst of people, language and politics. Vanakkam Tamil Nadu, here we come.
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. Number 1 on YouTube. NDTV Network, streaming India's trust. Leading India's conversations.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
Welcome back. It's quite a winning Wednesday in that sense. It's been a great day for the markets, and the kind of move up we're seeing is one of conviction. Now, one sector that's leading the move is IT, and undoubtedly the Nifty IT has been the star of the day. Starting out strong, remaining strong, cooled off a little, but still 3% up. Now, what is changing the mood on IT stocks? Because with a high rupee and with war overtaking the mind space when it comes to several sectors, including energy, etc., export-oriented, IT would have been seen as a relative safe bet. Having said that, IT has been losing steam for the last week or so. Listen in to what CLSA maintains, because they are saying they find no evidence of increased deflation in renewal contracts due to AI disruptions in IT. Puneet joining in with more details. Puneet, this note from CLSA could be one of the reasons we're seeing investors rediscover IT. What are they saying?
Well, most certainly has been the most latest trigger in that sense. And as you rightly mentioned, CLSA mentioning that they, at this point of time, don't see IT companies going back to their clients and seeing reduction in pricing power. So no evidence of increased deflation in the contracts that are getting renewed at this point of time. And this month of March is very key at this point of time for the next financial year. So a lot of conversation around that. While the demand commentary for BFSI has been strong, it has been largely soft for the other sectors like retail, auto or healthcare as well. So that continues to be a deflationary point in that sense. But they have mentioned that few companies that they spoke to did flag off a lot of clients being on the sidelines at this point of time, given what we've seen with Anthropic or the models from OpenAI. So certain clients taking a little bit of more time at this point of time, but the Middle East exposure, the war which has dominated a lot of news flow, is only a low single digit in terms of revenue for the top 4 to 5 IT companies. So they are not worried about that at this point of time. Deal pipeline is strong, and valuations that are close to a 10-year low is what CLSF finds very lucrative in these companies. They have a bunch of stock that they cover. Persistent and Coforge are the high conviction outperform. On Coforge, they saw 100% upside from the current levels, while the rest of the pack come in the outperform space, Infosys, Telecom, TCS, LTIM, and they are neutral on Wipro as well as HCL Tech at this point of time.
Oh, got it. Puneet, thanks so much for wrapping that up for us. And so, therefore, keep your eye on the IT index. It is cooled off just over the course of the last 10 minutes or so, but still gaining about 3%. By the way, the rest of the market also cooling off just a tad bit. In fact, the broader markets is where you see a bigger drop, just about 1/3%, not a lot, but it's cooled off from the top. So, still gains of about 2% or so. I'm so used to saying 0.2%. 2% for the mid-cap index and about 1.8% for the small-cap index. Shivangi Sarda, analyst, equity derivatives and technical at Motilal Oswal. Dharmesh Kant, head of equity at Chola Securities, equity research at Chola Securities, joining us this afternoon. Thank you so much to the both of you for taking the time, and good afternoon to you. Let me go to you first, Shivangi, on the charts. Is this up move for the third day in a row sustainable? Do we march to 24,000 this week, or is that unlikely?
Very good afternoon, Alex. Thank you for having me. So we've seen that the indices have, gone on a winning streak, and I like what Tamanna gave a ring to it, winning Wednesday. But overall, we've seen that call writers have widened their position at the higher levels, and sentiment has been seen improving despite the global uncertainties. The good part is that some of the sectors that were beaten down are now picking up strength. Some of the sectors are holding their gains at the higher level. So overall, good amount of long build-up can be seen in the stock list. Now, talking about the levels for Nifty, we've seen that the next resistance is standing at 24,000. And we're looking at 24,000 as the next upside move for Nifty, and then 24,300 levels. While on the support side, one can look at 23,650 as an important support level. Obviously, this is the immediate level, but little positional 23,500 would act as an important make or break zone here.
The thing with winning, Sharda, and thank you for noticing that, the thing with winning is to continue to stay a winner. I suppose that's really the task for the markets right now. Are you seeing that boost continue for the Nifty IT and for the bank Nifty?
So talking about Nifty IT, now this has been one sector which has shown lackluster move since, I would say from the last 2 years. In fact, any attempts of recovery have been rubbed off. And we've seen that, despite the entire AI, the thing that we had seen recently, it had actually not moved even previous months to that. So overall, IT is one pack which has proved itself time and again that it is in no time for recovery. So I would, in fact, a little wait and watch and avoid this sector for now. Of course, talking about Nifty Bank, the PSU space have outperformed, and this is one space that could definitely hold strength when the market is improving. Some of the heavyweight private names have been witnessing a little bit of a slowdown, but overall, some of the smaller and the PSU names would drive the next leg of rally for Bank Nifty. Now, it is important for this index to hold above 55,000, for this momentum to again continue towards 56,500 odd marks. And for the support, again, 55,000 would be important to watch out.
Dharmesh, coming to you on whether or not this market is causing you to smile a tad bit. Every time you come onto this show, unless I crack a fantastic joke, which is not very often, you've got this very straight look. At least the market should be making you smile a little today. Are you suggesting that people go out and buy something today?
Yeah, good afternoon, Alex. I mean, meeting you guys live is a good enough reason to have a smiling day. So definitely, yes, market, this breather has come as a huge relief for us as a market participant and advisors. And even clients are making some money, so that feel-good factor is there. So, I mean, to my mind, this market is from here on is entirely about mid and small cap space. So, sectoral themes may or may not work, but definitely if you are a stock picker, so this market is likely to reward the stock pickers. And there, I think there are plenty of opportunity in the larger market where the stock price correction has been far, far severe. And from 18, 19 kind of a PE multiple, the stocks are down to 10, 11 times 1 year forward kind of a PE multiple. Though the story remains intact, the order flows and the books are robust, and the compounding of around 18 to 20 times 2 year forward is also there. So those are the companies we are looking forward to, like for the case in point being Power Mac Projects Limited. Recently, they also won an order of around 700 crores from Adani Enterprises. It's primarily into erection, commissioning and testing of thermal power plants along with operation and maintenance of that. So 61,000 crores is the order book, where 39,000 crores belongs to the MTO order book, and the balance is for all these purposes. So we think that around 670 crores of profit they will deliver by FY28, and it's available at around 11 times 2 year forward P multiple. So decent buy at current levels, even 2650 is the price target. The other, like the one more company I can name, Western Corporation Limited. Again, it's into the LI and DI pipe business. Doing fairly well, significant presence in US market, and with destruction happening in Middle East, the pipes will again be required. The stock price has corrected quite a bit, again available at 12 times 1 year forward P multiple. So these are the companies, if you are, parking now, even in the worst day, there can be 5-10% correction. Nothing can be ruled out in this market because the factors which triggered the fall is still there. Crude oil price is still at $103. As we speak, INR is depreciating. But if you stay invested in these companies, I think going forward, 6 months down the line, meaningful gains can be made. So at least to my mind, this market has now become where if you're a stock picker and you sit tight, a good amount of money can be made.
Okay, Dharmesh, stay on with us. Shivangi, stay on with us as well. Let's talk a bit about the textile sector. A story that we're reporting this afternoon. The textile sector is facing sharp cost inflation as crude-linked inputs are surging. Ridhima Bhatnagar joining in for more details. Ridhima, take it away.
So over half of the textile industry raw materials have risen by 20 to 25% as per the textile associations and company sources. Now this is mainly due to the crude oil price dependency of the raw materials in the textile industry, and the garment costs have risen by 10 to 15%, and your shipping and freight costs, which has been disrupted by the Middle East conflict, is also up by 80 to 90%. Now why exactly are the textiles hit? So in the apparel industry, about 60% of the clothes we wear are polyester and nylon, and rest of the 40% are cotton, which are least affected by the Middle East crisis. So your polyester cost, which is a crude oil derivative, has risen by 20%, and your nylon cost has risen by 5%. And the dyeing cost of clothes, the coloring of clothes, that is up by 20%, which uses of chemicals, which is a crude oil derivative. And your total dyeing cost due to this has risen by 30%. So now what are the companies doing? For now, the companies have absorbed the shock and they haven't increased any prices for the customers. But if the disruption lasts more than 2 months, this price will be passed on to the customers. For now, the companies are focusing on increasing their exports, as right now the tariff environment is positive for the shipping with 10% on it. But the margin pressure will likely be there in the short term. This is a situation which needs to be closely watched as to how long the conflict lasts and the disruption of the crude and the pricing of the crude gets affected.
Absolutely. Thanks so much, Ridhima, for getting us those details. Certainly one to watch out for the textile space as a whole. And remember, in India Market Open, that is the Market Open show this morning, we were talking about the possibility that some of these textile companies that are export facing, and particularly with a US presence, are trying to push through some inventory while this tariff situation is relatively benign, that there is significant demand that is coming through from the US. That's what Neeraj was saying this morning as well. Dharmesh, on these textile names and some of these, the textile pack as a whole, are you positive, or would you wait for the earnings to pan out? Because there's clearly been a disruption and that will showcase in the earnings. So are you positive on any of these counters?
Yeah, Alex, I'm a very tricky space to be in at this juncture because a lot of, push and pulls are happening. One thing which has played out in favor is that tariff is down to 10% effectively. How long it will stay is difficult to judge as of now. But let's not forget this 10% tariff is also on, I mean, earlier it was 2 to 3%, which has moved up to 10%. So this 5-7% kind of a burden will be there. So since they were beaten down, trading plays are on. So we are, staying on the sidelines. And to my mind, how even the things are panning in the Middle East, next 2 quarters are lost for textile companies on the numbers front. So Q4 may still come better off, since the inventories and everything has been pushed into US, as you have been pointing out. But thereafter, the trouble will again start brewing in. So, I mean, be selective, take a trading call, but being an investor is not advisable as of now.
An investor in textile companies, is it? Look at Trident today, about 11% up. There is obviously some concerns that are easing. One report that we talked about this morning, Dharmesh, is about how US-based buyers are stocking up before the 150 days of the current tariff ends. So there are a fair bit of export-oriented textile companies that could be seeing large orders pushing through right now, as US-based clients want to stock up on Indian textiles. Is that a theme that you would look at?
Not really, Tamanna, because this can fizzle out in a couple of days. I mean, stock prices have already moved 10-11%. Maybe 10% of the offering on the table. But beyond that, since it's just a trade, and then once the shipments are there, then you will wait for the tariff clarity, and if Section 301 kicks in, and that tariff again goes back a level. So it will keep on shifting. Plus the input prices, I mean, the raw material cost and everything will be higher going forward. The transportation cost will be higher going forward. So all those things will be eating into the margin. So where this, rally will stop or this party will stop is difficult to say. But to my mind, I don't think there's more headroom for beyond 10 or 15% from where they are standing as of now. So just for that trade, if somebody is, willing to risk that money, it's fine. But otherwise, I think it's better avoided. You are better off.
Okay, another theme that I'm spotting, Dharmesh, and I want your view on this, is a lot of alternative energy themes, clean energy themes. And remember, we have a cabinet briefing that's expected at 4 p.m., right after markets close. So we'll have to wait and see what those announcements are. Even as we speak, there's an interministerial briefing going on the war situation, actually, not just the LPG crisis. All ministerial spokespersons are giving their view. But on the EV theme, look at a JBM Auto, look at an Electra Green, look at a Vari Energies. You're seeing a whole host of companies doing very well. I want to look at what an Ather is also doing, what an Ola is also doing. Let's see if that is rubbing off in any way. The alternate energy theme, is that something that we need to look at closely, Dharmesh, from a slightly longer term view? Because that's a clear lesson which has been learned, right? We have to get more energy self-reliant as a nation.
Yeah, definitely, yes, Taman. I mean, this was a theme which was playing out maybe 6 months back. Then suddenly, because of incremental growth not coming at the pace at which it was coming a year back, this theme lost space. I mean, for all EV vehicles, the sales numbers were there, but it was not to the tune of the expectation of 25-30% kind of a growth number, which was missing, and ICE was again gaining traction. At the same time, solar panel and all, I think it's just a trade which has been playing out because they have sufficient order book on their plate, and next 1 year numbers would be fine. But beyond that, if you look at the incremental order wins with all the solar panel manufacturers, there's a clear deceleration in the order wins, and beyond FY28, it will be difficult for them to maintain a run rate of 20-25% kind of earnings growth. Plus, major renewable solar panel producers with a backward integration, Adani and Reliance is coming back into the play. So that will oversupply the market. And there is the third factor which is playing out for them is the transmission lines are not in place. So even if you have the generation capacity in place, to transmit those power generated to the main grid is having a problem. That takes a longer time than putting up a solar power plant in place. So those are the themes which one should be mindful of. While playing out as a trade, one can still take this momentum may continue for some time because there will be some announcements by the government, some PLI schemes or something like that will keep the heat up. But what we are focused right now is on the renewable energy power generation space. So there, I think stocks like NTPC, Green and all, which have ramped up the capacity in place. 9.5 gigawatt is there. Next 1 year we are expecting around 8-9 gigawatt. So those are things to look forward into. Electricity generation, strong in energy. Yeah.
Okay. Shivangi, today is the day to give a BTST, isn't it?
Absolutely. Today, we have been spoiled by choices. In fact, there are short covering move in quite a handful of stocks that can be seen. But my preferred pick here would be on Bharat Forge. This one has been quite strong, and we've seen that recently, there has been a bounce back from the retracement level exactly at its 50 daily exponential moving average. Near about 1650, there was a good amount of buying that was seen at these levels. Even on the weekly basis, we've seen support levels are intact, and this stock has gained momentum from the last 2 days with good amount of volumes adding up here as well. So definitely this one would be on radar. And in fact, entire auto space is now kind of showing some kind of strength. And this would be a good time to enter into this stock. So recommending a buy here. Now the next targets that we are looking out for Bharat Forge is 1875 and a stop of 1765 levels.
Okay, so even as we're speaking, we're seeing a tad bit of a cool off in the market further. Now trading with gains of about 0.7% for the Nifty 50, about 0.5% or so off the high point of the day. Similar cuts seen in the mid cap index and the small cap index as well. But those two indices are trading well above 1.7% higher. Similar gains for the small cap index as well. But let's talk about Eternal and pull up the chart while we're at it, because it saw quite the smart recovery from the low point of this week. It gained in trade yesterday, was one of the top gainers. Today as well, up about 3.2%. What are the plays right now, and what are brokerages saying? Because this is one stock where everybody seems to be positive. Hiral is joining in to tell you about the bull versus bear scenario from this point on. Hiral is faced with significant competition, but Eternal seems to be one that everybody seems to be betting on.
Absolutely, Alex, because I think the bulls have actually taken charge over the last 2 days when it comes to an Eternal. We're talking about two brokerage notes where one is a bull case, where the other is a bear case. Let's start off with the impact in terms of the LPG crisis. Now, what JM Financial is of the opinion is that the supply side disruptions that were actually linked to the gas availability that have actually been overstated so far, and that's the reason why they still continue to remain positive. However, Kotak is of the opinion that the food delivery companies will actually witness lower volumes. Now, which side the table turns, we'll only know once the numbers are reported. Again, in terms of where JM Financial is concerned, they're of the opinion that from a 12 to 18-month perspective, investors should actually start accumulating a Eternal at current levels because the valuations are seeming absolutely attractive. And Kotak is saying that on the back of the LPG crisis, there could be an impact to the tune of almost 16% when it comes to Eternal's EBITDA and almost 21% in terms of Swiggy's EBITDA. So clearly, Eternal still is looking much better as compared to Swiggy as well, if you have to compare both the counters from a Kotak perspective. Secondly, in terms of where impact of competition goes, the competition in the food delivery business is overstated as per JM Financial, whereas Kotak is saying that the competitive intensity in the quick commerce business is expected to remain high. They are expecting Blinkit and business that should actually emerge as a stronger one amongst the macro once the macros normalize is what JM Financial is indicating. And for Kotak, what they are of the opinion is that the slower net order value growth is going to be a concern for Blinkit, which will then in turn impact the Eternal. And very lastly, 35 times March 28 price to earnings is very attractive when it comes to Eternal as per JM Financial. However, the large cash burns that are happening across competition is one of the major concerning areas which could impact valuations, is what Kotak is indicating. So that's the bull versus bear scenario right now. But clearly, 2 days, the bulls have taken charge.
Okay, thank you for that, Hiral. Bulls have taken charge. Will we see more Pharma? Dharmesh, quick word on Eternal, another 3.5% up today.
Yeah, Tamanna, I mean, you can count me as an exception to being a bull on Eternal, and you can count me also as a Eternal bear on Eternal, because the reasons are very simple. I mean, these small blips can come and go, like LPG crisis and all, but it's a basis point of business. I mean, for 20 basis point, 2 basis point, 3 basis point is what they are fighting for to get the margins in place, very low margin business. And to my mind, I was a bear on this company when it crossed the 3 lakh crore market cap. The stock has went from 310 to 340, but from there it has corrected. So trades may come in between. I mean, 12 months, 18 months, 10 months period, you may have trades. But structurally, I don't see, it's maintaining the 3 lakh crore market cap for the next 3 to 4 years. So that will be difficult for any valuation to justify, and it will.
I would say you're not a bear, but you're a non-bull on Eternal. Shivangi, very quickly on the charts for Eternal.
Eternal has been one stock which has kind of not gained any strength even when the markets have improved sentiment. Of course, from the last 3 days, we've been seeing some bit of recovery and a pullback move. But we'll have to see if it sustains above 240 levels, then it would be comfortable. But we'll have to give it some time for time-wise correction rather than a price-wise.
Fair enough. Thank you so much, Shivangi and Dharmesh, for speaking with us today. We're closing off markets fairly strong. Nifty off its highs, but nothing to complain because still about nearly 200 points, 183 points up. The intraday of the Nifty should show you the journey it's tracked, and it's gone from strength to strength before cooling off a fair bit. Can't complain about this market at all. The Nifty heat map will show you that IT has dominated the day. Eternal, that we just spoke about, has also dominated the day, continue to do well, as has Adani Ports, Geofin, the other one. A bit more red on the screen as we close off. Cipla, NTPC, HUL, a few of the consumption names and the defensives also getting added. But this is a market that seems to have found its mojo, at least for now.
Yeah, a few stocks stand out, right? Mahindra and Mahindra for a third day in a row, this time 2.8%. It's not doing the hat trick, 3 days of 3% gains, but it's pretty close. A few others actually also doing well. Reliance Industries ending with gains of close to 0.7% up in the green. HDFC Bank is once again in the red though. So it managed to tread water just a tad bit and then it slipped into the red again. But you have State Bank of India, a few other names in the financial space are actually doing pretty well. Axis Bank is doing well. Pull up the broader market indices as well, because this is where the story is beyond, of course, the Nifty IT. The mid-cap index ending with gains of close to 1.8%. The small-cap index as well gaining close to that mark. And take a look at the advanced decline ratio, because this is a very pretty picture. And 3 days in a row of gains, you can't really complain about this.
Yeah, you can't complain. The sectoral heat map should tell you what is working. It's a broad-based kind of a move today. And you've seen Nifty IT, of course, the start of the show, but others also coming through. Realty stocks, again, second or third day in a row is recovering. So our auto, it's metals which have seen a bit of a seesaw, but really not too bad either on this front. Now, the question is what happens next? A couple of things to watch out for. That cabinet briefing at 4 p.m. becomes very important. We'll have to wait and see if there is a fillip. My sense is, Alex, that the government is going to give the right signals on how India can shore itself economically in the middle of an ongoing crisis. Because remember, crude is still at 103. Rupees at 92.6, 92.5. So the markets have actually, I would say, defied the trend. Let's look at the closing rate on the Nifty before we wrap up. So that's one to watch out for. The Fed outcome tomorrow.
Central bank action.
So nothing's going to happen. It's one of Powell's last few policies.
It's going to be a pause.
It's going to be a pause, but what does he say? I think the commentary will become important, and what happens to the bond yields there. The major action, though, continuing to be from government policy push here in India.
And geopolitics. I hope that things get resolved quickly, because ultimately that is it's going to push crude oil prices lower and these markets higher.
But like I said, people seem to have moved on, because the latest statement that I saw from Iran is that we are in no mood for a ceasefire.
Right.
But the pinpricks, or that edge of the seat kind of ball by ball commentary that the markets were looking at seems to have moved on. Let's hope this momentum continues into Thursday trade as well. But from Alexa and the team that put the show together, that's all the time we have. Thank you for watching. Stay tuned. All the action continues on NDTV Profit.
AU करंट अकाउंट के साथ मिलता है फ्री UPI QR ओवरड्राफ्ट फैसिलिटी और एक ही ऐप से बैंक के सारे काम। AU
सोच बदलो और बैंक भी।
Anytime is a good time for multi-asset allocation funds. Invest in equity, fixed income, gold, silver through one fund.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
सोचो आप सुबह उठते हो, अपना ट्रेडिंग ऐप खोलते हो and your portfolio is empty. Scary, right? This is the nightmare of getting hacked or scammed online. And here are some basics that you always need to stick to. हमेशा याद रखिए, digital hygiene is a key factor towards safe and successful investment.
An investor awareness initiative by SEBI.
To understand the Tamil Nadu twist, join me in the midst of people, language and politics. Vanakkam Tamil Nadu, here we come.
In a month that moved markets, shifted diplomacy,
The entire world.
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. Number 1 on YouTube. NDTV Network, streaming India's trust. Leading India's conversations.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions.
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hello and welcome. You're watching Market Express and I'm Himakshi Bahugna. Let's get straight into the show and see how the markets have fared today first. So viewers, the Lal Street has managed to gain for the third straight day, and with Nifty ending, day near 23,800 levels. Sensex has also jumped more than 500 points. If we talk about the advance decline ratio, so that was tilted in the favor of the advances. And yet another day of sectoral picture being in the favor of green. Realty and IT have led the gains among major sectors. Metals and FMCG on the flip side were on the back foot. And Varun Beverages has announced its entry into the dairy space through its arm, the beverage company proprietary, and also acquiring 100% stake in Crickley Dairy. Now, this deal is valued at an enterprise value of 131 crores and also aligns with the company's strategy to diversify its product portfolio. Now, the acquisition also marks Varun Beverages' expansion into the value-added dairy and also juice-based drinks, while also strengthening its push towards the low sugar and also no sugar offerings, which is in line with the evolving consumer preferences. Next stock in focus is Aurobindo Pharma, that is under the regulatory scrutiny after the US FDA classified Eugia Pharma Unit 2 as OAI, which is an official action indicated, its strictest compliance category. And this unit was inspected between November 3 and 14, 2025, following which the FDA issued a form 483 with 9 observations. So under an OAI status, the regulator typically expects further corrective actions, while new product approvals are also usually put on hold. So in some cases, this can escalate to warning letters or even import alerts if issues remain unresolved. Next counter in focus is LG Electronics, that has flagged LPG availability as a key monitorable after a recent plant visit, with the current stock expected to last till early April for refrigerators and also end March for air conditioners. Now, the company is exploring the PNG or PNG backup options, though at significantly higher cost. So LG has said that 90% of the revenues come from in-house manufacturing. Demand for air conditioners is also improving in the select regions in March, with RAC inventories now normalized. So premium products continue to drive the market share gains, while exports, currently 6% of the revenue, are guided to double by FY27. Now let's look at some brokerage note. Nuvama has maintained a buy rating on PG Electroplast while trimming its target price to 780 rupees from 800 rupees. Now the brokerage is expecting a temporary impact on the Q4 results due to disruption in the LPG supply at the Supa facility, though this could be partially offset in Q1 of FY27. Now PG Electroplast is likely to shift to an LPG substitute like oxyacetylene, which is in the near term, and Nuvama has added that the demand environment remains pretty healthy, with the capex plans and also new product launches broadly on track. Next counter in focus is CleanMax, that has reported a strong Q3 performance, posting a steady 13% year-on-year revenue growth and also a sharp improvement in the profitability. Revenue rose nearly 13% to 422 crores, while EBITDA has jumped over 42% to 263 crores. And this is driving the margins up by 1,300 basis points to 62.3%. So net profit has surged more than 11 folds to 27.6 crores. And despite the improved performance, the stock continues to trade below its issue price of 1,053 per share. And this is suggesting valuation comfort alongside operational momentum. Next counter in focus is Urban Company, that is zooming in trade after SBI Mutual Fund picked up a 632 crore stake, adding strong institutional traction to the stock. Now, SBI Mutual Fund has bought 5.74 crore shares at around 110 rupees, even as early investors including ABG Capital, DF International Partners and also Wellington Hardley Harbour have trimmed their holdings. Now, adding to the momentum, JM Financial has initiated coverage with a buy, while management has laid out an ambitious roadmap targeting 1,000 crores in adjusted EBITDA by FY31. Next counter in focus is Seagull India, that has announced that its wholly owned subsidiary, Seagull Infra Projects, has emerged as the lowest bidder for two projects floated by the Punjab Infrastructure Development Board. Now, the financial bids were opened on March 16, 2026, as per the state government's e-procurement portal. Now, the development strengthens Seagull's orders pipeline and also reinforces its presence in the regional infrastructure projects. Next stock that was buzzing away in trade was Axis Bank, and Axis Bank will be infusing 1,500 crores into its non-banking finance subsidiary Axis Finance. So the capital infusion is aimed at strengthening the NBFC's balance sheet and also supporting its lending operations at a time when market volatility and also global disruptions have tightened the funding conditions. And Axis Finance, which operates across retail, SME and also corporate lending segments, is expected to use the additional capital to expand its credit book and also reinforce the capital adequacy ratios. Now, the banks has said that the investment aligns with its long-term growth plans for the NBFC platform. Let's look at some brokerage notes now. CLSA has said that IT sector demand remains intact even as companies roll out new AI models. So the brokerage finds no evidence of increased pricing deflation in the renewable contract so far. So demand commentary continues to hold up in the BFSI, while retail, auto and healthcare remain relatively soft, with some firms flagging minor delays in the client decision making. So on the regional exposure front, CLSA notes that TCS, Infosys, HCL Tech and Wipro derive only low single-digit revenue from the Middle East, limiting the near-term risk from the geopolitical tensions. And Citi has maintained a sell rating on Tech Mahindra with a target price of 1,260 rupees. So while the management continues to focus on delivering better than industry growth and also achieving a 15% EBIT margin in FY27, Citi remains cautious. So the brokerage has said that the current macro environment and also the AI-related trends will be key factors to watch in the near to medium term. And despite strong recent execution, Citi has flagged that valuations at 18 times FY27 earnings remain at a premium to most large cap peers, making sustained outperformance dependent on the clear growth acceleration. In fact, Nomura has maintained a buy rating on Indian hotels while trimming its target price to 800 rupees from 830 rupees. So the brokerage has said that this impact, of the ongoing war on Q4 earnings is likely to be limited. Nomura is also expecting a 13 to 14% EBITDA CAGR between FY26 and FY28, which it finds reasonable, adding that valuations remain attractive, supporting its positive stance on the stock. And Goldman Sachs has maintained a sell rating on Dr. Lal PathLabs with a target price of 1,325 rupees. So the brokerage notes that management remains confident of sustaining 11 to 12% organic revenue growth. However, margins are intentionally capped at 27 to 28%, with incremental profitability planned to be reinvested into the growth initiatives. And Goldman has also highlighted that bundled test packages could eventually account for up to 50% of the revenues, though near-term valuation concerns persist. Keeping with the brokerage notes, viewers, Goldman Sachs has maintained a buy rating on Larsen & Toubro. So while cutting its target price to 4,420 rupees from 4,950, the brokerage has said that the revision factors in near-term uncertainty amid the ongoing conflict, which could lead to temporary revenue and also margin impact. Goldman is expecting some sort of project deferrals over the next few quarters, but stresses that the medium-term investment thesis remains intact, and this is driven by L&T's strong execution and also diversified order book. And keeping with the brokerage notes, we have Jefferies that has maintained a buy rating on Bharti Hexacom while cutting its target to 1,880 rupees from 2,110 rupees. Now, the brokerage cites an attractive risk reward even as the stock has declined on concerns over delays and tariff hikes. Jefferies has reduced its revenue and also EBITDA estimates by 7 to 11%, now factoring in just one 15% tariff hike in December 2026 across FY26 to FY28. So while the inflationary pressures could push the tariff hikes further out, Jefferies is saying that the stock still offers up to 60% of upside in a best case scenario. And Goldman Sachs has warned that the Indian rupee could weaken further, potentially slipping to 95 against the US dollar over the next year. So the brokerage has flagged a widening current account deficit as a key pressure point, even as inflation remains under control for now. Goldman has added that if higher oil prices and also a weaker rupee start feeding into the consumer inflation, the RBI may step in with tighter policy measures. And viewers, next stock in focus is Sarda Energies, that is stepping onto the IPL center stage, becoming the new title sponsor of Rajasthan Royals, replacing Luminous, which previously held the role. So the move gives Sarda prime branding on the Royals jerseys for the upcoming season, linking clean energy with cricket's massive reach. So for Rajasthan Royals, it marks another high-profile brand partnership as the franchise continues to blend sport, innovation, and also purpose. And on the National Stock Exchange of India, has set advisory fees for its upcoming IPO at around 0.65% of the issue size, significantly below the recent market averages. And with the deal expected to raise about $2.5 billion, the total fee pool could be roughly around $16 million, largely shared among 6 lead banks, including Kotak Mahindra Capital, JM Financial, Morgan Stanley, HSBC, Citi, JP Morgan, and with Kotak acting as the left lead. So this move highlights a broader trend in the government-linked transactions where issuers tightly control the cost and banks accept the lower fees for prestige and league table positioning. And because the Union Cabinet is expected to approve the Bhavya Industrial Initiative, which is a major policy move aimed at strengthening India's manufacturing backbone at a time when US-Iran conflict is disrupting the global supply chains. And according to officials, now this proposal has been fast-tracked as India braces for continued volatility in the crude markets as well, shipping routes and also trade logistics. Now, this Bhavya scheme, positioned as a large-scale industrial and capability building program, is part of the government's broader push to secure the domestic production capacity and also reduce the dependence on global supply networks strained by the geopolitical tensions. Further details of the scheme are expected once the cabinet formally clears it. And the centre has issued a fresh set of air traveller guidelines aimed at improving passenger rights during flight delays, cancellations and also boarding issues. Now, the new rules introduce 60 free seats on every domestic flight to ensure that passengers are not forced to pay compulsory seat selection charges. The Aviation Ministry has also tightened the compensation norms and also set clearer obligations on airlines during the long delays. So including the free meals, hotel accommodation and also mandatory rebooking or the refunds. So passengers will be entitled to alternate flights at no extra charge if delays stretch beyond the specified threshold. And the guidelines for the layout rules for denied boarding, baggage delays and also situations involving vulnerable passengers such as the elderly and also the persons with disabilities. In fact, Tata Consultancy Services and global learning major Pearson have signed a multi-year partnership to build and also deploy AI-powered learning solutions. The collaboration will focus on modernizing Pearson's digital learning ecosystem using generative AI, advanced analytics, and also cloud-native technologies. Now, under this agreement, TCS will help Pearson enhance personalized learning, automate content workflows, and also improve the assessment systems across its global markets. Now, this partnership aims to accelerate the product innovation and also reduce time to market for the next generation education tools. And the United Arab Emirates is considering relaxing the tax residency rules for expatriates as the Iran-US-Israel conflict continues to squeeze the Gulf region. And this move comes as authorities assess how to keep the UAE attractive for global talent and also foreign businesses during a period of heightened geopolitical instability. Now, the proposed steps include easing days of stay requirements and also offering greater flexibility to foreign professionals seeking residency status for tax purposes. Now, while no official announcement has been made yet, the UAE is reportedly weighing these measures as part of a broader strategy to really shield its economy from the conflict-driven disruptions affecting trade, aviation, and also regional investment flows. And whereas China has approved the sale of NVIDIA's H200 artificial intelligence chips to multiple Chinese companies, clearing a major regulatory bottleneck for the US semiconductor giant. The approval allows NVIDIA to resume sales of its second most powerful AI chip in a market that once accounted for 13% of its total revenue. NVIDIA CEO Jensen Huang has said that the company has now received licenses from both the US and China, and that several Chinese firms have already placed purchase orders. So NVIDIA had halted H200 production last year due to overlapping regulatory hurdles, but with Beijing's approval, the supply chain is being fired up again. And Apple is redrawing its global supply chain as escalating US-Israel-Iran tensions disrupt the critical Gulf trade routes. And according to reports, the company has begun shifting India-made iPhone shipments away from Dubai, which is a long-standing and heavily used transit hub, and also redirecting them through the alternative locations such as Singapore, Hong Kong, and also Netherlands. So this move marks a significant departure from Apple's traditional logistics routes and is also already rippling through India's electronics manufacturing ecosystem, also impacting major suppliers such as Foxconn's India units, Tata Electronics, and also Dixon Technologies. Now let's look at some national news, viewers. India's energy supply chain just gained a fresh momentum. The Indian-flagged crude tanker Jaglatki has arrived at Adani Port's Mundra facility carrying nearly 81,000 metric tons of crude oil sourced from the UAE. Now, the loaded at Fujairah, the massive vessel spanning over 274 meters highlights the scale at which India is securing overseas energy supplies. Now, the delivery reinforces Mundra's strategic role in handling the critical crude imports and also supporting refinery operations. which is a key pillar in strengthening India's energy security amid a volatile global environment. And from Bengaluru to Hyderabad, several parts of the country have witnessed intense rain, hailstorms and thunderstorms. The Indian Meteorological Department has issued multiple weather alerts across southern and central states, warning of continued instability driven by the active western disturbances and also moisture inflow. So the IMD has placed parts of Karnataka, Telangana, Andhra Pradesh, Tamil Nadu and Maharashtra under the yellow and orange alerts, cautioning about hail, lightning and also strong surface winds and also brief heavy spells. So visuals from Bengaluru and other cities showed hail carpeting the roads and also vehicles, while several districts have reported traffic disruptions and also power cuts. So more rain is expected over the next 24 to 48 hours, the IMD has said. In fact, viewers, Iran's parliament speaker has issued a sharp warning that the Strait of Hormuz will not return to its pre-war status, even if the current conflict eventually de-escalates. And he has said that the waterway, one of the world's most vital energy corridors, will now operate under the new realities shaped by Iran's confrontation with the US and Israel. And in another development, Iran's judiciary reported that an enemy attack struck a judicial facility in Larston County in Fars province, killing and also injuring an unspecified number of judicial staff and also civilians. State media said that the site was targeted in an attack, though it remains unclear whether it was an airstrike or a militant strike by other groups. So the incident underscores rapidly escalating tensions across Iran's south, even as regional powers brace for prolonged instability. And Iran will today hold funerals in Tehran for Ali Larijani, the country's slain security chief, and also the head of a besieged paramilitary force, after both were reportedly killed in Israeli strikes. And Tehran has vowed decisive and also regrettable revenge, firing a wave of cluster warheads towards Israel and also in the hours following their deaths. So the missile barrage killed 2 people near Tel Aviv, while the Gulf nations intercepted the rockets and also drones aimed at the regional targets. So including US military bases, the report notes that Larijani is the highest-ranking Iranian figure killed since the US-Israel offensive on Iran began on February 28, the same attack that killed Supreme Leader Ayatollah Ali Khamenei. So Iranian officials say that the global repercussions of the war have only just begun, warning that the conflict will hit all major economies. Foreign Minister Bazaar has said that the US and Israel misunderstand Iran's system, stressing that the Islamic Republic is institution-driven, resilient and not dependent on any single individual. And the United States has deployed 5,000-pound bunker buster munitions to hit Iranian missile sites positioned around the Strait of Hormuz, one of the world's most sensitive maritime choke points. And the precision weapons designed, to penetrate deeply fortified or underground military positions were used as part of targeted strikes aimed at degrading Iran's launch-capable assets that have been threatening, the regional and also global shipping. Now, these massive bombs are engineered to punch through the hardened structures before detonating, making them especially effective against missiles, silos, and also, reinforce the command and also control sites. And in a striking shift in immigration strategy, the US Department of Homeland Security has rolled out a program offering free flight tickets and also $2,600 cash incentive to undocumented migrants who opt to leave voluntarily. And the initiative is designed to lower the deportation costs and also ease the overcrowding in the detention centers. So catching the attention online, the campaign even features the Taj Mahal inviting migrants, including Indian nationals, to fly to India for free with an exit bonus. So the move has, underscored Washington's push to combine stricter enforcement with voluntary exit incentives, reshaping how the US manages the migration pressures. And North Korean leader Kim Jong-un's ruling Workers' Party has claimed another near-unanimous victory in the country's latest parliamentary election, securing 99.93% approval, according to state media. Now, the results were announced by the Korean Central News Agency, which also reported a voter turnout of 99.99%, and the vote was held to elect 687 deputies to the Supreme People's Assembly. North Korea's rubber stamp legislature, as in the previous elections, voters were presented with, a single candidate in each constituency and also were asked to either approve or reject them. And it's been a strong night for Europe's big clubs in the Champions League. Arsenal have seen off the Leverkusen with a solid, performance, while the PSG and Real Madrid have cruised to comfortable wins. And the results, underline the dominance of the top sides as the competition moves into a crucial phase. Momentum is clearly building for the favourites. And on to some more sports news. The T20 World Cup 2026 will be remembered as much for controversy as for cricket. So while India has clinched the title, beating New Zealand in the final, the build-up was dominated by a major dispute involving Bangladesh. Now, the flashpoint came after pacer Mustafizur Rahman's IPL exit, following which the Bangladesh Cricket Board demanded its World Cup matches be shifted out of India. So with the ICC rejecting those conditions, Bangladesh was ultimately removed from the tournament, casting a long shadow over a World Cup that, ended in triumph for India. And in a stunning development, Senegal have been stripped of their AFCON title, with the ruling now favouring Morocco. The decision is also, sending shockwaves across African football, raising serious questions over the tournament's outcome. And Morocco are set to be recognised as champions, while officials are yet to detail the full reasoning behind the verdict. And viewers, all eyes are on Dhurandhar 2, the revenge, hitting theatres on March 19, and what's shaping up to be a historic moment for the Indian box office. Releasing across 8,000 plus screens, the film is expected to open at 80 to 100 crore domestically on day one, with advanced bookings already crossing 120 to 130 crores globally, and also paid previews setting new records. Analysts are seeing this as a lifetime domestic collections of 900 to 1,000 crores, with global estimates stretching to about 2,000 to 3,000 crore rupees. If numbers hold, the franchise could surpass Bahubali and Pushpa, becoming India's highest grossing franchise ever, while offering a strong near-term boost for PVR Inox. And with that, viewers, it's a wrap on this edition of Market Express. Stay tuned to NDTV Profit. This is Himakshi Bahugna.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sarda Energy on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
To understand the Tamil Nadu twist, join me in the midst of people, language and politics. Vanakkam Tamil Nadu, here we come.
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7.
Market ends higher for third straight day, with Nifty ending above 23,700, while Sensex gaining over 600 points. All sectors barring Nifty, FMCG and metals finish in the green. Rupee though closes near record low after breaching 92.5 versus the dollar. Oil trades mixed as rising crude inventories offset fresh supply fears. Brent trades at $103 per barrel, while NYMEX trades 1.5% lower. Meanwhile, Indian vessel Jaglarki, carrying over 80,000 metric tons of crude oil, reaches Gujarat. It's day 19 of the Middle East war. UAE official says it may join international efforts led by the United States to ensure the safety and security of the Strait of Hormuz, but notes that no formal plan has been agreed upon yet. Meanwhile, reports suggest Israel strikes hit civilians and judicial staff in Iran. Middle East war takes a toll on raw materials for few industries. Amines industry is set to be hit by ammonia shortage as alkyl amines halts production of amine product, while Balaji Amines reports plant disruptions. Pharma and chemical industries will also see some impact. Government mandates airlines to allocate maximum 60% of seats on a flight free of cost. Directs airlines to make sure passengers travelling on the same PNR are seated together. SpiceJet falls over 1% and Indigo erases morning losses. IDBI bank sale in progress. Top government officials are set to meet next week to weigh options after receiving tepid bids. Sources also indicate that the entire process may have to be restarted if rebidding is chosen.
चौथा बाराबंकी से बहराइच, इसका एक्सेस कंट्रोल्ड 4 लेन हाईवे 6,969 करोड़ रुपीस के इन्वेस्टमेंट से अप्रूव हुआ। और स्मॉल हाइड्रो पावर रन ऑफ द रिवर स्मॉल हाइड्रो पावर डेवलपमेंट स्कीम आज अप्रूव हुई 2,585 करोड़ रुपीस से। टोटल 54,926 करोड़ रुपीस के ये महत्वपूर्ण फैसले आज अप्रूव हुए। सबसे पहला भारत औद्योगिक विकास योजना की मैन्युफैक्चरिंग देश में बहुत तेजी से बढ़ रही है और भारत एक प्रिफर्ड डेस्टिनेशन मैन्युफैक्चरिंग के लिए बन रहा है कई कारणों से, जिसमें प्रथम कारण है पॉलिसी की सर्टेनिटी, दूसरा है टैलेंट, तीसरा है डिजाइन की जो कैपेबिलिटी है भारत की, और चौथा है माननीय प्रधानमंत्री जी ने सतत प्रयास किए विभिन्न तरीकों से, चाहे इलेक्ट्रॉनिक्स मैन्युफैक्चरिंग हो, चाहे ईवी मैन्युफैक्चरिंग हो, चाहे टेक्निकल टेक्सटाइल्स हो, सभी के लिए जो प्रधानमंत्री जी ने लगातार प्रयास किए, अब उसको एक और लेवल पे पहुंचाने के लिए एक इन्वेस्टमेंट रेडी प्लग एंड प्ले इंडस्ट्रियल पार्क्स का स्कीम बनी है, जिसके तहत 100 शहरों के पास में 100 ऐसे शहर जहां पर इंडस्ट्रियल इकोसिस्टम बनता है या बन सकता है, वहां पर इन्वेस्टमेंट रेडी प्लग एंड प्ले इंडस्ट्रियल पार्क्स बनाए जाएंगे। करीब भारत सरकार की तरफ से सपोर्ट होगा 1 करोड़ पर एकड़ और मिनिमम 100 एकर्स का रिक्वायरमेंट इसमें एलिजिबिलिटी के लिए चाहिएगा। हालांकि इसको नॉर्थ ईस्ट और हिली एरियाज के लिए 25 एकर्स ही रखा जाएगा। 6 वर्षों का ये प्रोग्राम है, 6 इयर्स का प्रोग्राम है और इसमें राज्य सरकारों के साथ मिलकर और सेंट्रल पीएसयूज के साथ मिलकर डेवलप करेंगे। जो नोडल एजेंसी होगी वो एनआईसीडीसी राज्य सरकारों के साथ या सेंट्रल पीएसयूज के साथ एसपीवी बनाएगी, वो एसपीवी फिर आगे डेवलप करेगा। इवैल्यूएशन चैलेंज मोड में रहेगा और जो पीएम गति शक्ति के प्रिंसिपल्स हैं, यानी कि इंफ्रास्ट्रक्चर को एक वेल प्लान्ड वे में आगे ले जाने का जो पीएम गति शक्ति पोर्टल है, जिसमें सभी इंफ्रा से रिलेटेड मैटर्स का जियो स्पेशियल मैपिंग है, उसको ध्यान में रखते हुए बनाया जाएगा। एज फार एज पॉसिबल यूटिलिटी कॉरिडोर्स अंडरग्राउंड बनेंगे, जिससे कि भविष्य की तैयारी करनी है। ये ग्रीन एनर्जी और स्पेशल रिफॉर्म्स एरिया के लिए वो ध्यान दिए जाएंगे। टोटल 34,000 एकर्स ऑफ इन्वेस्टमेंट रेडी प्लग एंड प्ले इंडस्ट्रियल पार्क्स का इसमें टोटल प्लानिंग है और इसका बहुत लाभ होगा, खासकर जो युवाओं को रोजगार के अवसर इससे मिलेंगे। मैन्युफैक्चरिंग सेक्टर में, वो देश के लिए बहुत बड़ा एक आने वाले समय में इसका लाभप्रद होगा। आज का दूसरा फैसला है 2023-24 का जो कॉटन सीजन था, जिसमें कॉटन के प्राइसेस अचानक कम हो गए थे, तब तत्कालीन समय में सीसीआई के माध्यम से किसानों को बहुत बड़ी मदद दी गई थी और बहुत ही प्रोएक्टिव वे में मदद दी गई थी। करीब 7.25 लाख करोड़, 7,25,000 करोड़ किसानों को उस वक्त मदद हुई थी और 325 लाख बेल जो कॉटन प्रोड्यूस हुए थे, उसमें करीब 33 लाख बेल्स कॉटन के खरीदे गए थे, जिससे कि प्राइस स्टेबल हो पाया, वरना प्राइस कम होता, किसानों को नुकसान होता। इसीलिए उस समय के इस फैसले को आज उसमें जो सीसीआई का, कॉटन कॉर्पोरेशन ऑफ इंडिया का जो एक्सपेंडिचर आया था, उस एक्सपेंडिचर को आज रीइंबर्स करने का फैसला लिया गया कैबिनेट में। किसानों को टोटल इससे सपोर्ट मिला 11,712 करोड़ का और सीसीआई को रीइंबर्समेंट मिला 1,118 करोड़ रुपीस का। आज का तीसरा बड़ा फैसला है उत्तर प्रदेश में बाराबंकी से बहराइच। ये बहुत ही एक इम्पॉर्टेंट स्ट्रेच है। अगर आप नक्शे पे देखें, लखनऊ से नॉर्थ की तरफ, नेपाल की तरफ जाते हैं तो लखनऊ, बाराबांकी, जारवाल, बहराइच, ये वाला जो सेक्शन है, ये हाईली कंजेस्टेड सेक्शन है। इसके 4 लेनिंग का और एक्सप्रेस वे को, मतलब एक्सेस कंट्रोल एक्सप्रेस वे बनाने का काम इस प्रोजेक्ट में सैंक्शन हुआ है। अब तो उत्तर प्रदेश में गंगा एक्सप्रेसवे, पूर्वांचल एक्सप्रेसवे, यमुना एक्सप्रेसवे की धरती बन चुका है। तो इसमें एक और एक्सप्रेसवे इससे जुड़ेगा, बाराबंकी से बहराइच। 101 किलोमीटर का प्रोजेक्ट है, 6,969 करोड़ रुपीस का, और एक इस पे मेगा ब्रिज बनेगा 6 लेन का घाघरा रिवर पर। टोटल इसके आगे भी बहराइच से रूपाडीही, इसके आगे बहराइच से रूपाडीही, ये बहराइच से ऊपर रूपाडीही, उसका डीपीआर भी आगे बन रहा है। यानी नेपाल बॉर्डर तक पहुंचने की पूरी व्यवस्था 4 लेन एक्सेस कंट्रोल हाईवे के माध्यम से। ये कंप्लीट जो बाराबंकी, बहराइच, गोंडा, बलरामपुर और नेपाल की तरफ जाने वाला, इस रास्ते में, इस हाईवे से जो ट्रैवल टाइम है 3 आवर्स, वो 1 आवर रह जाएगा। बहुत ही अच्छा इसका बेनिफिट मिलेगा। श्रावस्ती एयरपोर्ट और बुद्धिज्म से रिलेटेड बहुत सारे यहाँ पे टूरिस्ट और जो श्रद्धा के स्थल हैं, वहाँ पे कनेक्टिविटी इस प्रोजेक्ट से बढ़ेगी। और बहुत अच्छी इंडस्ट्रीज है उधर, एग्रो, शुगर, टेक्सटाइल, लॉजिस्टिक्स पार्क्स हैं, फार्मास्यूटिकल्स आ रहा है, और बहुत सारे एक्सपोर्ट ओरिएंटेड इंडस्ट्रीज भी इस एरिया में आ रही है पूर्वांचल में। तो इसका बेनिफिट, इस हाईवे का बेनिफिट मिलेगा। एक आज एनवायरनमेंट के पॉइंट ऑफ व्यू से बहुत ही महत्वपूर्ण फैसला लिया गया है, वो है स्मॉल हाइड्रो पावर डेवलपमेंट स्कीम। ये रन ऑफ द रिवर, यानी बिना बांध बनाए, बिना बहुत बड़ा डिस्प्लेसमेंट किए, एनवायरमेंटल इश्यूज जो आते हैं उनके बिना रन ऑफ द रिवर, रिवर के फ्लो के साथ ही किस तरह से पावर जनरेट किया जाए, उस कॉन्सेप्ट को लेके ये प्रोजेक्ट किया गया है। और इसमें देश भर में करीब 7,000 साइट्स आइडेंटिफाई हुई हैं, जहां पर रन ऑफ द रिवर 21,000 कैपेसिटी, 21,000 मेगावाट कैपेसिटी क्रिएट की जा सकती है स्मॉल हाइड्रो पावर से। तो इसको ध्यान में रखते हुए, और ये एनवायरनमेंट फ्रेंडली है और एक स्मॉल लोकल एरिया में, और कॉस्ट भी बहुत कम आती है, 4.5 से 5.5 रुपए पर यूनिट कॉस्ट इसमें पावर जनरेशन की आती है। कैपिटल कॉस्ट भी कम है और जो प्रोजेक्ट को लगाने का समय है वो भी कम है। तो इस
Viewers, that was INB Minister Ashwini Vaishnav briefing all of us about some key important projects that have been taken. Projects worth 55,000 crore rupees have been announced, and one very important one that we also briefed you about was the Bhavya project, which is a central scheme under which about 100 industrial parks will be made. But a lot more we will be covering for you on that front. But let's move on and check how the markets fare today. Markets extended its rally for the third straight day, with Nifty ending above 23,700, while Sensex settled more than 600 points in the green. So positive move. Broader indices outperformed the benchmarks, with Infosys contributing the most to Nifty's gains. All sectors, barring metals and FMCG, closed higher, with Nifty Media as a top gainer. In fact, let's go across to my colleague Varsha for a wrap of today's market action. Varsha.
So it's